critique. Ah, sorry guys, just the usual technical issues.
How about we get this show on the road?
Sounds like a plan.
Let's, but I think it's time that we get back to what we do best. Don't you think? All right. Good morning, everyone. After sitting in front of a computer for 1.5 years with endless Zoom calls, moderating digital events, dogs barking, kids screaming, and everything else that has come with this pandemic, I must admit that standing on a stage in front of a real live audience is absolutely terrifying today. And fair enough that the pandemic has enabled global teams to come together and work more efficiently. But isn't it amazing that we can all be here together for the first in-person major post-pandemic event in Malta? Awesome. Going back to the fear of speaking, we are hosting 101 speakers during these 2 days. And the experience for most of these speakers are really terrifying. I definitely did not get enough sleep yesterday in anticipation for this moment, but it's not only me. Some of the speakers today have prepared themselves for months for this very moment. And going back to 2019, during the inaugural iGaming NEXT, I remember every single speaker being very, very nervous before going on this stage. And as an audience, we have this notion that speakers always look confident when they go on stage. But really, all speakers are nervous, questioning their abilities, and so on. And the same thing goes for the audience. There is a lot of talented people in this industry who have great things to say, but lack the confidence to speak. And that tends to lead to a vicious circle at iGaming conferences where you see the same speakers speaking about the same topics. Not very inspiring, but it doesn't have to be that way. And this is what we envision iGaming NEXT to change. We want to give a platform for the iGaming industry's professionals to challenge themselves. A platform for the most talented individuals of this industry to inspire. And a platform for the most ambitious professionals to grow. Now, I know that there is a lot of talent in this industry. Young and old, men and women, who never gets a chance to speak. And this is why we call this conference Disrupting the Status Quo. iGaming NEXT is your platform, and we want to encourage talent to take the plunge and share their wisdom with the rest of the industry to the benefit of all of us. So with that, I'd like to welcome each and every one of you to iGaming NEXT 2021 Valletta Disrupting the Status Quo. We have 2 spectacular days ahead of us, filled with great content and great networking opportunities. And I want to thank all our partners, speakers, and staff for making this event possible. It has been one hell of a ride since the 771 days passed since the last iGaming NEXT, with the pandemic postponing the 2020 version and even putting the 2021 version in danger. But now, here we are, finally back together in this historical building, the Mediterranean Conference Center. And did you know, by the way, the Mediterranean Conference Center was built as a hospital in the 16th century and served as one of the world's leading hospitals for hundreds of years. It has hosted world leaders like Queen Elizabeth II and the Canadian Prime Minister, Justin Trudeau. And I'd like to encourage you guys, before you leave today, to visit the museum, which is located just one floor below where we're standing today. And in my very own Oprah moment, we are giving these tickets to you guys complimentary today. Thank you. Also, don't forget to enjoy the sunset at the after-show drinks on the MCC rooftop, on the rooftop here today, starting from 5 p.m., both today and tomorrow. And finally, sponsored by Ames, all delegates of iGaming NEXT 2021 is offered a free lunch throughout both of the days. You can find the lunch area at the end of the exhibition hall, just where you entered. And thank you again, Ames, for providing these lunches for us today. And with that, let's get iGaming NEXT 2021 Disrupting the Status Quo started. I'd like to please welcome our host of today, the forever charming Irishman, Oisin Lunny, and have a great, fantastic conference. Thank you, guys.
Yes, mate. Brilliant. Thank you, thank you. Oh my God, how exciting to be here. Exactly like Pierre said, we've been doing Zoom calls, we've been doing webinars for so many months, and here we are in person. Isn't it magnificent? We've got 1,500 seats in here, filling up as people get over their hangovers and get a coffee and come in from their morning meetings. And we have a sensational lineup lined up for you over these next 2 days. My name is Oisin Lunny, as Pierre very kindly introduced me. I'm a podcast host, an event MC, I do webinars, all that kind of thing. An occasional journalist, and I've worked on the supplier side of the iGaming industry on and off for the best part of 15 years. And it's an industry I love. More than most industries, I think it's built on people, relationships, trust, hard work, innovative technology, superb products, and user experience. This is really an industry that leads on the customer experience, an industry of innovators. Now, but we're here to explore how we can all thrive, how we can innovate, how we can move forward, how we can all win. And these are exponential times. So we need to disrupt or be disrupted, transform or be transformed, evolve or get left behind. But how do you make the right choices? How do you back the right technological horse? How do you stack the strategy deck in your favor? Well, ladies and gentlemen, I'm happy to say you've done it already by choosing to be here over the next 2 days at iGaming NEXT Valletta. And for that, I congratulate you. And I think you should give yourself a warm round of applause for being here, because here we are, we're going to change the industry, and you're all absolutely going to make it happen. So it's brilliant to see you all here. Thank you. Right, over the next 2 days, we have truly a who's who of the industry. We have leaders, pioneers, mavericks, innovators, and transformative thinkers who are not afraid to disrupt the status quo. Today alone, we're going to explore topics like disruption, investment, regulation, future technology, diversity, sustainability, player experience, tax bombs, and how to avoid them. We're also going to explore engagement, liberalizing innovation, mergers and acquisitions, leadership, next generation CEOs, and next level entertainment. How's that for a word cloud? Okay, so I have a few housekeeping announcements before we welcome our first rockstar moderator on stage. We have a treat lined up for you. So, housekeeping announcements, set your phones to vibrate. I'm sure your ringtone is gorgeous, but it's best kept silent while we have such esteemed speakers on stage. Number 2, as Pierre mentioned, there is such a thing as a free lunch, hallelujah, and that is thanks to the good people at Ames. We really appreciate it. The lunch is running from around 10:30 to 3 o'clock, so fill your boots. Also, your badges are a mine of useful information. You've got the Wi-Fi details on your badge, and also this handy QR code. Just point your phone at the QR code to get the latest agenda on your phone. Now, of course, it's a fast-moving industry, and we're also in COVID times, so we've had to jiggle things around a bit on our agenda. So our opening keynote from Todd is actually going to happen a bit later today. That's going to be at 3:40, and it's going to be worth waiting for. I absolutely guarantee you. I get goosebumps just thinking about it. Okay, what else? Yes, we welcome interaction. This is supposed to be an interactive event. We want your input, your questions. We want you to ask the cutting edge comments to our speakers on stage. But we're in a time of sanitization and COVID and being very, very clear on the hygiene requirements. So there's no microphones. There's nobody running around with a microphone to take your question. We have instead this fantastic thing, a virtual microphone called Slido. And how Slido works is, I believe we have a QR code to our wonderful staff on the AV desk who have a huge amount of controls there. We have a QR code which will be shown on this screen. Oh, wonderful. There you go. Thank you so much. So basically what you do, if you want to ask any question at any time today, scan this QR code and feel free to scan it now and just bookmark it because this is your virtual microphone. Once you scan this, you can submit your question on your phone, on your iPad. I'll have an iPad on stage, it'll pop up, and then I'll scroll through, I'll kind of make sure we kind of get to the good questions, and that way you can ask your questions to our amazing rockstar speakers on stage. Okay, so we've got Slido, we've got the Wi-Fi, we've got the free lunch, and set your phones to vibrate, and do not miss our keynote from Todd at 3:40 today. It's going to be absolutely superb. Another final announcement, iGaming Idol is sold out. Apologies if you didn't get a ticket already, but it's completely sold out, and if you have got a ticket, wonderful, I'll see you there. We kick off at 7. Okay, now onto our opening panel. We have, to moderate, a genuine rock star of the industry. He is himself an iGaming icon. He's an industry maverick and pioneer and a genuine legend. And he taught me everything that I need to know about gents hairstyling, I swear to God. One swish, Vegas-proof hair. It's a real thing. This guy is the master. Ladies and gentlemen, please give a huge, warm iGaming Next Valletta welcome to the founder of iGaming Business, Mr. Michael Caselli. Hey folks, do you know what? I actually announced Michael a bit too soon. I forgot about the whole chairs thing, so my fault there. And listen, we haven't done events in 2 years? So I would love you to give the loudest, most raucous, suitably rockstar welcome to the moderator of our opening panel. One more time, even better this time, even louder. Please welcome to the stage, Michael Caselli! Awesome, dude.
Hello. I love being back in Malta, and this is an amazing venue to have a show. My name, as you have just heard, is Michael Caselli. I've been in the industry for, about 24 years now, and it's my great pleasure to be moderating probably the most exciting, I think, panel of this entire show. We're talking about bulls and bears. We're talking about investment. We're talking about M&A. We're talking about capital markets. And joining me to do this are three guys with three very different opinions on this subject, which is going to make a pretty interesting firework explosion type of a panel here. I've got Julian, the co-founder of RB Capital. He's involved in investments, M&A, and he's got a brokerage that has taken companies from zero to hero, essentially. We've got Richard Carter, who you probably all know, CEO of Bragg Gaming, and he's had an M&A-filled career with several very, very successful exits and mergers and acquisitions, including, and is now providing Bragg Gaming as a content partner for the industry. We've got Tim Heath. He's a general partner of YOLO Investments. Now, you might not have heard of YOLO. They're kind of new. But YOLO is a VC that's investing in the fund, and they're looking at Series A in startup-type companies. So we've got three very different points of view coming in and talking about this market. M&A is nothing new in this industry. In fact, when I was asked to go on this panel, I started to think about my own career in the industry and kind of the acquisitions and public markets that we've worked in. And I think it started, for me, with my first sale to a PLC through Bluff Magazine being sold to Churchill Downs. So that was the first time we had interacted with a big public, highly regulated company in this industry. And it was interesting to see how they operated and how they were slightly different from what we did as a very entrepreneurial startup that grew, successfully, luckily enough, during the poker boom to go be acquired. Then I was approached by a PLC listed in London called Electric Word. And through that, we launched our magazine's iGaming business and some of the conferences that you've probably attended. And then worked as a partnership with myself and the PLC in, again, a very regulated environment. And eventually, we sold that PLC, or that business was acquired by Clarion Gaming, where I now work as the chairman of the gaming division. So M&A is nothing new, but it is probably the most exciting time. Why is it exciting? Because the numbers are huge, because the capital markets globally are interested, because it's not just London and Stockholm that are interested in gaming companies, it's now New York City, and gaming is now global, worldwide, recognized as an investment that has years and years of return. So to talk about that today, I'd like to introduce my panel and bring them on the stage. Come up, guys. A round of applause. So I promised fireworks.
Okay.
And I know we're going to deliver. So let me bring up my notes, because we've had a number of conversations, and I know where each individual on this panel sits as far as their opinions in this space go. So I'm going to start out with a fairly non-controversial statement, and just say we're in the midst of a great bull market in this industry. Would everyone on the panel concur, and do you want to add something about that?
Yeah, I think it's clear from the sort of M&A that's going on, the valuation expansion that we've seen, sort of, I guess, as soon as the US opened up, we started to see a lot more interest from US investors, and that started to lead to this multiple expansion. And then recently, you've seen this, obviously, acceleration in M&A, specifically a lot of US focus. I'm sure everyone saw the Aristocrat Playtech acquisition over the last few days, which is a bit of a game changer. They were one of the anomalies in terms of the industry that didn't have their content online, Aristocrat, and they've obviously are the top performing content in the US and globally in most markets. So that's obviously driving this significant expansion in multiples. So yeah, I think it's undoubtedly we're in a bull market, no doubt about it, at the moment. Julian?
I concur. I think it's a great time to be in the M&A space, especially if you're a broker. Especially if you get remunerated on valuations, right? That's what brokerages should do. I think the US has really helped, particularly to drive up valuations. But then at the same time, there's some worrying signals, right, which could, based on other industries, indicate that we might be heading towards consolidation in the not too distant future. There's a few concerns, right? I think the Aristocrat Playtech deal was actually quite good. I think 11.4x EBITDA was actually a really good transaction. But then when you look at transactions like Penn's acquisition of the Score, right? I mean, a $2 billion based on what, right? Based on expected revenues of 50 million next year. So we're all talking about forward projections, and historically that tends to show you that you're in a bubble which is rapidly accelerating. So I'm enjoying the M&A scene right now, but I am concerned around what lies around the corner, if that makes sense.
So cautiously optimistic for now.
Yep.
And Tim?
Yeah, I think for me it's all this SPAC business, which I don't quite understand. I don't think anyone really understands what's going on with it, that it's like, here's a vehicle we're going to use, we're going to put something in it, we're going to raise money, and good luck. Now, this is good for a market to be in a bull market, no doubt about it, but it will come to an end and it will crash hard. And you're right, Julian, the multiples they're too inflated. I've seen this in the crypto world as well, and it's great while it's happening, and there's nearly FOMO for all European slots or platforms and whatnot, trying to put their eyes on the American market, but not really realising they need to work in the American market, which is not the easiest market to work in, given the compliance and regulations. So certainly enjoy it while you can, but remember, I wouldn't just take equity in the new venture. I would take some cash off the table if you're a European company going to America.
So again, a little bit more conservative outlook.
Hedge.
I think we've got to sort of take a step back and look at the ecosystem. And in the US, it's not just about what's the TAM, but you've got all this much bigger ecosystem. You've got sports, you've got media that are all playing its part. So that when you're looking at these valuations, you've got to be a little bit careful. Also, if you look at US, how they value technology companies versus European, it's always at a significant premium. You can see that with a lot of the fintech listings are going to the US because they seem to have a better appreciation of looking longer term. Then if you actually look at the TAMs, if you believe them, I'm a bit skeptical on them, but if you look at sort of the US market at maturity, 30-odd billion sports betting market size, probably 40 billion if iGaming becomes fully legalized. So you're looking at a $70 billion, $80 billion TAM. And so when you're looking at valuations today, and you're looking at that market opportunity, you know, if it depends obviously what market share you assume, but you actually can make quite a credible sort of valuation case for it. And that is why, when I obviously speak to investors a lot on the subject in the US market, and that's how they're thinking about this. They're looking at what are the disruptors, looking at technology, which is obviously very important, and that's one of the drivers of M&A at the moment, and then looking at what can these companies, what market shares can they attain, and then what's going to be their medium-term profitability. And obviously within that analysis, there's a hell of a lot of unknowns. And so when you come to the valuation, and I think you're beginning to sort of, you started to see that this year, where you had this big spike in valuations in sort of January, February, March, where everybody was buying everything because of the fear of missing out. The market effectively crashed. You saw all of the share prices fall by 50, 60%. And now you've had this new sort of catalyst, which is the M&A, which is now sort of getting investors. And I think one of the concerns I would have if I was an investor is actually what we've had over the last 24 months is this new markets regulating. Once that starts to slow down, and then the market shares that people are assuming don't start to come through, because obviously, as we all know, it's a lot more competitive and it'll move around, then I think you might start seeing a little bit of pressure on the valuations.
True, but let's consider 3 mergers. Playtech Aristocrat, SBTech DraftKings, Bellies and Gamesys. Most of these operations have skeletons in the cupboard because that's what the industry was for so many years. And it's not grey is not a bad thing, just to be very clear. No. But coming to America, it needs to be crystal white. Yeah. Now, how do you do that, and then at this valuation come in there, and then all of a sudden things are discovered or reported, i.e. the DraftKings and SBTech, the market doesn't understand it. We, as an industry, understand it and appreciate it, and most UK PLCs have an Asian arm, but just run by someone else. So it's not unknown, but in the American market, which is very sensitive to price and to skeletons, that will move a share price, and I believe bring it into the bull market.
No, I think that's really, really interesting sort of area of what's going on, because obviously when you get a 300-page prospectus, most of the analysts are not reading through those 300-page documents where it clearly sets out the regulatory risks. And I think when you started to get this sort of SPAC thing happening, the thing with a SPAC, if everybody, just to be clear on a SPAC, you effectively, the SPAC acquires the company, and there's a lot less due diligence done on that process, where if you go through a normal IPO process, you have to go and see, let's say, 100 investors, and they will give you feedback and determine the price, where a SPAC effectively sets the price, and therefore they don't do you could argue, they don't do the requisite level of due diligence, because a SPAC timeline is about 2 years, and they need to do a deal to get paid. But I think the interesting thing on grey markets or on Asia in particular is that I think over the last 3 or 4 months, the analysts in the US and investors are now getting their head around this. They were blindsided. They didn't really understand it. This grey markets, what's grey? Is it Finland, Norway? Is China grey? That type of thing. But I think now they're definitely getting a bit pickier. They're asking the right questions. And as part of our overall revenue mix, I think, if you have a portion of grey revenue, it's okay. I mean, I can give you my own personal experience of dealing with multiple regulators in the US, sat in front of them when I was going through licensing with SBTech. I won't repeat the expletives, but they didn't care about Asia. As far as they were concerned, they don't care. But the analysts and the investors are now beginning to care about it, because people are talking about it. So there's a healthy debate. But I think what you're finding is there's beginning to sort of just put it as part of the risk spectrum. So I think it will gradually get accepted. But if you're aristocrat and you've got 300 licenses around the world and you're licensed in Nevada in certain markets, then I think it's very difficult sitting in front of that type of regulator and justifying potentially China or those other markets. So I think there'll be a zero tolerance, and that will slightly clean it up as well. But I do think there's shades of grey when it comes to Asia. So yeah, I think it's playing its way out, that sort of whole Asian story and grey markets in the US. The analysts are getting a much better understanding, so are investors. So it'll be quite interesting to see that dynamic play out, actually. But it's definitely a bit better understood now. I agree with you. It was very poorly understood previously.
Let me interject for a second. We're talking a lot about SPACs. For those of you who might not know, they're a fairly new phenomenon in the finance world, becoming very popular in the last couple of years. There are essentially they're shell PLC companies designed to acquire something that's going to go into that shell, giving the company that's acquired an instant listing on a public exchange. There are 20 SPACs, maybe a few more actually than 20 SPACs that are currently interested in iGaming, and at least $6 billion has been raised by SPACs for gaming in 2021 alone. So pretty important new vehicle to get a listing. Skeletons in the closet, interesting topic. Of course, when you're moving into the US, you're going to go to the US with a US partner who's heavily regulated, who's going to make sure that whoever their partner is whiter than white, because gaming regulation is just as strict in most states as is financial regulation. But at the same time, I think you're seeing a lot of the PLCs in Europe, whether they're on the Irish, London, or Stockholm markets, already sanitized over the past few years. Which leads me to ask this question. Do you think the skeletons in the closet problem is something that's largely been solved by European companies, or is it something that's largely been, I guess, ignored up until now because they didn't have the impetus to go and completely sanitize?
I think we're still going to I think we're still going to see issues with European-based stocks with skeletons in the closet because they can come out of anywhere, right? I mean, a year ago, 2 years ago, who thought that ESG would be an issue, right? Now it is. And that's why all the Swedish stocks, in large extent, have taken a tumble over this year, right? If it's not ESG, it's going to be some sort of pre-regulated traffic. Let's call it pre-regulated traffic for now. We're seeing all the Q3 earnings reports coming out now, and everyone's taking a haircut, right, on Germany, on the Netherlands, right? Who knows what's going to happen over the next few years? So I actually think what the US is doing is taking a leaf from European operators as they continue to learn. The advantage there, right, is an M&A advantage. They see European stocks as being depressed and potentially then be able to make a punt and acquire which assets potentially on tech. I agree with Richard on this. I think the US loves tech because they love full stacks. And tech is valued significantly higher in the US in terms of multiples than it is this side of the Atlantic. So I think it's going to continue. I think we'll continue to see more skeletons in the closet, whether it's lack of due diligence, like we saw on the SB Tech deal, or effectively pre-regulation, or wherever you might get some whistleblower, right, as we're seeing with Facebook right now, just talking about ethical practices. I think it's just going to continue. I think it's a natural state of economy.
Well, we're also seeing a lot of retail interest in the space. So retail investors are now involved in iGaming much more than they had been in the past. And I think there's much more knowledge from US retail investors about iGaming. And of course, a lot more institutions and institutional investors getting involved in the space. We actually even have an ETF, Roundhill Investments, which is listed on the New York Stock Exchange. That's now created an index essentially for a number of gaming companies. Do you think that the retail investor is as sensitive to these skeletons in the closet, or do you think that that's not something that the American investor is, on a whole, mostly focused on? Because it feels to me like American investors are just very bullish on anything iGaming.
Well, they check Reddit and Robinhood and follow that.
Yeah.
At the end of the day, retail investors, they're not at the forefront of making a market move. They're just trying to make money. If it's a hot market, they'll want to jump in there. If it goes down, they'll jump out. I think most American retail investors are happy that they can now play and gamble legally in their country. at the end of the day. That's the biggest exciting thing for them.
I agree with that. I also think, though, the platforming thing is becoming something of a trend, right? People want to have a voice. People want to talk about what their stocks are. And if there's a platform that allows you to do that, then retail investors will talk, right? We saw what Simply Wall Street, right, on Reddit did earlier this year, right? As long as there's this momentum effect, which then leads to FOMO, I actually think the retail investors will get involved.
I think, well, if you're running an IR strategy of any firm, I think you've got to definitely have and put resources behind looking at retail investors. Because on these sort of chat rooms and things like that, they can have quite a detrimental sort of impact on your sort of, the sentiment around the company. So it's definitely an area that you need to focus on. But in terms of the volume, it's still institutional investors are still like 95% of the volume. So that's what moves stock prices.
Have you seen any investor relations teams actively looking after that retail investor market? I feel like the retail investor market is more fueled by the hype and the knowledge that iGaming is coming to your state, or that sports betting is going to your state, than anything else. So it seems like the first introduction, perhaps, to any listed gaming company is the fact that your state is now going to be offering sports betting.
I think the investment world has changed quite dramatically over the last sort of 5 years, and there's obviously now a lot more family offices, which have a lot of wealth. So if you're running a sort of tier one investment strategy, then you're going to definitely spend quite a bit of time focused on family offices, and there are thousands of them, in Canada and North America. So that would definitely be an important sort of focus. But you've got to take that whole sort of cohort of investors into account. So retail, family offices, and institutional. You're obviously not going to spend so much time on retail, but it's just you need to consider them.
I guess just building on this point, because I agree with Richard on this. I think what you need to see is where the market's going to be in the next 6 to 8 years' time, right? What's going to happen? Let's talk specifically about the US. I'm not sure gaming or iGaming per se is actually well understood, right? What isn't understood is that media companies are buying heavily into what effectively is sports betting, with hopefully a leap into casino. And it's, at least from my perspective, it still stands to see, right? If that's going to be what effectively is a mainstream stock to invest by the end of this decade, right? Gaming right now enjoys, let's just say, a slight bump, particularly because they were COVID resistant, right? So they're normally seen as good stocks to be able to pick. What happens between now and then, I think, is going to be dependent on how the media companies effectively are going to fight their way through, right? Spending's aggressively, right? I mean, just look at the NHL or the NFL over the weekend, right? Just to understand how aggressively you see these spends. To see who's going to rise to the top, right? To be able to control all of the media channels, to be able to leverage even more sports product at a cost to customer acquisition. Because right now it's definitely going through the roof.
But then on that point, if it's costing so much and people are spending so much to acquire and get market share,
is it sustainable?
What happens in that 4 to 5 years when it does, you've got to turn a profit, don't you?
Yeah.
That's how I was always taught in business.
So, well,
be cash flow positive.
I was always taught it's all about cash. It's always focus on cash. But I think in terms of the US, I think that's why you're starting to see a lot more M&A. Because if you look at the model in the US, you have 100 of, let's say, GGR. Let's say on average you've got 25% taxes. You've then got to pay your sports betting, NFL, a fee there, so that's another 2 or 3%. Payment processing can range from, say, 5 to 10%. Then you've got to pay, if you're doing a skin deal just to get access to the market, let's say 5%. So actually, you're at...
You've $1,000 CPA for every customer.
Yeah, well, that's bottom line. I'm looking at gross profit margin. So basically, you're at 50% already.
Yeah.
So then you've got technology costs, you've got marketing and everything else loaded on top of that. So the only way, theoretically, in 3 or 4 years, 5 years' time, to justify some of these valuations is that you need to have 30 or 40% market share.
Yes.
And therefore, I think it's only a matter of time where some of the smaller players in the US will have to get together and consolidate. And that's one of the sort of, you've got the DraftKings Entain thing at the moment, and we'll see how that plays out. But I think you're going to get more of that because, if you're sat in a DraftKings boardroom, you know all of this, so you're planning for the next 3 or 4 years because you know that if you don't do these moves, as you say, the cash isn't coming through, then you're not going to be at $50 or $60 share price, you're going to be at $20. So that's sort of one of the thought processes.
$500 million on marketing. When are you going to make that money back?
It's an interesting point. I've dug into their numbers, actually, funny enough. You're right. They spent DraftKings spent $495 million last year in marketing in the U.S. market and lost $1.2 billion US dollars in 2020.
And they'll spend close to $1 billion this year on marketing.
Yet they have a market cap of $19.82 billion, which is pretty impressive. FanDuel is not even predicting profit until 2023. Yet Flutter's market cap, which includes FanDuel, of course, is $25 billion.
But you've got to put it in the context. You've got, from these companies, they're in 20 markets. Right. And each market has theoretically has an investment cycle of, say, 4 years to getting cash back. So big investment year 1, year 2, normalize year 3, and then you start making, theoretically, cash flow and profits in year 4. So when you look at these companies, they've got staggered, they're in 20 markets, which has different cycles of investment. And then obviously if you can get iGaming, that's a game changer for these companies in terms of their cash flow. As we know in Europe, most companies are sort of 50-50. So, when you're looking at the valuations, you've got to take into account, they're investing for the future. So
sure. And that explains the wide range of PE ratios. You go everywhere from like 92 for Intane to 127 for 888 to about 30.
Yeah. I don't think anyone looks at PEs anymore. I was thinking that when I spoke to you and you were talking about PEs, and I'm thinking, I can't remember the last time anyone talked to me about a PE in the online gaming sector. It's now revenue multiples.
Right.
Revenue multiples. So if you look at all the
Either
stocks
way,
in the US,
a similar metric. The point is, the paper is oftentimes cheap for iGaming companies, expensive for iGaming companies.
Well, there's a couple of things going on. You've got the US sort of B2C companies that trade on, they don't make any money. So they valued on revenue, 15 to 6 times revenue, which, for us in this industry, we've been doing it for a long time, is just absolutely insane.
Yeah.
And then you've got the European guys, the 888s, the Betfairs, Entain, which actually trade on 3 or 4 times revenue, and they have, EBITDA multiples ranging from 10 to 20 times, which is, they've got real businesses and good cash flow. And then you've got the omni-channel guys in the US, which are people like the Bally, GameSys, the Penn Nationals, who again have the cash flow, retail sort of base, and then they're moving into the sort of online. So, and they trade actually on not too reasonable multiples. So there's quite a divergence in terms of when you look at the different companies. Yeah.
Sounds like we're in a bubble. Sorry.
Sorry?
Sounds like we're in a bubble here.
It is a bubble, right? The question is, when do you call it, right? This is it. Because, Bitcoin's arguably been a bubble for a while, right? We're just enjoying the rise and rise and rise and rise and rise. If it continues to rise, it stops being a bubble, right? Question is the US in a bubble which is going to burst? My feeling is at some point it will, purely because the spending on cheap money can't go unchecked. And at some stage, I agree with Richard, at some point the market's going to consolidate, right? There's just going to be 4 big media hubs, conglomerates just offering a one-stop shop for everything. In the meantime, there's actually going to be a bloodbath, right, for companies frantically trying to sell, and then it goes very quickly from a seller's market to a buyer's market.
Well, and that makes me ask, we're looking at all this M&A activity, we're oftentimes seeing US acquiring European. Are US companies looking to acquire cash flow so you could start to justify your multiples in the US?
Possibly, yes.
Is that a driver, is that the impetus?
Or use that Asian money that is off the books to come in and fund your expansion into America?
Yeah. Richard?
Yeah, no, I sort of agree with that. It all comes down to what do you think the size of this market is going to be in the next sort of 3 to 5 years, and what market share you can get. DraftKings have set it out in multiple presentations, if they can get that, then you can justify their valuation. Right. And you've got to remember that, and then at the backdrop to that, you've got all the media companies that have got, obviously, huge balance sheets, that are increasingly looking at this sector. So you've got ESPN, and they're trying to figure out what's the value of owning a sports betting sort of business, and how does that fit with my media business, and how can I bring that together, and is 1 + 1 4? And I think the jury's still out on that. So you've got those sort of underlying drivers, and I guess as we go forward, if the markets don't regulate as quickly, or they're not growing as much as what's predicted, and we don't have the iGaming casino regulation accelerate, then it's going to be very difficult to justify those valuations. Then how long can you hold on to waiting 5-10 years for more regulations to California, the Floridas to come through? Do we wait for that time, and is there enough money to still be spent?
I agree.
To get there? At the end of the day, it's a buy and there's a demand and supply.
And
absolutely.
And there's Las Vegas Sands.
Yep.
They're obviously now looking at getting into online gaming. So actually, there's still a lot of people over here that haven't really even started to get going yet. So you've still got a lot of buyers, a lot of people over here, which I do think will, over the next 12 months, will accelerate and we'll see more M&A and so should theoretically keep this sector, in terms of multiples, relatively robust if nothing else happens on the sort of regulatory front.
Right, and that's if the sector hits its numbers. I mean, last year I think U.S. iGaming was something around $2 billion in the top 4 states. We're looking at about 28 states with some form of sports betting currently, maybe 6 more on the go, which may come to fruition in the next couple of years. I think Maryland might have just announced that they could be delayed, but some more on the way. But you're looking at base projections for 2025 of like $6 billion in the U.S. It seems like we're a long way off getting to that $40, $70 billion number.
I think, look, what we know right now is that the iGaming market of just New Jersey, Pennsylvania, and Michigan is a run rate of $5 billion. And then you probably got similar for sports betting. So iGaming is the game changer. You get more states with iGaming. It's very clear. You can see the numbers that it could easily be 10 to 12 billion. That's real cash. That's a real market. Sports betting is a lot more seems to be a lot more competitive. So I think the iGaming market is definitely, you can justify where we're going on that. The sports betting market, you've got good visibility to sort of 10 billion pretty quickly. So yeah, we need to get some more regulation pretty quickly to sort of be getting up to those maturity numbers.
So one question for you guys. You've got $10,000. Which stock in America do you invested in today?
Well, I'm going to, obviously, my stock.
Not brag. Not that one. You're not allowed to invest in your own.
So you didn't want retail investor.
I think the Bally Games guys are very smart, and I think having a retail footprint with that cash flow, and I think the iGaming, because I'm obviously speaking my own book here a little bit, but that's why I might brag. I think the iGaming sector and casino sector, I think has huge upside in the US. Yeah. It's going to be competitive. So a Bally Gamesys with all the Gamesys sort of technology and thinking, as you sort of, build out the regulation of iGaming on a reasonable valuation, I think is where I'd probably put my money.
Julian?
I'd put my money in a data company that supplies the sports books. I actually think that's going to go a long way. US loves data. Multiples are 20-25x of sales as opposed to EBIT. Failing that, I'd put it in some NFT-based avatars of companies. If only there were companies like that out there.
You, Tim?
Evolution.
Tell me why.
They're the quickest to market, they've got the best products, and they've got an aggressive strategy. It's a difficult market, obviously, but they're going to push forward, and it's going to be hard for the next live dealer to get in there and follow in their coattails.
They're buying their way to the top.
Market share, as we talked about, they've got a great product.
And now a similar question. Who do you think is rife for acquisition currently? Who do you think is going to be the next to be taken over?
Oh, I can tell you about 4 I'm working on.
Yeah, I think I'll exclude myself.
Without breaking any of your confidentiality
Exactly, yeah. Everybody is looking at America wanting to be acquired because these bullshit valuations are out there at the moment, and they're all eye in the skies going, we can get this amazing deal and cash out.
Right.
I'm working on a deal at the moment I can't talk of, but they've just acquired a lot of businesses earlier this year. And I actually think that one of the main reasons is for them to look more attractive when it gets to an acquisition front. Expect that to happen in the next 3 months. Watch this space.
But as a VC, I'm happy if people want to go and spend a lot of money and buy these companies.
Buy it quickly before the cash runs out.
Buy quickly. Richard?
I'm not going to talk about any particular company, but I do think that there's definitely a growing wave of consolidation on the content casino side. I think you'll continue to really start to see that accelerate because you've got real IP, and I think the other sort of theme is definitely a lot of European-based casino providers wanting to get into the US, but the barriers to entry are huge, and the time to get into the market is huge. So I think there'll be quite a bit around that area in terms of which, is where I'd be focusing if I was looking at investing.
I am hearing that coming out of Wall Street. I'm hearing a lot of people saying, listen, I want to get involved in the tech side, not necessarily on the operator side. Yeah. So it seems like people are looking at additional support verticals to invest in rather than just the headline operator sites. Now, I believe we have something called Slido, our virtual microphone. Has any questions come up on our Slido before we end this panel?
Hello again. I am master of the Slido today.
Fantastic.
And do you want to have a look? Obviously, the first question, are there free drinks? That was just from me.
Are there free drinks?
Yes.
Probably.
So, probably. Excellent. Good answer. That's what I was hoping to hear. And these two questions here, we're coming, you've got about 3-4 minutes, but got a couple of cool questions there. Thank you.
Okay, super. So, let's see. Are regular license required for okay. I think it is meant to say, it says regularly, but I think it is meant to say, are regulatory licenses required for affiliates in the USA?
Yes.
And do you think that they should be licensed off the back of the operator or licensed independently as affiliates?
I'll take the
Debate
first.
I had last night at the bar.
Yes. Regulatory licenses are required in the US. It's one of the biggest pain points, right?
For affiliates.
Yeah, for affiliates, right? And I think Tim mentioned this before. The pain you have to go through just to get a regulatory license almost needs to justify the cost, right? The pain plus also the return on that. Is it something that you can passport off the back of an operator? Yeah, potentially, but I don't know if there's any operators who are actually willing to take that risk, especially seeing what's happening now. So unfortunately, as we expected with the US, it's going to be a very slow, very meticulous, iterative process, which might not be of interest to a lot of European contenders, which is one of the reasons why the US isn't the silver bullet that's going to solve everyone's problems. That's just my 2 cents.
And the next question is about tax. What are your thoughts on how a 15% global tax will affect the share price and investments in the sector going forward?
What
so
tax?
It just says a 15% global tax. So I guess we could ask generally, if your jurisdiction is going to add a tax to your operations. Of course,
Well,
I
I mean,
suppose it should
obviously-
translate to the bottom line, but
Yeah.
will that affect the appetite for the sector?
Well, from a US perspective, obviously no one's making any money, so it's pretty irrelevant in the near term. But I think, if you look around, I think most companies are probably already at that sort of level, maybe a bit lower. And obviously, with them going into the US, the ones that are profitable are paying, probably much higher rates than that. So I'd have thought a 15% corporate tax going into the medium term would be sort of below what most people would be assuming, so I think it's a good thing.
But look at POC in UK when it came in, look at Germany, the operators will build this in and make a worse experience for the players to cover their backside.
Are we talking corporate tax or GGR tax?
Corporate tax, but I'm
tax,
saying
yeah.
the introduction of a new tax, be it POC, GGR tax, it's a way to incorporate it in there, and operators will try and cover it somehow.
Well, look, I'm moderating a panel later this afternoon specifically on Malta's impact, right? Because one of those is going to be 15% tax. I think there's going to be a significant impact, particularly with jurisdictions, not the US. I think the US is okay in this regard. But I think with jurisdictions who have enjoyed that 6/7 clawback, right, of tax on your profits, I think that's actually going to be a material impact. And couple that with regulation, couple that with erosion of profits, couple that with FOPT in the UK. That's only so much you're going to put straws on that camel before the back breaks. That's just my 2 cents.
But I think a lot of the operators in the room would probably agree that a little more tax is probably better than terrible regulation or a ban on marketing. Because that would ultimately drive the black market to do better, and that would depress the entire market, and then no one would achieve
But there is a need for a strong lobby group to be able to go back in a unified, homogeneous way to the necessary jurisdictions in Europe. And there's never been a more important time than now. There has to be a unified voice that the gambling lobby needs to go, just like gun control did in the US. I mean, if they can do it in the US, why doesn't gambling do it in Europe over here? There has to be a reasonable amount of very good points put forward that gambling tax is necessary and it's important for the economy, but it needs to be measured to allow operators to survive.
I think we might have time for one more, so I'm going to choose this one because it's a good open-ended question. What's your prediction on how long it might be before we actually hit that bear market? How long do we get to live in these bullish days?
3 years.
3 years?
But possibly
2 to 3 years.
Possibly a bit less because of what's happening to SPAC regulation. So if you've seen the SPACs from this year, right? We reached peak SPAC in Q1, right? Q2 leveled off, and Q3 is actually significantly lower. And that's because there's some changes in the US regulating what effectively is cheap money, as Richard correctly said. If cheap money runs out, then consolidation will happen. So I'm calling it between 18 to 24 months.
18 to 24.
Yeah, I don't disagree with that. Obviously, a lot of it depends on the regulation momentum in the US, and obviously, the appetite for continual M&A. And if we then start to see the sort of media and gaming all fit together, that might continue for a little bit longer. But yeah, I think a couple of years, because by the time you get sort of out to, where are we now? So into 24, I think the TAMs that people have been predicting may not happen, just because it takes time. We all know, like regulation, trying to get casino, into new markets is very difficult and fraught with political nuance. So yeah, I think a couple of years. Obviously, if we got some big states going, Florida, California, or something like that, that might sort of continue it. And then maybe there's a pivot away to more global mergers. And then maybe we could have Japan or some Asia-type regulation, which might kickstart it a little bit more. So, so I think a couple of years seems about fair. And then if regulation continues, then it might prolong it for a little bit longer.
But in 10, 20 years, Disney is the key to the American market, I believe.
Or Netflix, who gets there first.
Yeah.
Yeah, I agree with that.
So we're looking at a fairly short horizon, given that some of the companies are not predicting profitability within that period. We're saying to look globally, not locally, for new markets to emerge, to drive the market forward. And it seems like we may right now be living in the halcyon days of iGaming. So enjoy it while we bask in the sun. Ladies and gentlemen, a round of applause, please, for Richard, for Julian, and for Tim.
Thank you.
It's been my pleasure hosting this. Thank you very much.
Thank you.
Wonderful. Wonderful stuff. Thank you so much, Michael. That's great. Oh, is this the Slido one? Are you sure? I don't want to be...
Well, we might steal
Oh,
yours.
okay. Oh, no, this is a Slido. Fantastic. Look at this technical changeover. I love it. Thank you so much, Michael. Great to see you, buddy.
Thank you, buddy.
Fantastic.
Thank you very much.
Fantastic panel. Cheers. Okay, folks, wasn't that great? My goodness, there you have your future horizon. It's maybe not as far away as you think. Think globally, the opportunity is there, but time is limited. Your opportunity is now. Absolutely fantastic insights there. Right, just a little reminder of a couple of things. As you saw there, very elegantly demonstrated by my good friend Michael Caselli, we have a question and answer tool. It is called Slido. To access Slido, all you need to do is scan the QR code that will be on the screen very, very soon. You ask your questions, it comes up, there we have it, it comes up on my iPad on stage, and your questions get asked to our VIP speakers. Another point to mention, there is an event hashtag. We would love for it to get trending here in beautiful Malta and in the industry, and that hashtag is NEXT’21. Hashtag NEXT’21. So feel free to take very flattering, beautifully filtered photos and videos of our amazing speakers, share them online with your comments about how amusing and entertaining they were, and use the hashtag NEXT’21. Okay, we are now going to explore the crossroads of iGaming regulation. Now, as the online sector has reversed the pandemic trend and continued to grow, outstripping industry predictions, regulations have followed suit, but not in a unified way. And with the liberalization of the US market on the up, and more established markets such as the EU showing greater restrictions, how can the industry operate in such a labyrinth of regulations? Well, I'm thrilled to be welcoming our next two VIP speakers to the stage who are going to answer those questions and much more. So ladies and gentlemen, please give a huge round of applause to Dominic Lagarmsur, the VP of Casino at SG Digital, and Andrew Poole, Compliance Director at SG Digital. Welcome to the stage, guys. Please, a warm round of applause. Fabulous. Okay, so I now get to sit in the Caselli chair, as it's going to be known from now on. Oh, look at it, very, very luxurious. I can lean back. How fantastic. Okay, guys, but welcome. Thank you so much for joining us here in beautiful Valletta. What a beautiful venue. A very important time for this topic around iGaming regulation. Before we go into regulation, can you maybe share with the audience a bit about what aggregation is and what services that SDG offers as well?
Sure, let me fill you in
Tom?
there.
Brilliant.
So, first of all, thanks for staying for regulation. Everyone usually leaves at this point. It's usually
Smart
coffee
people.
time.
Smart
coffee
people.
time. So thank you very much. That's appreciated. So look, I'll talk a bit about our platform. First, in the interest of neutrality, there are other platforms that are available as well. So we're not here to pitch you today. We're here to talk about regulation. So our platform, OGS, is our market-leading aggregation platform, and as you'd guess, we connect content creators to operators. So on our platform, we're connecting around 70 different content creators to over 170 customers worldwide. We're doing over 3.5 billion game rounds a month, so it's a big platform, substantial. Do you know who Bad Bunny is? Bunny's voicing?
I've heard of Bad Bunny,
Bad
yes.
Bunny. Bad Bunny is
a musical artist.
He
Is that right?
is the most streamed artist on Spotify last year. And our leading studio, which happens to be our own studio by chance, streamed more streams than Bad Bunny streamed songs. So there you go. So we're playing against Spotify and the big guys.
Outstanding.
And so that's what we do. Big scale aggregation platform. We're from SG, so we're quite corporate, quite American. Good luck, aristocrat. Let's see how that goes for those guys. But we're big and we're corporate. We play on the safe side of the business. We're very cautious. So we operate in regulated markets around the world. We probably operate in, I think, every major regulated market: US, Canada, and of course across Europe as well. So we're kind of regulated market specialists, really. So when you look at that's our platform. When you look at what aggregation is, what we really do is we take complexity away from people. So in the past, it was about getting as many integrations done as you could, integrate as many people as fast as you can, and all these big operators had huge departments integrating 10, 20, 30 partners, and then they realize aggregation takes that pain away. What you operators want to do is you want to market to players, you want to have great brands, you want to communicate with players, you don't want to get bogged down in the IT of it. So we've done that. And what I think we've realized in the last sort of 18 months, 2 years, maybe a bit longer, is actually when you take complexity away, we're not just making it easier, excuse me, we're also making it, we're taking away the new complexities around regulation. So we spend a lot of our time now making sure that our operators and our partners are regulated in markets. We bring them in on time, we understand the challenges, we deploy solutions that work for them and get them there painlessly. So that's the promise of aggregation.
Excellent. Well, it sounds like, you just make things easier for everybody.
It's all about making life easy. Not for us, it gets harder for us, yeah? It's easier for everybody else, but harder for us.
Oh, that's it. You take the pain so they don't have to. I love it. That's an attractive offer. Okay. And coming over to yourself, Andrew, now, we all know there's a lot of change and a lot of pressure, particularly in European regulation, and I know it's one of your specialist subjects. What do you think the biggest pressures are facing this industry in this area?
So it's interesting. It's never dull, right?
Never a dull moment, yeah.
Never dull. But I think the first thing I would want to say is that I rail a little bit against the idea of pressure and pain and complexity and regulatory burden and whatever else. For me, this is part of the opportunity cost of going into those markets, being legit, being licensed, legal, and regulated as we want to be. And so, I'm fairly new to SG, so this is me cutting my teeth in B2B. But for me, quite a bit of dealing with the burden, because when it lands on our desks, as daily business, it is pressure and it is hard work, and it does distract us from the exciting things that we want to get on and do. But if we can, at least at that high level, recognize that this is about the opportunity cost getting into the market, it's the job of work we need to do, it's an active decision. We're going to go after that market, or we're going to maintain ourselves in that market and roll with whatever the regulatory change comes. If we can get our mindset correct, culturally, we're all dialed in. That's the starting point. So pressures aside, day-to-day work, it is. But that would be my starting point. But sort of moving from there, look, we maintain a team of generalist product compliance folk at SG. But compliance isn't our job alone. And again, culturally, we need teams right across the business dialed into this job of work.
So I think we see the compliance sometimes is seen as a scary thing. Licensing can be daunting. The changes happening are worrying, and they can go too far. And look what's happened in Germany. It's pretty brutal. Yeah, we kind of think that's pretty tough. Okay, it's more than just regulation around that, but it's pretty hard. But regulation the right way is necessary for us. We want to be sustainable. Yeah, we want to be here in 10 years' time, having the same great conversations. Seeing each other and kind of having great kind of growing businesses. And I think we need to look back, and the world has changed, and the idea of going back to the old days is not there anymore. So compliance is with us, it's staying with us, and we need to embrace it and do it in the right way. And fundamentally, we need to go and work with those regulators, work with our partners and customers, and we need to kind of make sure we keep tidying our act up as an industry, which I think we've done a great job in the last few years. But we need to embrace it. And actually, if we do a good job doing the basics right, then there's more chance we can head off the next Germany as well.
And you mentioned our partners. That's obviously a key focus for us. We've got our in-house content. We're obviously across that, but the more that we can do to support our partners, the better. Very many of them, I'm sure quite a few represented here, increasingly have very sophisticated compliance teams. They know their apples, but there are plenty of smaller studios too, not yet geared up for it. So where we can take complexity out of that, for sure.
Yeah.
And yeah, look, the changing landscape is what it is, and we have to roll with the good and the bad of it. But
Absolutely. Well, do you know, to be honest, both of you are exuding the kind of attitude I would expect for people that look after regulation and take, the pain away. You don't feel the pain. To you, it's like a challenge to be embraced and an
get
opportunity.
up every morning and
fantastic. I love it. I love it. That's exactly what one needs to hear. So what do aggregators like yourself bring to the party? I mean, if you want to dive a bit deeper in there, and a bit of a leading question here, a bit of a provocative question. Do you help or hinder operators staying live and staying legal?
Well, I'd like to ask operators that question. They may have a very different view than me, but from our side, what we do is we do a couple of things. Yeah, so we bring intelligence and we bring solutions. So in terms of intelligence, we have a huge, bird's eye view of what's happening globally. If an operator is operating in a number of markets, but not yet in new markets, so looking at what's happening in Ontario right now, and Europeans looking to go into there where they perhaps haven't got experience of North America generally, because we operate in every territory, every regulated territory globally, that means we have a really good experience of knowing how to deal with those regulations. We know how to engage with regulators, and we can bring some intel and information. We're always keen to kind of share our best practice across all our operators, and we can do that. So we have this kind of global insight. We also, by the way, we have a great position to see how trends are playing out, what's happening, which studios are working well, which aren't working well, how we can help them get better and understand why things aren't performing in certain markets. So we have that great position, great kind of global kind of look down position, and we use that. And then beyond that, we also have the tooling we have as well, the ways we can get people regulated. So if you look at what's happening in a week and a half now, week and a half to UK, you look at what's happening, it's happening in other markets around the world, in Germany, other markets. We have tools that we've developed over time that enable us to keep our customers compliant and also keep partners compliant. I think, keep those small studios who can't possibly go and invest in 10 different solutions for 10 different operators. We can act as that kind of, abstraction. We can build that bridge between that helps keep everyone compliant. So our tools right now, we're deploying them in the UK, we deploy them in Germany. They keep people compliant in Sweden every day. They're into Ontario, which is happening right now, the same tooling again. So, so we see that ability to give those network level tools as a huge sort of benefit of being with an aggregator. If you're integrating everybody individually, and every other operator is as well, you've got an awful lot of solutions vying for people's time and space.
Yeah. Right, totally. So yeah, that's an interesting point. It's not about, not just about the tools and the services you offer, but the fact that you have that global overview by virtue of what you're doing that can be kind of very targeted intelligence that you provide to your clients. Right, interesting point. And where do you see your place, coming over to yourself, Andrew, where do you see your place in the regulatory ecosystem? What insights and experience would you say that you can bring to operators and regulators to help mold future regulation? Is that something that you can have an input in?
Yeah, so I think there's a couple of things to say. Our place in the ecosystem, we sort of touched on it already. It's very much we're not just about compelling content. We're a RegTech solution provider of a different sort of guise than those we would perhaps naturally conjure up in our minds. But away from that, B2B. In my experience, at least, with maybe a few exceptions, we're not that active in the kind of the lobbying for change, the dealing with calls for evidence, consultations, all of that stuff. We're not at the front line of the regulatory battle, pursuing the good changes that we all want. But we got a lot of that data, network level, aggregated, anonymized customer data. It's not as rich at a sort of individual operator level where your players and you've got all that demographic information. But behaviorally, as I say, you talk about the changes at the end of October for the UK GC. We can look at player data before, player data after, pick out the unintended consequences, see what was the good, the bad, and the ugly of it. We ought to be using that data more actively in future consultations. So a bit of a sort of a call to your audience really is to where you work with us. Look for opportunities to use us that way. We will certainly be more in the room and in the conversation when it comes to regulatory change in the future.
We've got some great insights, and we've got some really great insights we can share, and we'd love to work more closely with some of you guys on that as well. I think it's important.
Fantastic. So you have that helicopter view. I mean, obviously there's an element of anonymization because it's many different clients, but that's the That's the kind of secret sauce, is that you have that huge breadth of view that you can offer as a tool of insights to the industry, to regulators, and your doors are kind of open to work with them. That's what I'm getting. Just so people are aware, and I don't know if you can mention this kind of thing, but are there any clients or companies that you work with that you'd like to give a name check to so people can get an idea, or is it all top secret? I mean, sometimes it is. Tell me.
Well, I think we work with most of you in various guises. I mean, you look at the usual suspects, in the UK, people like, kind of Sky Bet, who are very, very progressive in their view. They're really forward-looking.
Fantastic.
All of our major Europeans are looking at partners like Leo Vegas, 888, all the rest of you guys as well, increasingly engage with us now, and we really appreciate that. There's a lot more closeness in the way we work towards regulation, so appreciate that. And, I think the next one, I won't mention names, but, what's happening in North America now is going to be absolutely fascinating, and that's the new regulatory battleground. Really interesting.
Oh, absolutely. Yeah, that's a whole very interesting and opportunistic can of worms that is just opening and evolving as we speak. So if folks are here sitting in the audience, they're working for a regulator, they're working for an operator, and they're like, yeah, that sounds interesting, I'll have some of that. How can people get in touch with you? How can they see you here at iGaming Next Valletta? What's the next steps for them?
So first of all, we'll be around the place. Come and find us and say hello. We'd love to catch up and see you all. And our names are there as well. So get us on LinkedIn. I think probably the best thing to do. And we'd love to come and spend some time and meet you.
And it's not just us. We've got a smattering of other colleagues here today as well. So we'll all be out on the exhibition floor and having some lunch and. Looking forward to chatting. Fantastic.
You'll be doing the good stuff. You'll be networking. You'll be hanging around. Joining us for drinks at 5:30 today, I believe, on the beautiful rooftop, which is absolutely stunning. The best view in Valletta, I promise you. Okay, so has anybody got a question for Slido? We're kind of running close to time. If anybody's got a question, now is the time to send it in. I'm going to give it 5 seconds, which isn't much. How are we doing for time? I think we might, 11, 12, 11, 15. Okay, we are actually out of time. Wow. So, guys, if you have, ladies and gentlemen, if you have any questions for Dom and Andrew, find them at the drinks, find them over lunch, and, get yourself some of that fantastic outsourced wonderful overview and data and all of the good stuff. So, ladies and gents, please join me in saying thank you to Dominic and Andrew from SG Digital. Thank you so much for joining us here at iGaming Next Valletta. Wonderful. Okay, absolutely fascinating stuff. So many innovative, interesting business models are springing up in response to regulation, in response to how the market is moving. It's a fast-moving industry. It's full of innovators, full of disruptors, and full of fast-moving components. And folks like SG Digital can really help you kind of make the most of these opportunities, look for the fault lines, look where there's openings, and kind of get into the right markets at the right time with the right technology and the right regulatory understanding. Okay, so just a reminder, we have a free lunch today. It is, if you go through the expo hall, you'll find it at the back. Say hello to some of our wonderful sponsors and the folks at the stands on your way there. They are there to chat with you. It's courtesy of the good people at Ames. Thank you very much, Ames, for giving us a free lunch. Just a reminder there, we don't have mics. Ask your questions via Slido. The QR code will be popping up on the screen from time to time. Speaking of QR codes, one of those technologies that's really come to the fore throughout the pandemic, there is a QR code on your badge and the Wi-Fi access code on your badge. Scan this QR code to get the very, very latest agenda because it changes from time to time. And that is the QR code to bookmark to ask any questions for our VIP speakers. Okay, so now we are going to move on to another fantastic panel. I'm going to beckon my colleague who changes the chairs around, because we might, we have enough chairs because we have 2 virtual speakers. Is that quite right? Okay, I'm just going to look out for our next speakers who are going to join us. The next panel is called Ready Player One, and it's going to kick off in a few minutes. So what I would recommend that you do in the meantime is please download the agenda, please scan the QR code, talk to somebody near you, and make some networking magic happen. I'm going to tell you a bit about the next session. It is going to be absolutely fascinating. It's about the future of products and so much more. It is called Ready Player One, Re-engineering or Inventing New Games of the Future. In its quest for change, Apple rethought and reimagined the end user experience. And in a couple of minutes' time, we're going to discuss with game leaders what needs to be done to engage the attention of the next generation, those Zoomers that you read about, who have completely different behaviors, completely different expectations of what's a good customer experience, what's a joined-up user experience. The rules have completely changed, and this new generation is kind of really calling the industry to evolve and meet their expectations with fantastic technology and strategy. So what's going to be done to engage the attention of the next generation? What is it and why does it matter? And do we really need to reinvent the wheel, and what's wrong with traditional games anyway? So we're going to be discussing all of those things in a very short moment. Do we have our speakers on stage? Our speakers nearby? Okay, they might be coming any minute now. So what else to mention? We are also going to be having our iGaming Idol event. That's going to start today at 7. I'm afraid it's sold out, but I really hope to see you there. You've met one of the hosts on stage already, the wonderful Michael Caselli. He's going to be co-chairing the event today with the Voice of Malta. It's going to be so exciting. And I'm just going to take 1 minute to go and, okay, we're ready with our speakers. Okay, so wonderful. We're doing things very live here. It's absolutely brilliant. So, ladies and gents, I would love for you to welcome onto our stage here at iGaming Next Valletta 2021, Disrupting the Status Quo. We've got 4 amazing speakers. 2 of them are going to join me on these wonderful chairs here. 2 of them are going to beam in remotely. And I'm going to introduce our in-person guests first, and then we're going to have our video guests. So, joining us on the stage, please welcome the Director of Customer Experience at iGaming, Amy Casson-Hughes. A big round of applause for Amy, please. Wonderful. Thank you, Amy. Welcome. Great to see you. And joining Amy on stage, we have the Commercial Director of Gaming at Betson Group, the wonderful Ciara Liam. Welcome to the stage, Ciara. Great to see you, Ciara. How are you? Okay, and joining us by video, we have the founder of Rocker Network, Andy Rogers, and the Chief Product Officer at Relax Gaming, Simon Hammond. Ladies and gents, please welcome Andy and Simon to our virtual screens. Fantastic, looking good. Okay, wonderful. And just a reminder, we have our Slido here for any questions that come up during our fantastic presentation now. It's going to be so interesting. We're going to be doing a deep dive, but let's start in time-honored tradition with a bit of an elevator pitch. If you all wouldn't mind just sharing with the audience a bit about who you are and what you do. And we're going to start with yourself, Ciara. Thank you.
All right, thank you, Oisín. So good morning, everybody. My name is Ciara Liam, and I am the Commercial Director for Gaming at Betson Group. We operate multiple brands in jurisdictions all over the world, and my job is to work with my team, the commercial teams, the product teams, and ensure that we have the best customer experience and the end-to-end journeys on our site. Fantastic. And over to your good self, Amy.
Thank you. I'm Amy Casson-Hughes. I'm the Director of Customer Experience at iGaming, and we're essentially responsible for building out the best experience for our players across our websites and apps.
Wonderful. And Andy, come on down. Tell us a bit about what you do.
Hi, hopefully everyone can hear me.
Yeah, perfect.
Perfect. Andy Rogers, I'm the CEO of Rocker and the Rocker Network. We're a group of professional services companies that point at the gaming industry. And my day job in Rocker is working with lots of operators and suppliers on their strategic imperative.
Wonderful. And coming over to yourself, Simon, talk to us a bit about what's happening at Relax Gaming.
Morning, everybody. Simon Hammond, Chief Product Officer for Relax Gaming. We're a studio in our own right and also an aggregator of multiple different casino content partners. Been in the B2B side of the business for coming on nearly 15 years now. So I've seen a lot of change in the business and look forward to talk about the future.
Fantastic. And Simon, I'd love to stay with yourself maybe. If we could just open things up and have a look at the current environment. So as I mentioned in the kind of opening blurb, we've got a new world, new customer expectations. We've got Zoomers and they want that joined up user experience, that customer experience. We live in a world of very fast moving customer behavior and expectations. What does this mean for content, future content, content gaps? Talk to us a bit about the current environment and what that means for content producers.
I think it's fair to say that the market has changed significantly in the last 2 years. We have more suppliers than we've ever had before, more content available to the player bases than ever before, a lot more challenges than we've ever had before with regulation, distribution, visibility. So there's lots of things that are affecting both strategic direction and output of a supplier. We're in a very competitive landscape. Content is certainly king. There's an argument that to some degree content is also becoming a degree of a commodity. And this is where the challenge has become from a supplier to ensure that content is still king and high performance, innovative content still makes a high impact. So we're in a state of heavy margin pressure, heavy competition, and the quality needs to shine through, as does innovation, to even have a chance of performing and generating decent ROI. So it's tougher times for the supplier side of the business. The cut through is tough.
Yeah, we live in a world where we have this kind of Netflix mentality. As you say, content has become possibly a bit commoditized, and that kind of opens up new challenges, etc. But Kira, I'd like to come over to yourself now. Obviously, you've got a very distinct view. You've got a lot of experience in the sector. Talk to us a bit about how the differing markets affect things like content generation and content production. And, we've got Greece, Italy, traditional markets. We've got the UK and Scandinavia. All of these things, folks like yourself have to take into account. You have to spin these plates and juggle all the different expectations. How do you navigate this? What do you think the overview is of the sector in this way?
Yeah, I think for us it very much depends on whether it is a new, more emerging market or quite a mature market as well. So markets like Scandinavia, customers typically tend to know what they're looking for, and you need to help them on that search and that selection journey, whereas a lot of our emerging markets, so if we look at some of the new markets that we have, or markets like Peru where we're growing really strongly, then that's about holding that customer's hand and reassuring them along the way, because it's maybe not something they're as used to. Even that e-commerce exposure and everything in Latin America is quite low. So, when we select content at Betson, we have over 5,500 different versions of games that we maintain just on our in-house platform. But, that doesn't mean you'll find a single website that has more than 2,000-3,000 games on them. And that's because, we need to cater for a wide audience, and the content that works well in the UK might work in Greece, for example, where it's a more traditional betting audience, but it might not get the same cut through in some of the other markets that we have. So we need to make sure there's a wide variety of content. And actually, when you think about the input and the effort required to test and configure and launch content and do commercial deals with partners, it's better to have the content if someone searches for it than to lose the customer potentially. So one of the big things we focus on is failed searches. So we look a lot at that customer journey, and we get a report every week that talks about customers who searched and used our search and filter functionalities and didn't result in a game launch, and we try and really optimize that process all the way through.
Fantastic. Thank you, Kira. Okay, very, very interesting. And Andy, coming over to yourself. Now, I know you've got some, a good insider view of things like the Apple ecosystem. You've got some strong opinions on fiefdoms or gatekeepers. Talk to us a bit about, the kind of tension between open ecosystems and walled gardens. Where do you think this is going to go? What do you think it means for the industry? And what advice do you have for our delegates here?
It's a really good question. We've all seen, the changes in obviously the Apple rules over the last year or so. So, what we're seeing is lots of different platforms, basically, opportunities, and whether it's traditional, operator sites or apps, or whether it's new, worlds like Twitch or even OTT services on TV or streams, for people like DAZN or whoever. There's lots of different opportunities, and as you say, rightly so, that creates fiefdoms of some kind and gatekeepers, and that just means that there's another level of complexity to deal with. Over and above the sort of market saturation and the regulatory pressures, you also have this technology pressure, and effectively what you're leading to is a much more granular. A much more granular service offering. Your products are designed and consumed by an audience that's disparate over a whole bunch of channels, and that's really interesting. So when you talk about diminishing margins, like Simon mentioned, and the cost of getting products to market, what does that mean if you're dealing with ever more granular audience segments? And really, what that means is that we all need to be, broadly better at targeting, understanding our consumer, understanding where they are, and ensuring that there's the right level of product and the right type of product in the hands of the right type of consumer at that point. Does that make sense?
Totally. Yeah, absolutely. And you were talking there about the changing nature of consumers, changing demographics. So I'd love to come over to yourself, Amy. Now, talk to us a bit from your perspective about how the customer experience has changed, say, in the last 10 years. What things have you noticed? What observations do you have on Gen Zs, and what does it mean for iGaming?
I think, particularly with younger audiences, they're less patient. They want, always on, constantly engaged, bite-sized content. With services like Twitch and things, you're kind of TikTok, you're mixing the kind of reality TV style with like podcast and video gaming, and that's the kind of expectations that people have today. If you take customer experience within our industry, I think 10 years ago it was shockingly poor, and now we're kind of waking up to the fact that we can't really be that behind the rest of the industry anymore. And we've seen radical improvements, which has been great. I still think there's a way to go around not just having products that are very usable. We need to bring in other improvements like personalization and things like that. But I think what we've seen over the last few years is that the impact of UX changes actually becomes smaller as time has gone on, because 10 years ago you would do a big UX overhaul and it would have a dramatic impact on the product because there were so many products out there that were so poor, whereas now customers' expectations are that you get good UX. So we're in more of this mode of kind of optimizing the existing product that we've got to benefit from these small changes. However, it's still absolutely critical to keep optimizing because people expect a seamless customer journey, and we have to help customers kind of get the task at hand done.
Yeah, totally. And staying with yourself, talk to us a bit about the role of operators. They have this quite tricky balancing act because the Gen Zs, the Zoomers, they expect personalization wherever they go. They expect a joined-up user experience. But how can operators personalize across multiple providers? What kind of techniques are there? Any advice? Is it possible at the moment for this personalization to exist in these multiple places that the Gen Zs are enjoying games?
I think personalization is definitely becoming more of a factor in our industry, but I think a lot of people still get away without any personalization. But I'm sure that will dramatically change over the next few years. I think if you've got operators doing no personalization in a few years' time, I'll be surprised if they're still doing well. Yeah, I think, and it's not just kind of. It's personalized gaming content. There's also personalized promotions, personalized search results. There's so many aspects that you could kind of introduce into the product.
Indeed. And coming over to yourself, Kira, what kind of, we heard about personalization, joined up user experience, etc. What kind of UX factors would you bring into the mix to meet the changing expectations of the Gen Zs? Is there anything that you've observed on different platforms, like maybe free to play? Or you mentioned you were at an airport a little while ago when we caught up, and you said you were kind of downloading the Apple Arcade. What do you think the industry should be learning from other players in the space?
Yeah, I mean, for me, I think the first thing is ease of use. At any one point, I mean, at Betson, we are a predominantly mobile operator. We are mobile first in many ways. And, at any point, someone is one swipe on a home screen away from leaving your site and playing with the competition. So, when we look at things like engagement from the free-to-play space, absolutely. And it doesn't need to be free bonuses and free offers and promotions, but reasons to play. And I think very much now as an operator, your job isn't to exist as a website and host games anymore. We're not the poker pages of the early 2000s where you just needed a big red button that said click here to play. It's about bringing them on that journey, that search, that selection, and how you bring that forward, and also in the content that we choose, right? I think in many ways our industry is probably not very well set up for innovation in terms of regulation and even regulator understanding of different content, but whether it's skill-based gaming or if it's multiplayer approaches, and I'm really looking forward to hearing people speak about that over the next few days as well, because I think they're some of the really interesting things that are starting to come into the space that we haven't seen before.
Yeah, indeed. I mean, there's no better place to be learning about this next generation of content design, user experience design than right here at iGaming Next. And I, too, am very much looking forward to all of that, Kira. So coming back to yourself, Simon, now you mentioned earlier about the next generation of content. Talk to us a bit about Content 2.0. Does this tie in with streamers? Does it tie in with affiliates? It sounds like a world of opportunity is opening up here, but there might be some dangers in there as well. Talk to us about that.
Sure. Quite a multifaceted question.
Yes.
There's already been quite a dramatic content shift, I think, in the last few years. Although on the surface, you probably wouldn't see it. You're already seeing a great depart from the traditional 5x3, low, medium, casual, volatile games. Those don't work anymore. No one's interested in them. They don't play well. They don't really financially perform. So suppliers who are actually having high performance or actually showcasing high performance are the ones who are daring to challenge that. So you're seeing a lot of new real configs. You're seeing a lot of more high volatile structures which tie into that kind of big win potential streamer kind of focus. So you're already getting content that is changing its style, its mechanical flow and game flow to target the high impact, sort of low attention span new player, because we're trying to all capture the player's imagination in a much shorter period of time. And this is where the streamer and affiliate community has tied in quite significantly into that. But that said, I think if you look at what's really standing out in both probably operator performance and also supplier performance, it's the games that do look different. It's the ones that have a unique mechanic, unique real configs and all these types of things, and the ones that are trying to push the envelope of what a slot is. I don't think the successful games anymore resemble anything like a slot used to, even just a couple of years ago. So this will be an evolutionary change. I think it's happened more aggressively in the last year or two because of the economics of running a studio and the positioning and the competition element. So I think that is already forcing change. There is a very real scenario there where it's, for any studio, it's a tough environment. There's never been an easier way to get to market through, dare I say, people like Relax for a young studio or a studio looking for distribution, but ultimately the content needs to perform. So in one sense, the barriers of entry have come down because of aggregators like us, but still the performance metric or the pressure on performance has never been so high. So you need to dare to innovate, otherwise you won't stand out from the crowd, you won't get the compounded revenue you need to support your operation. That puts quite a bit of pressure on suppliers to come out with something new. It is therefore, by nature, more of a risky element, of course, because by trialing something new and exciting doesn't necessarily mean it's going to resonate with the players here and now. And that can have a dramatic impact on your sustainability. But you're already seeing it. Game formats are changing, slot formats are changing. They're becoming a lot more high-paced, high hitting in terms of mechanical flow. And then you're also seeing the introduction now of more game show variants, where you look at even what Evo are doing on their live side. These are formats or gameplay formats that are starting to resonate with perhaps a more general, younger audience. And I think the industry needs to do that in order to capture the heart and minds of the future generation of players.
Well said. And Andy, from your own perspective, what are the kind of interesting formats that the Gen Zs are connecting with? We heard about game show formats there. What other competition is out there that the industry should be aware of, like from things like Xbox, from the fire hose of content that is Netflix, from these other platforms that are just these weapons of mass distraction? How do you cut through? How do you get that engagement? What kind of formats and design tricks should people be aware of?
Well, I think, look, I mean, there's so many. It depends on on the game type and
Sure.
and what we're talking about. Whether it's slots to free play to DFS to crash games. I think there's literally a whole slew of things that we can learn from other industries. Just to sort of follow on from Simon's point around innovation, there is a mandate for innovation in the market. But it's quite tricky just because of the way the market's constructed, and the risk point is really, really important. And it comes down to an individual level around gaming directors not wanting to put something that's totally risky on the front of their their site or their app, right at the top, that's going to challenge the norms if they're not going to get paid for that. So that in itself, the industry it struggles with true innovation in that way, and that's where you see, to answer your point, is you see this innovation coming from other areas which are less structurally or more structurally accepting of innovation. So crypto casinos or DFS or social gaming and these other areas. So gifting, sharing, all of these types of collaborative play, different types of animation, different types of sound, different types of device, different types of access point. All of those things are coming from some other areas where they don't have quite the same structural issues with innovation. There's more of a mandate to try them. We're particularly interested in what's happening in the crypto space just because of that, really. So yeah, it's.
Very good, absolutely. And you mentioned social games there, so this is an open question. Anybody who wants to hop in, talk to us a bit about the overlap of influencers. I mean, what do influencers mean in this space? Because they're very popular with the Zoomers, the Gen Zs. Brands are all over influencers to try and get some cut through, try and get that initial engagement and brand association. Is anybody here working with influencers? Have you seen some good examples? What does that mean in the industry? And how can it work? Is it a good idea for people to be thinking about using influencers? Kira, you're nodding your head there.
Yeah, I worked for Procter & Gamble when I graduated from university, so brand ambassadors has always been something, whether you're selling Gillette razors or, really nice shampoo, we always wanted to make sure that we had people that people aspired to be. And I think with influencers, it's slightly different. But, when it comes to things like streamers, for example, I don't think you need to be an influencer per se. I mean, when we look at even just that big win last night that we saw in Crazy Time with Evolution, I think had a streamer not been playing, then that wouldn't have spread as quickly and everyone wouldn't have heard about it maybe in the same way. So I think, very lucky rather than, trying to push the news outlet today. Sure. People pulled it through last night and were sharing and talking about it. And we also use brand ambassadors and influencers in our marketing in some of the regions, and it's a great way to target new audiences. Even just in Greece a few weeks ago, we went to the rally and, we had people for social media making content and really looking for distribution. And I think that's what people want to consume now. People don't want targeted ads on their Facebook sites from casinos that say sign up and deposit and get a €100 bonus anymore. They don't want just ads that talk about new games. They want genuine, engaging content. And I think even blogs are not just about SEO value anymore. They're about genuine ways to engage your customer. And in a world like Italy, where we have advertising bans, for example, or markets like Lithuania, where we need to follow the Sweden approach and stop bonusing, then finding new ways to continue to engage your customers is incredibly important.
Yeah, 100%. And a question for yourself, Kira, opening up to the full panel. Do you think there's a hunger from the Gen Zs for authenticity? Because you said that people they can kind of see through personalized ads. If they're getting haunted around the internet with programmatic advertising, it's like, oh yeah, I know what's happening here. I visited this site, so I'm getting this, and yada, yada. People are very sophisticated, but authenticity resonates. I mean, do you think that's true? And how do you think, can this be operationalized to take advantage of it?
Yeah, absolutely. And I think it's not even just about authentic content, but almost the feeling that they've got there themselves and that they're in control of it. So, even if you spend all of your hours scrolling on Instagram or clicking from one story to the other or flowing through YouTube videos, they like to feel like they're in control of that journey, and sponsored content is not necessarily the way to do it. So if we look at the bets and sponsorship of Copa America, for example, that moment when Messi realized that, they had won and the bets and banners were in the background, that got seen by millions of people, and it's user-generated content and authentic content, as opposed to, that exposure was worth more to our brand than, any amount of media or PPC or ads that we could have run, because it was something customers were genuinely interested in, that they wanted to share with their friends. And, I've worked in the industry long enough to know that refer a friend's not going to change your business, right? But, when people have genuine content, they do want to share it, and they do want to do that with their friends and pass it on and talk about it as well, which is where the value comes from.
Yeah, absolutely.
I think. Sorry, just to jump in there. Sorry, I can't see everyone quite.
No, you're always welcome, Andy. Please, all of you. All good.
But I think it helps on where the context of the product is as well. In terms of that authentic thing. It's very difficult to make Rainbow Riches authentic to a Gen Z or whatever. But the context of where that appears, and where those people are accessing it from. So I guess that things like, we're hearing a change in narrative from North America. So to Kira's point, exactly that, there's maybe that time for, targeted ads on Facebook with bonusing in Europe has come and gone. But the shift in narrative in the US is all around entertainment, and we see that, with some of these big deals being done in the sports sector, with Bally's or Penn buying the Score, or whatever it is that's going on, and that's more discussing. It's more dealing with gaming as an entertainment function. I know we would all consider it to be entertainment, right? But it's even more so than that. That narrative is coming on strong, and it's being reported. So when it becomes entertainment, then what does it sit alongside? You mentioned Netflix earlier. There's lots of different other types of entertainment that are vying for the future gamers' attention. And so the authenticity then could come from where we place the products within those other environments or opportunities they're in. It may be that operators of the future go way beyond their borders. If regulation allows, they're serving content beyond the borders of their own sites, for example, and they become a brand in their own right. And I know that some content providers are looking at that, right now. And so that's quite an interesting aspect, I think.
Just to jump in a little bit, just on the other question about importance of streamers and the content landscape as a supplier. There's never now been a more direct medium available to a supplier, to the end player. And especially ones creating awareness of your content. You're always reliant on the operator to do that. I think it's fair to say that the streamer community, the affiliate community, has probably had more impact on supplier preference or player supplier preference in the last 2 to 3 years than anything else. If you look at what's suppliers that wouldn't have even a window or a chance to grow versus the big boys on the market are now prevalent, popular and growing and eating market share because of that impartial viewpoint, the streamer community, the actual community getting behind a specific supplier of content. That's been to the detriment of some of the more larger incumbent suppliers of recent years, which I think have had probably significant downturns, and actually smaller suppliers who have worked with these guys, who have done partnerships or created good content that has resonated with that community, have actually grown as a consequence. I mean, we took it quite seriously. We even did a collaboration with a streamer, with Casino Grounds as an example, to create an actual co-project where we're furthering those things, and we work quite closely with the guys. But there's a fine line there between creating engaging media, engaging following, and that impartiality. I have no problem having one of our games on a streamer, and if they say we don't like it, at the end of the day, that's still feedback. That's still qualified feedback. It's still visibility, awareness of your brand, ultimately. Now, if you continuously come out with rubbish games, then that's going to have a detrimental impact to your portfolio, right? But it's huge influence now, and that is targeting and going into generation X, Y, and Z. I mean, it's about making sure that you're relevant, that your content is hitting the right mark, it's exciting, and people are hungry and eager to see what you come out with next. And I think new young suppliers who are in tune with that will continue to take share of pocket and revenues from the larger, more stale operations.
I think it will also be interesting to see how this kind of evolves over time, because will regulation kind of block the innovation in this area potentially? Like we've seen Twitch just recently, put some restrictions in place around gambling, and will that go further? It'd be interesting to watch.
Yeah, very good point,
Probably.
Amy. Probably. Yeah.
Fortunately.
Yeah, absolutely.
And very market dependent as well, right? I mean, when we look at
Yeah.
some of the emerging African continents, for example, where data is of a premium, they're not going to sit down and watch people play on streams, for example, versus trial the games. And, definitely in Scandinavian markets, that is huge. But in UK market, for example, where it's predominantly sports-based, then the average sportsbook customer isn't necessarily watching those either. And it's about finding and matching great content for those guys as well.
Yeah, well said. What a fast-moving, interesting space. And I'd like to come back to yourself for a moment, Amy. Now, of course, customer experience is your kingdom, and we've kind of hearing from everybody, yourself included, about how the customers are changing so rapidly. They've got changing expectations. We've got different markets. We've got the complications of regulation. We've got iGaming be seen as more of a kind of entertainment competitor, so you're kind of in that realm as well. Are there any kind of techniques or any technologies that you would recommend to keep tabs on the customer experience, to manage it across this increasingly hyper-fragmented marketplace? Do you use anything like personas and user journeys, or are there any particular platforms? I mean, if you are at liberty to divulge these things, or any general advice that you'd have for folks who are looking at this exploding, fast-moving, fragmented market, and they're thinking, my goodness, how can we ensure a great customer experience for this very demanding new demographic?
I think the fact that people are now becoming more aware of the value of customer experience, even though it's one of the hardest things to kind of put a value on. I think there was a recent research study that said that for every $1 spent on UX, it will return $100 in revenue. Yeah. But it's so hard to kind of to pin a value on it. But I think businesses are appreciating more and more that it's absolutely essential. And it's not just user experience, it's the whole customer experience, it's the emotions that customers feel towards your brand around every single interaction that they have with it. And the fact that that's becoming more important, people are putting more focus on it. I think companies that will naturally invest more, so they'll have bigger UX teams and customer service, customer experience, product management teams. They'll also probably invest more in the tools to enable them to create a better customer experience. So behavioral analytics tools. Every website's got web analytics, but how many are actually diving into the behavioral analytics data, looking at things like click rage and things where you're actually understanding not just what customers are doing, but why they're doing it. Yeah. I think that little investments like that around personalization, bringing more AI into all of our experiences, those will all help. And then technology-wise, I think 5G is going to be very interesting to see what kind of happens with the space, because essentially everything, will become much faster, more responsive. Hopefully, videos sticking will become a thing of the past,
Yeah.
and it just opens things up more to kind of more innovation within gaming, and those streaming services that are all kind of flying at the moment. They'll be able to grow in markets where such as India and things like that. So it'll be an interesting space.
Totally. Yeah, fantastic. And what do we all think? A kind of, an open question. Whoever wants to jump in, feel free to jump in. What do we think all of this means for the quote-unquote traditional games? Do they still have a place? Do they need to have a new front end? Do they need to be represented by videos and streamers? Or is there still an appeal there for different demographics? Who'd like to jump in there? Simon?
I think there's still a very strong market for it. Suppliers and the casino business is still doing pretty well. As the guys have mentioned, like new emerging markets brings new levels of education and a new home for the more traditional slots to build people through. So there's definitely still a market for it, and there's definitely still a hunger and desire for those things. But I think as a supplier-led business, you need to be far more in tune with the actual framework that you're building, the dynamics of that to cope with the changes with regulated markets, the ability to adapt that effectively and quickly to new technology changes. I think there's been a big wake-up call for many suppliers in the recent years about how can you effectively modify your product, enhance your product over time to cater for the changes that are happening. So I think there's still generally a market for core slots, core casino games, but ultimately it's going to be the ones who can adapt those to the market conditions, regulatory conditions, new market entry, promotional suites, gamification suites that you need to put on top of these things to keep the experience engaging. And it's going to be those guys who can still maintain a core product but can drive it forward, I think.
Absolutely. Andy?
Yeah, I think that there's an old model, I think it was Toyota in the 80s, and that's 70-20-10, so 70% BAU, 20% evolution, 10% revolution, and we would like everyone to do a bit of that, but it's different types of evolution and revolution depending on whether you're on the supplier side as a content studio, in which case it's all around product development and understanding that future audience and creating products and games that are appealing to those people. And from an operator side, it's about solving some of the technology issues. So Amy, absolutely agree there that customer experience is absolutely critical, but we see lots of people that are really motivated to do good things in customer experience, but actually the technology holds them back, or sometimes even just the processes internally around data and how they've got plenty of data, but they're not really doing anything with it that improves the end-to-end customer experience, and that really goes all the way back to the integrations. And so, if they can spend some more time, if both parties could spend some more time on standardization of interface, APIs and talking to each other, that would help a lot in terms of improving that customer experience. And it would also help with things like personalization and those elements that we were talking about before. There'd be a lot more opportunity. It's just ever so complex technically,
Absolutely, my goodness. Well, we live in a world of fast-moving technology, APIs, 5G, streamers, influencers, traditional games, next-level advanced video games. It's very, very exciting times, but that is, I'm afraid, all the time we have. So, ladies and gentlemen, please join me in thanking our fantastic panelists, Kieran McLean, Amy Casson-Hughes, Andy Rogers, and Simon Hammond. Thank you so much all for joining us.
We're done, buddy.
Awesome.
Yeah.
Awesome.
Ideas start with an impulse. A desire of a notion. That unstoppable urge to create something extraordinary. Your project started. iPoint International.
ladies and gents, there's a very important session coming up. I think diversity is perhaps the biggest opportunity that any business can embrace in 2021 and beyond. I'll tell you why. I interviewed a very brilliant guy in the financial markets. He works for a VC called Tony Fish, and he said the thing about boardrooms that all look the same is that they say, hey, does this look okay to you guys? And the guys look back at the guys who look like them and they say, yeah, we don't see any problems. Because you need a diversity of viewpoints to see the thing that is going to bite you on the ass and destroy your business. You need a diversity of viewpoints. You need that 360 diversity of gender, of neurodiversity, of age, of experience. A diverse boardroom is a healthy boardroom. And really, this is my key recommendation out of everything. Now, we are going to have a presentation very shortly about nurturing diversity to build success. I can't stress how important it is. We're going to show a video and then I'm going to introduce our amazing speaker. Awesome. So, ladies and gentlemen, you're going to learn how your company culture can help you exceed your financial targets. And our next speaker is going to inspire you with the importance of diversity and inclusion and how to work with it proactively and not just as a fancy bit of paper. Actually operationalize it, make it power your business. She's going to cover studies. She's going to give you some hand-on tools that you can implement and really make a difference. So I really recommend you pay attention, you take it on board. But first, give a warm iGaming Next Valletta welcome to the Chief People Officer at Quickspin, the award-winning Sandra Lindberg. Thank you.
Thanks for that nice introduction. I would like to start with saying congratulations to some specific people here in the audience. Everyone named Johan. There must be some of you here. Congratulations to you. Let's give an applause. I would also like to say that I'm sorry to every woman here, and I mean all of you, because did you know this? There are actually more people named Johan holding a CEO position in a publicly listed company than all women together. And this is in Sweden. Did you also know that Sweden is one of the world's most gender diverse countries in the world? Iceland is on top and Sweden is top 3 in the world. I'm Sandra Lindberg and I'm the Chief People Officer at Quickspin. And today I will speak about diversity. And I want it to be on all of your top agendas when you leave this room. I'm not a scientist. I don't have all the answers, but I will share my findings. I will share my passion, because it's about taking it from a fancy paper product to actually implement it in the organization so it really makes a difference. And I will tell you a little bit how we work at Quickspin in order to succeed in this area. But let's start from the beginning. According to a Gartner report, 75% of all organizations that have a proven diverse workforce will exceed their financial targets in 2022. Deloitte did a study, and it shows that you increase innovation with 20% by having a diverse team. And it also showed that by having different mindset, personalities, and skill sets, you can identify and reduce risk with 30%. So this is quite high numbers. And I would say it's proven, it proves the importance of diversity. Let's stick with the why for a while. Why do we need to work with diversity? And why are these numbers affected so much by just diversity? For me, it's quite simple. As long as there are more Johans, holding a CEO position, then all women together, we need to continue to shout about this. So I believe it's the moral thing to do. But if that's not enough, by having different skill sets, personalities, experience, you can increase your spectra on taking decisions, solving problems, and making decisions you want to move forward. And you can also, by having a diverse team, understand your buyer and customer base in a better way, which means that you can target and understand your audience much better, because we're all very different. Attract talent. Talent, the best topic I know to speak about. I believe that if you have a range of skills, it will boost your learning within your organization, and that is the very key for you to stay competitive as an employer. But it will also be a key factor for you to actually attract talent to your company. And I will speak about that in a while. All research, and this together, and many other things, actually shows that you increase revenues by having a diverse workforce. Now, working with diversity is not something new, and it has happened a lot in our industry. But has everyone succeeded? Check out this picture. No, not let's check out this picture. Let's talk about talents for a while. So talents, you have all heard about the word gig economy, right? People are not into this lifelong employment anymore. Talents, the new generation of talents, the millenniums, generation X, Y, Z, they are choosing their employment and their assignment very wisely now these days. They're in for a ride and they want to make a difference while working. And working with CSR, corporate social responsibility, is not something that you can ignore anymore as an employer. You need to show progress in how you contribute to a society. And if you want to have people on board making a difference in your organization, diversity is the very key to that. Now let's take a look at this picture. What do you see? You may have seen this picture in other shapes and forms before, but this one here is 3 people watching the legendary ice hockey tournament that Quickspin arrange every normal year here in Malta. You could say that it's a small, diverse team here. From an organizational perspective, every one of them have got the same setup and service to watch this game. However, if you would ask them the experience of the game or how they would do something differently, I think that the answer would differ between them. But it's an equal setup. However, giving people the exact same thing only works if we start from the same place. What if we do like this instead? Before enjoying equality, we must first make sure that everyone accesses the same opportunity. And for me, this is inclusion. Or maybe taking it even further, belonging. Part of the problem with diversity and inclusion is that they are often so lumped together that they are assumed to be the same thing, but that is not the case. In the world of the organization, diversity equals quantity. But without inclusion, the crucial connections that attract talents, encourage their participation, foster innovation, and lead to business growth will not happen. So the goal here should not just be to have a diverse talent pool within your team. It should be that leaders strive to create an environment where they not only attract talent, but also retain them. Because quantity or number of people is just one piece of the puzzle. I see it like this. I think it's a great quote, and I wish I was the one writing it. But what will make all the difference here is that if you let people join the dance. You could even argue that just adding a bunch of different people to your team, but not listening to them, not letting them take decisions, or inviting them to, being heard, being seen, it will be a very lame party. At Quickspin, working for a sense of belonging is the very core of our culture. We foster a transparent and inclusive workplace, where the route from an idea to execution should be as short as possible. It should be a flat organization, because we think that everyone should take decisions. It's not one-man show. And taking decisions, in order for this to happen in our organization, we have celebrated when we have taken decisions and failed, because we rather take decisions and fail, learn from it, and move forward, than not taking decisions at all. And working with an inclusive workplace as an organization needs to come from everyone. So everyone needs to be included. So how do we make people dance? I've written down 3 things that I think is a good foundation to start or to continue with in order to succeed with your work. I know that audits may not be the word that you think about when dancing, but lack of diversity may point to other problems with inclusion. Because it's nice to say that your company is represented by X amount of women, for example, but if they are leaving within a year, this points to other problems. So you need to start having audience to understand your current mode. It could be around compensation, salary, promotions, reasons for termination, to name a few. Everyone that works within sales knows that having goals, measuring KPIs, and following progress is super important, and it's equally important while working with diversity. The importance of listening cannot be overstated, but without taking actions on the things that you hear is not helpful. So once you have done a climate check on your company culture, you will see problems or areas that you need to improve, and you need to set up a target in how to get there. The last one is dialogue. And it's crucial for an organization to have channels where people can voice their matter. It could be having an anonymous suggestion box or scheduling listening sessions, so people can express what they feel, experience. Most of the time, leaders are today completely clueless about what the employees are feeling or experience during the day. And opening up channels for communication is the first step towards change. Quickspin is also working with these pillars, and I want to show you how it looks at our place. Today we have 0 gender pay gap among all departments and all sites. The purpose of doing this audit is to detect, prevent, and remedy unequal pay gap between men and women who perform equal work. Because at the end of the day, we all get paid for the work we do, and it should really be equal, independent of your gender. It's a legal requirement to do this audit in Sweden, but we have taken it further to include not only Sweden, but all sites and all employees, because obviously this is not just a thing for Sweden. Our target is very simple. There should be no gender pay gap whatsoever. And to be completely honest, I think this one is the easiest thing to fix, because you just need to look at your data and open your wallet. So we have made sure that we have equal pay among our employees. But we have also created a diversity plan with 6 areas where we focus on where we know that there could be discrimination going on. And we know that we can fall into being biased. So if we have a process and routine with someone in charge driving, leading, and following up our work, we probably make progress in a better way. Today, we have a process for recruitment because it always starts from the beginning. You can avoid having a biased recruitment by having a clear setup and policy and process for it. Compensation, for us, it's very simple. It should be equal, independent of your gender, religion, so on. Work environment. Having psychological safety is one way of actually making people to allow their voice with their work environment, so they can adjust how they work and be included in a better way. And I think this pandemic has shown that now companies are actually opening up for a more flexible work life, offering hybrid mode, for example. Because we know that we are different. We have different needs, and we have different possibilities. So if we are in an inclusive work environment, that means that we need to look at different people, adjusting it, so we all could have a good work environment from our needs. Harassment at work. This is about respecting each other's differences, and where you feel safe and included in your day-to-day work. There should really be no harassment going on. I believe everyone in this room have probably seen unjustified promotions in your current employer or previous ones. But having the opportunity to grow is equal to everyone, and we have a career strategy that is unbiased and let everyone have access to the same opportunity to grow. We also focus on being a parent-friendly workplace because we believe that being a parent and continue to have a professional career is doable. But we are supporting it with different benefits and setup based on your needs. The last one, creating a dialogue. So we have equal pay and we have target, but we also need to include everyone in the work that we do. So 52 times, meaning every week of the year, we use something called pulse surveys to ask questions to all our employees. We do this through a digital employee experience tool. Among other features, we have a real-time, up-to-date temperature, how our organization is feeling. And this is about the changes that we do, or the culture that we have, or the project people are in. We can measure everything in this. By having weekly temperature checks and surveys, we ask everyone a couple of questions each week. And compare that to when we have once a year employee survey. Maybe you do it in February, and then it takes 1.5 months until everyone has completed it, because you need to hunt them down in order to answer this survey. And then you have a result in maybe end of March, and you look at the data during April, you decide that this is the action that we will take, and in May you start implementing changes. We know that in this industry, things are moving fast. So the things that you do in May, is that even accurate from the things that you asked in February? Instead, working on a weekly basis, you can address the issues that you have immediately and solve them. In here, we also ask people to voice any concerns or joy. And this is anonymous because we know that people sometimes need to say stuff without exposure their names. We can also look at team adjustments, because being a diverse team means that it's not the same for everyone. Sometimes a team is on top of the world, but another one is struggling heavily in a project. So by looking at our data, we can say, okay, how can we learn from that team and build that to the team that actually is struggling? So it's not just one company, even though we are, but we can go down to team level, even on individual level, to make adjustments. I think this one is super important because being transparent is one important thing of being an inclusive workplace. All data in here is transparent, except from the anonymous chats, of course, because we know that this is something that we all need to work with in order to succeed. We have strategic goals that goes down to team and individual level, because we also know that if you see that your work is actually contributing to the overall goals, you will most likely be more motivated to perform your job. And you see that you make a difference in your organization. And we praise each other here, because it's very nice to hear that you're doing a great job. We talk about this on follow-ups, culture groups, all hands, team meetings, one-on-ones, because this is not an HR topic. Working with inclusion and belonging is something that everyone needs to participate in. There's a lot of these tools out there, but you have to start being bold and ask your employees. And you have to be ready to respond to the questions and the problems that arise. And you need to act on them. So to summarize, creating inclusion and belonging can only be present by having a culture that allows people to be heard, where people can feel that they can influence, and when they feel included in the work you do, and that they agree on the company goals that you have. Where it's safe for you to express your feelings, where you are respected for who you are, and where you have the opportunity to grow. In September, Quickspin was rewarded with the Company of the Year award at the Women in Gaming Diversity Award in London. And to be honest, I can't think of any other prize I'd rather win. This was the motivation from the jury. We were rewarded with the Company of the Year award because we focus on inclusion by, for example, welcoming our co-workers as family. We create different opportunities for having a diverse workplace by, for example, offering equal pay, among other benefits. They also applaud us for our recruitment policy because it's outlined as fair, equal, and open to all. So we have done a lot at Quickspin. We are not done, and I hope that you will never hear a company saying they are done in this subject, because they will never be. But at Quickspin, we do it with the strong belief that inclusion and belonging is the key to our success. That's it for me. Thank you for listening. I will be in the Quickspin booth later if you want to have a chat.
Wonderful. Tack så mycket, Sandra. Absolutely brilliant presentation there.
Thank you.
Excellent, excellent. Thank you so much. Okay, folks, I don't know about you, but I just got a very interesting text message. Let's see who it's from. It is from, Invest Next. And this text message says, the Invest Next Sidetrack Conference is about to begin in the Michelangelo Grima Hall. The agenda is focusing on future investment opportunities in the industry. To get to the Sidetrack Conference, just head up to the end of the stairs, follow the signage. You are all very, very welcome. And if you're lucky enough to get this text message like me, there's a little link to download the full agenda. Okay, we're just going to have a quick break now. We are going to be back at 12:25 with a panel that is all about sustainable business resilience. Is it a new investing mindset or the end of the industry? Oh my goodness. Okay, I know which one I hope it is. I'm going to be watching that with great interest. I'll see you in a few minutes. Make sure to network, use the hashtag, make some friends, do some business, and be back here in a few minutes. Enjoy.
When we in your town, we funk it around. When we in your town, yeah, we funk it around. When we in your town, yeah, we funk it around. When we in your town, yeah, we funk it around. When we in your town, yeah, we funk it around. When we
Okay, welcome back. Hey, great to see so many of you here. We're going to move on to one of my very favorite topics, sustainability, and in particular, ESG. Because you're here, I imagine you're all very familiar with what ESG stands for, what it means, and what it means to your business. But we're going to now have a deep dive into the whole area. Did you know that if a company director kind of messes up on the ESG metrics, if it's a commitment that they've made a promise to, and they miss their targets, in the UK at least, that company director can be thrown in prison. I don't know if it's happened, but the law is there. This is not greenwashing. This is not just fluffy tree-hugging stuff. This is serious legal frameworks that everybody needs to be aware about. So I'm really, really delighted to welcome our trio of fantastic experts. Actually, it's a quartet of fantastic experts onto the stage. And I'm going to welcome first our moderator, and I would love for you to give him a huge round of applause because this is a very important topic. So folks, ladies and gentlemen, please give a warm iGaming Next Valletta welcome to the Director of Clear Concise Media. Please welcome Scott Longley.
Nice. Hi everyone. Elizabeth, do you want to come on the stage? We have Elizabeth Hoost from Aspire Global, and I believe on video chat. So there we go. We have Anna Jain from Sustainability Manager from Kindred Group, and we have Kelly Perry from Edison Investment. Hi Kelly. Hi Anna. Hopefully the music will stop at some point. Right. I'm going to use my phone because I have my notes on my phone. I'm not checking WhatsApp. Hi Elizabeth, hi everyone. Let's get into the meat of ESG. I think the title of this session is somewhat misleading. I think the end of the industry. I don't think just going by ESG or not going by ESG is going to kill us. But Kelly, maybe if you could just kick off with introduce who you are. First of all, and then maybe just do a kind of a brief overview of ESG generally, and then we'll get into the meat of how it affects the gambling sector.
Yeah, sure. Thank you so much for having me on the panel today. I'm really excited to be here and be able to share with your audience some of the sort of key topics that are going on in the ESG space. I work for Edison Research Group, based out of London. I head up the ESG franchise for Edison. We're focused on helping companies communicate their ESG strategy effectively with stakeholder groups, specifically investors. I'm ex-London Stock Exchange, and I've been with Edison this year. I'm a pandemic hire. And then in terms of just having a quick overview of ESG, these three letters have been bundled together over the last few years and have come to the surface quite quickly. Obviously, environmental components have driven this for many years. This is not new information. The environmental component and sort of Paris alignment has been around for many, many years, decades even. But actually what we've seen is the social side become a lot more important over the last couple of years due to the pandemic, and we can delve into that a little bit later. But a good governance structure is core to a listed business, and should be at the core of any business looking to get investor engagement. So these three ESGs have been bundled together. Will this label stay? I don't know. But in terms of having good corporate governance, good approach to your social side, and good approach to your environmental commitments is key. And we're here today to talk about what it is investors are looking at, and how companies are responding to the investor inquiries. But also, more importantly, I think it's just what it's doing to this industry. And I kind of agree. I don't think sort of will the industry die. I think that's a little bit dramatic. But yeah, we're definitely here to discuss, what is the changing environment around this space.
Yeah, we'll come to the environmental side later, Elizabeth. But the most important, from it seems to be anyway, that we've had discussion like this before, and the most important factors from ESG that affect gambling sector would arguably be the S and the G, which is the social and the governance. Could you explain perhaps some of what investors are looking at in those areas and how that relates to the gambling sector?
I think if we subscribe or describe sustainability in one sentence, it would be how do we minimize our negative impact on society, and then in additionally, how do we contribute positively. So when we look at this, it's the creation of a safe user experience in terms of responsible gambling is still like the single and most important responsibility for our industry, because having that at the heart and creating like long-term profits while creating that sustainable framework, that's going to be the companies that they're in the long run. But I would see social as being divided in external factors, like they have responsible gaming, responsible marketing, and then there's also the internal topics, which are more related to how you treat your people, the training you give them, the diversity we just spoke about, and other kind of topics.
So the responsible gambling area is clearly what most people would understand as being where a governance or a social aspect hits the industry. And we've got Anna here from Kindred, and Kindred most clearly have gone very public with a zero harm strategy when it comes to gambling. We'll come on to some issues around that, but could you explain maybe the background to that for a start, and explain how the company came up with this as its way of tackling the issue?
Yeah, definitely. I mean, it's as Lisbeth just mentioned, responsible gambling is obviously one of the most material aspects for us as an industry. When we talk about being a sustainable company, we learned years ago that being transparent about our business model, being transparent about our ambitions is really important. Also, when we talk to investors, we need to do a lot of education or informing about how we operate. And one of the things we found was that it was really hard for us to be fact-based, which always makes dialogue easier, right? So that's why we started looking into this. Some years ago, we set out the ambition. I think it's now 2 or 3 years ago that we set the ambition for 2023. It took us a long time to find the right definition, to make sure it was verified and validated by experts in the field, because we know that to have a constructive dialogue, that's fact-based, that's proof, that's not just greenwashing or talking. So that's how we kind of got to this, and it was through having very direct dialogue with, for example, investors, but also other that we kind of came to that point.
Okay, and you might want to try and sort out something about your microphone, because we can't hear an awful lot this end of what you were saying. Closer. So apologies about that. Kelly, when it comes to the responsible gambling, and as far as investors are concerned, what is it that they're looking at, and an initiative like a zero harm initiative from the likes of Kindred, how does that play out when it comes to how investors view the sector?
Yeah, this is a really important question. Obviously, as we all know, the investor engagement piece with companies is increasingly important to ensure that you stay relevant and that you stay transparent about what you're doing as a business. And the investors are getting increasing pressure from their client base, of their pension funds, the asset owners, and they're also getting directives from policies and regulations that are changing and developing. So really the drive that is being pushed through to the investors onto the companies. So what are they looking at? What are the investors looking at? So we've already mentioned the environmental side is probably not the biggest part of the agenda. It certainly shouldn't be ignored, but it's not the biggest agenda. They will look at things like energy management, for example, and total energy consumed, and what percentage of the grid is electricity, and what percentage of the energy is renewable. So they will be looking at environmental, so it's not to be overlooked. But you're absolutely right in thinking about some of the other areas of importance. So that is sort of employee health and safety. They're going to be looking at, for example, this is beyond iGaming, this is into casinos, like a smoke-free environment, etc. Investors will be looking at business ethics on the governance side. So that's going to be sort of companies' internal controls around money laundering, for example, and policies and practices that they've built around this. But the key thing I think we've already touched on here is the consumer welfare, and to see and investors are keen to see the disclosureship around responsible gaming. So looking for disclosures on the facilities and how much of the responsible gaming index is implemented. They'll be looking at things like the alignment with the National Council of Problem Gambling and Internet Responsible Gambling Standards. These are all really important frameworks for companies to be aligned to. So yes, environmental is not the leading and championing sort of the iGaming and gambling space, but it's definitely shouldn't be overlooked. And it's really consumer welfare that, you know, disclosureship, transparency, communication, and getting that message across.
Now, Elizabeth, you're obviously part of Aspire Global. Aspire Global has effectively just divested itself of its B2C operations, but it still has obviously a huge B2B business. And we were discussing it just before we came on stage. Clearly, that doesn't mean you then devolve yourselves of responsibility for what happens in terms of potential harm to the consumer. Could you explain how maybe ESG affects B2B companies as much as B2C?
Yes, when you have your own proprietary brands or you are a supplier to operators, you still carry that responsibility, because in the end you deal with the end users maybe one step down the line. And also a B2B platform like Aspire has a lot of managed services, so we deal directly with end users as well. And I don't think there is ever a good reason for not thinking that sustainability doesn't affect your business, because you might be too far away, because that whole value chain and looking into like how do you select your suppliers, how do you select your partners, that's very important here. And to connect also to what Kelly said about environment versus social and how is it measured, I think there has been such a large focus on environment globally, not specifically on our industry, because it's so easy to measure. You can measure exactly your CO2, you can see how you can reduce it, you can offset it. There's the laws in place now that demand you to do that by 2050. But when it comes to social, it's much more qualitative. We need to find our own frameworks, how to do it. And I admire Kindred for having putting numbers on it in terms of revenue and harmful gambling. I think that's a good step we see ahead. Like, how can we measure and we can show externally that we are improving towards our investors? In the end of the day, investors want to see how we are aware of risks out there and how we are replying and responding to those.
Yeah. It was mentioned on the first panel today about in relation to the SPTech acquisition by DraftKings, and what has clearly happened there is that there is now a legal action related to information disclosed in that about SPTech's previous operations or current operations in other territories outside of the US. And I'm interested in whether investors are waking up to, more clearly waking up because of the US, to the situation with regard to regulation and how it affects aspects of ESG, and particularly in terms of social and the governance aspects. Could you maybe go into some of the problems there?
I think over the last decade, sustainability has risen so much, and investors are looking more and more. And indeed, the Hindenburg research related to DraftKings SPTech takeover, and now the law cases that coming there because they said like there are black operations and they have not been properly involved. So I think this starts from sustainability from the top of your company. What is your vision? What is your mission? You want to focus on regulated market, nearly regulated markets. And if you can be transparent about that in sustainability and annual reporting, that would be a very good point to your investors too. Yes.
Anna, not to bring up a sore point of the Netherlands, but we have to talk about it, I guess. Kindred obviously has made a decision about the Netherlands quite late, in terms of literally waiting for the day of the newly regulated regime to say it was stopping operations. And that clearly hurt the share price, and presumably it would have hurt the investor perception of the company at that point. So what is your response when it comes to issues around regulation, and not to put you on the spot, but what is the company's response in situations like that? What does it say to investors? How can it explain its position when it comes to regulation?
I think, that's been a long journey since 11, 12, 13 years ago when we regulated started, and we decided that we wanted to be going towards that kind of a business that goes for local regulations. It's something we've reported continuously for many years as one of our ambitions to see how much revenue we get from re-regulated markets. It's not been a secret or a surprise about Netherlands. And it's something we talk with investors about very, very openly, I'd say. So, yeah, we saw it in the share price, but also fairly quickly, not recovered entirely, but stabilized. Because we are, I would say, as transparent as we can, company engage in those dialogues with our shareholders. And just to reiterate, with the Netherlands, again, it's also been a pretty crucial point to say, well, we have a sustainability platform, we have a very clear ambitions and targets that are externally audited, but again, it's not just talking the talk, but actually proving where we are, which is also something regulators, similarly to investors, ask us for. Always a key part of the dialogue we have with stakeholders, regulators.
Again, I think we're having slight problems with your microphone there, Anna. Kelly,
Okay.
Kelly, just on the issue of regulation and investors' attitudes towards regulation, or investors' attitudes more to the point to the companies and how they regulate, how they view regulation. Is that changing? Is that something that's now higher up the agenda than it was, partly because maybe of the US, or just generally because of it's now become a much more hotter topic?
I think it's probably a combination of both. I think what we need to, I think it's important to look at, when you're looking at sort of ESG from a global perspective, it's really hard not to separate it out into continents and how different continents are performing either better or are more advanced. If you have a quick look at the US, there's a lot of change happening to sort of the administration. The SEC's climate commitments are evolving and developing. They work on a state-by-state frameworks almost. And so they're ramping up for sure, but it's without doubt that the European market is definitely ahead of the curve with its policies, its regulations, with them shifting from from a disclosureship perspective to a mandatory disclosureship perspective. This is becoming increasingly important, that the mandatory behaviours of the financial market participants means that investors, as well as other sort of financial market participants, definitely need to be changing their mindsets if they're not already. We're seeing a lot of movement in assets under management towards sustainable funds, towards sustainable investing, towards businesses that are demonstrating their sustainability strategy. We're seeing a lot of, there's a lot of evidence that this is the direction of travel for capital markets. Yes, I think it's a mindset shift for sure. I think it's not going to happen overnight. I think we're going to see more and more of the financial markets get on board, if you will. But the direction of travel for capital markets is certainly towards a sustainable future, and that really does impress on companies. And it's definitely, you're absolutely right, Scott, it's driven by sort of regulatory changes that are coming through. And I'm excited to hear what comes out of COP26, something more, hopefully more solid and structured around this as well.
Thank you. Elizabeth, we were talking about investors. Could you explain maybe who we're talking about and what kind of institutions we're talking about here, and what they're invested in, what their goals are when they invest in a company such as Aspire or any of the other listed companies?
Yes, so you have the more institutional investors that are investing in funds, pension funds, and you have the more retail investors. And you see more and more teamed investors as well, especially in the US. You have certain ETFs that look at the whole iGaming industry to invest in a certain portfolio. So there's different kind of investors out there. And it might be that institutional investors are more strict on whether they can invest in companies like gambling, alcohol, tobacco. They have the policies and they might apply negative screening. But there are those institutional investors that really look at your company and see how is their sustainability strategy formed, and if they feel like they are doing the right thing, then they can still invest and they can still decide to keep on investing in you. So this is really interesting. And on top of what we're talking about regulation, I feel social responsibility is something that the company needs to take seriously, because if not, you might put your license in jeopardy, which is not sustainable in the short or the long run. And having compliance at the heart of your company, it makes it easier for you to enter new markets, because the cross-jurisdictional compliance is already integrated in your tech, your organization, and your whole structure. And if you develop that thinking a bit further, if you incorporate a level of DNA, of sustainability DNA, then that's where the real strong performance comes towards financial markets.
I guess one of the reactions to general reactions about the idea of gambling in ESG is that people think, well, we're a sin stock along with tobacco and alcohol, and therefore we don't have to worry about what perceptions of investors in that sense. But that, Kelly, I'm interested maybe in a read across to the tobacco sector, but that presumably sustainability is important to the tobacco sector. It is a sin stock and it causes harm, clearly. But those companies are still listed, they still have investors, they still have to please their investors. Could you explain maybe what seems to be a slight dichotomy, that you have a sin stock, but then you have to worry about ESG as well?
Yeah, I think this is a really good topic, and actually we could probably spend another good hour on this.
Yeah.
But just let's try and be punchy. But I think, what Lisbeth was saying earlier around the different types of investors, she was sort of going across the asset classes and passive and active funds. Within the sort of institutional environment, the active funds, you've then also got another scale of investors, and that's across sort of the traditional investor community who are looking at traditional active investing, right? So they're only going to focus on financial metrics, and they're going to be looking for financial return only. Those businesses still exist and will continue to exist for the short term, for sure. But then you'll go through the sort of responsible and ethical investing, which, to your point, is around screening. So these active investors are going to be adopting their own methodologies on how to look at companies and what they should be including in their portfolios. And those sort of responsible ethical investors are looking at negative screening, for example. They are looking at tobacco, they are looking at gambling and oil and gas, and potentially ruling them out. But that doesn't mean that a company can't do the right approaches to their sustainability strategy to still be considered from the responsible ethical investing community of investors. And as you go along the scale of investors, like the ESG investing and integration, they are still looking at competitive financial return. There's no getting away from it, as well as sustainability, the same as responsible and ethical investors. But it's when you get to the other end of the scale, where you're looking at maybe more impact-only investors and philanthropy. That's, this industry, this sin stock industry, will be screened out for sure. But I think this goes back to the title of this actual panel today. If there is still investment to be made, whether it's on sort of a traditional level and still looking for competitive financial returns, but if you want to be considered more for sort of the responsible investing space, it's about disclosure, it's about communication, and it's about being transparent. So tobacco's not going away, alcohol's not going away, gambling's not going away, and if it does, it's going to go underground and it becomes a bigger problem. So actually what it's about is addressing the sustainability issues and how you run your business, and how and particularly the consumer welfare in this particular space.
Yeah. And I suppose one of the things that people sometimes forget, and we've discussed this previously on a panel, is that ESG doesn't just speak outwardly; it also speaks inwardly. That there's an aspect of this is talking to people within companies about how they grow and how they are going to grow and how they're going to treat people who work for them. How to what extent is that now becoming a driver as well when it comes to how companies view ESG as an internal thing, not just an external?
Very important. I think, the previous panel, if you were here, that is about diversity. That is ESG as well. If your company focuses on sustainability and puts it in their mission and their whole strategy, that's a reason for having that competitive advantage on the recruitment market. Because it's more likely than not, if you want to get the top performers out there, that they do care about your attitude towards your customers, but also towards society, and they have choice. So it's very important at the moment.
Anna, do you think that your kind of the zero harm idea is as much aimed at your own internal audience, that you're trying to tell people, you're explaining to people within the company about the importance of moves that you make?
Yeah, absolutely. I'm trying with a headset now. I hope that
Great.
that
That's
works better.
That's much better. Thank you.
Okay, good. No, absolutely. It's what we've seen is once we actually set this ambition and we set some very clear numbers behind it, we got huge engagement, not just externally but also internally. It's much easier for people to understand and to get behind then that we have a shared ambition here across teams, across markets. So we're looking now actually to see if we can expand a little bit and have set some more of these very tangible ambitions across our sustainability framework, because it is definitely internally and externally, it really drives engagement and makes it much easier to get involved.
That's great.
In
So,
that ambition.
how do you kind of advertise that fact internally? What is it that you do to ensure that people understand what you're doing and what the aims are, and what is the communication on that?
So we obviously have internal communications in our company updates, in our newsletters, in our shared intranet. But what we've also done is to actually start saying, well, all employees were on a bonus plan. Part of that bonus plan is measured on our sustainability efforts. So we have a sustainability index that is built for employee bonus plans. Makes it much easier again for employees to see how they contribute to our overall sustainability framework and progress. So we try to have different elements to kind of support employees in seeing how they can contribute to our framework. And then that's very high level. We have lower level as well, which is much more around community engagement. How can we support our communities? Employees have some days they can take off every year and very actively go and contribute with their resource and knowledge. So there are different aspects to this where we try to have employee engagement.
Yes, I totally agree, and I think it starts from the moment where you recruit the person. Is your HR asking a sustainability question in there, and it comes down again to what people you want to work for you. Do you want people that squeeze the customer as quickly as possible, or really think along how can we operate in a way that we have sustainable players for a long term and not just a short term. We want to retain them, and I think this is sustainable business operations and the mindset that you want your employees to carry. And it's also an important part at the induction of your company to explain like what are we doing and continuously keep them updated with different kind of training and management meetings. Be involved, very involved in. I think our jobs as sustainability managers is a lot about communication.
This is, I guess, what we're talking about when you look at an annual report from a listed company. This is kind of a huge, thick section which deals with issues around pay and remuneration for directors and the rest. Kelly, these are really important subjects. This is probably the governance aspect, but it is really important, isn't it, that companies, that the pay structure is right, that the bonus structure is right. This is where companies actually have got, particularly in the UK listed sector, companies have got caught out previously.
Yeah, look, I think the sort of governance structure is really key. I think we mentioned sort of around sort of business ethics before and sort of companies' internal controls around that, including sort of the policies and practices they've been putting around sort of money laundering and stuff. I think all of this is really key, but actually you focused on a point in your question around how to get that message across, and this can come across in the annual report, but what you don't want it to do is get lost in the annual report. The annual reports can be quite lengthy. The sustainability reports can be quite lengthy. So actually, it's that materiality, it's that those governance materialities that need to come to the surface. So just making sure that businesses are aware of what is materially relevant, aware of what metrics need to be disclosed on, and bringing that to the surface. And that can be through, so it can be through the annual report, but you don't want to get in lost. It can be through sustainability reports, but again, it could be lost because a lot of sustainability reports are huge now. So, the key message here is making sure materiality around governance, around other components of the pillars, the E and the S, is really at the surface. So maybe building your own ESG report and communicating that effectively. You really, we're trying to get the message across. We're trying to help that stakeholder group understand your business better, understand your sustainability strategy better, and you need to be able to control the narrative as a business. So, I think there's probably some frustrations around rating agencies that don't allow companies to control the narrative of the sustainability strategy, but it's really key that materiality, narrative control, and transparency and communication comes across effectively, and that does include the governance side as well. That is relevant to this sector.
Kelly, how do you? We're getting close towards the end. How would you sum up where we're going to be heading with this? What can you envisage in terms of what companies will be having to think about in the next 5 years, for instance, as listed entities?
My crystal ball.
Yeah.
And if I know that, I'd probably be very rich. But I think
we assumed you're very rich already, to be honest with you, Kelly. But
if only. It's Kelly Perry, not Katy Perry, just to be clear. Don't have her fun. Anyway, so the point is, I think, capital markets is developing. What we're seeing is the growth in AUMs. We're seeing that continue. The expectations of AUMs in assets around ESG are growing. We identified something that 80% of investors now are integrating ESG considerations into their portfolio decision making. We're seeing the development of the broader stakeholder group. Stakeholder capitalism is growing and it's important. That includes the employees. We've seen many different movements across the globe over the last 2, 3, 4 years. So it's recognising the development and shift towards people, planet, and having an importance in that. So the direction of travel from a capital markets perspective is growing AUMs. And growing stakeholder capitalism. And I think, now's the time. So now's the time to start looking at what you're doing if you're not addressing a sustainability strategy. Now's the time, because I think Anna and Lisbeth can attest to this doesn't happen overnight. It doesn't take 6 months to build a sort of sustainability strategy, implement it into the operations of the business and disclose on that. This is years of work, detailed work, lengthy work, frameworks, questionnaires, etc. And so on. So choose a lane, stick in it, and start heading in the right direction towards sustainability.
That's great. Anna, if in that sense of sticking in your lane, what's the biggest problems? What are the things that you think you can foresee as endangering the attempts from Kindred? What are the things that you have in your risks? Your kind of risk looking forward at what risks are coming up.
One of the things we talk a lot about now, and we touched upon it in this panel as well, is very much around the industry perception, and we talk about thin stocks and kind of where we're heading with that. And I think with regulations we've seen, it's just impacted the perception of the industry to an extreme we probably didn't see coming 10 years ago. So that's something we're working a lot on, is just to what Kelly just said now. How can we communicate very clearly how we operate and be transparent about our business model, and to what Lisbeth said, that we're here for the long run. We're not here to extract value very short term, and how do we propose we can build an industry that is sustainable in the long run and is still here in 10, 20, 30 years.
Yeah.
Yeah.
And Elizabeth, a final word from you. I mean, you're in a company, you're in a sector which changes a lot. Your company is part of that. It's changed, things change happens. How do you respond to that? And what do you think in terms of what the area that you control? How much is that going to grow, do you think, in the next few years?
Yes, it's setting goals, targets, KPIs on those goals and targets, and then it's about small incremental steps, but in the end you make a large progress. And once your company is having that in its mission and is headed towards that, it needs to be carried from the top. It's not just me doing this job. It's the board. We have a sustainability committee. It's really the top of the company wants to be a sustainable company, and we're working towards that. And this is a great challenge for me, and I think overall we want to work together as an industry, speak more with a common voice, address all the materiality topics more powerful, and here we can improve as well. But I'm really happy to meet all the sustainability colleagues and get the discussion going and see how we can step it up.
Thanks very much for everyone. Kelly, I'll see you in a couple of weeks at the Reputation Matters event in London. Hopefully we'll see you in person. Anna, thank you very much for your time, and thank you for sorting out your microphone at some point. And Elizabeth, thanks very much. That's great. Thank you, everyone.
Thank you. Bye.
Thanks, everyone. Thank you.
Wonderful, wonderful stuff. Thank you so much. You heard it there. The time to act is now. The time is now for ESG. And to be brutally frank, there is no iGaming on a dead planet. So one of the most important topics we could possibly learn about. Okay, a couple of announcements before I tell you who's going to join us for our next session. Announcement number one, lunch is being served until 3 o'clock, courtesy of the lovely people at Ames. The logo is on the sandwiches. I'm going to enjoy this quite soon. Announcement number two, we have our investment deep dive side event here, and I'm going to tell you more about it. All of you who've registered your mobile number should have a text message from Invest Next. And the Invest Next Sidetrack Conference is now in session in the Michelangelo Grima Hall. And the agenda is focused on future investment opportunities in the industry. I just one more time want to give a special shout to our speakers who just joined us here. We had Kelly Perry, the Director and Head of ESG Client Solutions at Edison Group, because she was such a last-minute rock star guest. We didn't have time to put her name up on the slides there. Alongside Anna Jane, Elizabeth Ost, and our wonderful host, Scott Longley. Okay, so folks, we are going to be back very, very soon. We're going to have like a 3-minute break for you to do some networking, to share some business cards, to make some new friends, do some business, do some deals. You know, 3 minutes, that's lots of time, okay? It's iGaming, it moves fast. Coming back in about 2 or 3 minutes' time, we've got a fantastic guest who's going to do a big reveal from a company I'm sure you're all familiar with, very innovative company called Fast Track. This man has lived in Malta for 12 years, very much part of the industry here, and he's going to share with you a big reveal from Fast Track that could potentially change the iGaming player experience forever. I'm really looking forward to it. I don't know what that reveal is. There's a bit of suspense there. So ladies and gents, I'll be back to welcome Simon Liston in a few minutes, but enjoy yourselves. Enjoy these 2 minutes of peace. Meditate, do some business, have some fun. Thank you. all of our sponsors, and we hope you visit them, you go and have a chat with them in the exhibition hall, and generally make some good friends with them because they're great people. They're part of the iGaming Next ecosystem. Okay, so we have a very exciting session for you next. 6 years ago, Fast Track had a dream that it is now able to deliver on. At iGaming Next, right here, right now, their co-founder, Simon Lidson, is going to introduce Fast Track's next game-changing product, one that overcomes technological barriers that have held the iGaming business back for years. This reveal starts the countdown towards the industry's first self-learning platform. Are you ready? Excellent. Now is the time for Fast Track's big reveal, and we are going to learn how the player experience is going to change forever. So ladies and gentlemen, this is an exciting presentation. Please welcome to the stage the co-founder of Fast Track, Simon Lidson.
This is Amanda. Amanda works with me at Fast Track, and she's actually sitting here, right in front. Give it up for Amanda, guys. Oh, perfect. We have the most incredible people at Fast Track. And today, I'm going to tell you a little story about Amanda. So it turns out that Amanda and her friends, they like to get together and play on the slots sometimes. And just like the rest of us, they have some funny habits too. And yes, I'm going to give you this story. It's one of those either you go big or you go home stories, and that's the type of story that I like. So Amanda and her friends, they keep this list of all of the major jackpot games that they like to play. And they track the major jackpot amount. And all of the regular suspects are on there. It's the Mega Moolahs, the Mega Fortune Dreams, the Joker Millions, and my personal favorite, Hall of Gods, and a range of other games. And they wait patiently for one of the jackpots to reach that really, it will drop at any time level. They are like letting everyone else do the grunt work, hey? Seed it up for us, like sharks lurking around in the waters, waiting for the right time to go in for the kill. When the time is right, they get together on a meet, and they start spinning. They drink some wine, they laugh, they share screens whenever they are getting into the bonus round. Usually it turns out to be a really cool evening. And they've agreed, of course, that whomever takes it home will split it with the rest of the group. It's an excellent strategy, it's unbeatable. I bet half the room in here has weird things going on like that you do to beat the game. But it's really cool. This story is really valuable to us. It's really cool, in fact. By knowing all of this about Amanda, we can provide her with a truly exceptional experience. We know what matters to her, right? So imagine that we're all operators and Amanda is our customer, and let the imagination flow free for a second. If Amanda had a truly dedicated service, and I'm talking about like a whole team serving Amanda specifically, imagine the things we could do for her. We could drop her emails whenever the jackpots are getting hot. We can tell her about all of the new jackpot releases that are going on. And when it's getting real close, we can organize a nice little campaign just for her in order to come back and make it even more fun. And hopefully, when the day comes, we can celebrate a huge jackpot win with her as well. So as long as we tick all of the basics, we have the games, we have the ability to move money in and out, and we have decent UX, the hygiene. It's stuff like this that is going to make the difference. But obviously, it's not that easy to do. We don't just have Amanda to look after. We got huge databases, hundreds of thousands of players, in some cases, millions. And I think this picture is something that we are more used to. And it can be really easy to forget that behind every single dot on the screen right now is a person, just like Amanda. that has a completely unique makeup. We have players like Amanda, but we also have players like Patrick and Robert, Jenny and Marke. And what matters to Amanda is different for the Next. Whilst Amanda is triggered by life-changing jackpots and beating the game, the person next to her might be interested in hitting a straight-up bet on roulette or getting into the bonus round on a high volatile slot. We need to service every single one, and we need to be relevant. And we do as well as we can with what we have to work with, obviously. We get better at targeting, we are learning, we get better at segmentation. But when it comes to these sort of like one-to-one experiences, we have a huge problem. And I'm going to let you in on a little secret. The CRM platforms in the market today have a fundamental design flaw. Because despite how good they are at automation, they are designated and designed to target one group of customers with one campaign at a time. And you see the problem here, right? You can't focus on the individual in that circumstance. We can never achieve a one-to-one experience with such limitations. If we want to achieve one-to-one experiences, we need to draw from a blank canvas. We need a new design. A CRM platform that is built for one-to-one must be able to understand what truly matters for each individual and be able to source the right specific content specifically for that person. And those type of experiences is what we're talking about the most currently. To build a truly tailored experience for every player. To be able to provide Amanda with such an exceptional experience that she will feel that every piece of content has been produced specifically for her. That's what we're looking for. To be able to sort of in that process also appreciate Amanda's appetite for risk and appetite for privacy and capacity for risk. And be able to so delicately pick the right moment to give her a great experience. To finally be able to use all of our data to understand what truly matters for each individual. This is a very compelling vision. And I've been looking forward to this day since we started Fast Track 6 years ago. Today, I'm pleased to introduce the next generation platform that will, for the very first time, have what it takes to make these sort of one-to-one experiences possible. And we call it the Singularity Model. The Singularity Model is designed specifically to make these one-to-one experiences possible. And this is not just another bolt-on feature. We have rolled out new technology across our entire infrastructure in order to make this happen. We started from a blank canvas, and we designed this to be exactly how we wanted it to be without any limitations. It is so flexible. Every single aspect of the Singularity Model is configurable so that it can be molded to fit your business and do the things that matters to you. It's also completely transparent. We didn't want to create another black box. You can see how it works under the hood, and you have complete control of all of the data and the decision framework it operates within. This is how it has to be. It's not viable for any business to outsource its decisions. This is your secret sauce. But we will provide you with the tech stack you need to put it to use. This is why the very first thing you do when you open the Singularity Model is to give it a name, your name. And for the exercise today, I'm going to call it Via Rapida, which is Spanish for fast track, I believe. So what I wanted to do is tell you that the Singularity Model features an engine that observes every player action that they make in real time and uses advanced computations and machine learning in order to establish a comprehensive player profile. Let's take a look at Amanda's profile again. So we can see here that Amanda is a casino player. She likes jackpot games. Her favorite bonus is free spins. She's of average value. Her last experience was bad. She lost a bit of cash. And she's a new player. And in order to have the best possible opportunity to engage with Amanda, you want to approach her with a playful tonality using email in the afternoon. Let me show you how the rest works. So instead of a transactional CRM, where you will send one specific campaign to one group of players, the Singularity model uses a library of pre-built content that is ready to go at any time. And it features an eligibility model that is able to provide and make it possible for us to be in control of what content is suitable for Amanda. And it uses a powerful scoring system in order to handpick exactly the right piece of content to use in each of these delicate moments. So as you can see here, how it's picking 25 free spins for Amanda over a digital voucher. But this is not enough. The Singularity model is not only capable of handpicking the right content, it is also able to determine the most optimal time to engage and which channel to use. And even beyond that, how this is communicated through media and text. Look how it's selecting the right template to use in the emails that it's about to send, and how it's producing the content specifically for Amanda. Every single player will have their own experience, handpicked specifically for them. And this is really cool, and it will fundamentally change how we work. Working towards campaign deadlines is no longer relevant because every single piece of content is going to be ready to go at any time. And we will be able to rely on a platform that ensures that the right piece of content is matched with the right player. Our roles change. All of our attention must now be focused on experimentation, analysis, and the creative process. We must invest in data science and work relentlessly to make sure that we find bright spots in our data that we can pass on to the Singularity model so that it can continue to grow and evolve on its own. And in order to make this possible, we need great analytical capabilities. And that brings me to the second reveal of the day. So I'm very excited about this. In our next release, Fast Track will also be rolling out its new analytical platform. We call it the Fast Track Data Studio. The Data Studio sits on top of the real-time data feed that you already have in place with the Fast Track integration. And its powerful engine produces an analytical platform that is able to do the most complex queries many times faster than any other BI platform in the market today. It is so fast, and it generates beautiful and digestible dashboards. I'll show you a little bit. So look at the screen here. This is just an example. Look how fast this loads. This is just an example of what we call the engine room, which is a dashboard that gives you a precise overview of your entire player database, where they came from, where they are currently, and where they're going next. And here's another example. Look at the speed of processing 1 billion transactions. This is the casino room performance report. It gives you a complete overview of all of your activity, the biggest winners and losers, and what games and providers that they're playing. What I've been lacking in these sort of platforms in the past has been the ability to track growth and long-term trends and be able to display such things in a digestible format. So we put a lot of effort into that. We made that very easy to do. And when it comes to CRM performance, it will blow your mind. Look at this. This is the level of flexibility and granularity of data that we're going to provide. And it's accessible in any other platform in the market today. And everything is in real time. I'm not going to go through all of these today, don't worry. The most important thing to remember is that it comes packed with pre-built dashboards and the ability to build your own. And it uses a super easy, super drag-and-drop interface in order to build these dashboards. So it's super easy to access your real-time data at any time. The Singularity model is the platform to scale with automated one-to-one experiences. And the Data Studio gives us access to all of the data and relevant capabilities to move the Singularity model forward and make it even more smart. Now, Singularity is more than a platform, it's an idea. It's the idea of building the industry-first self-learning engagement platform that is able to scale and do things that is beyond our human ability to comprehend and be able to scale on its own. That's where we're heading. And even though we now have parts of that capability, not every business is going to have the capacity from a data science perspective to move this forward. And a lot of businesses are still firing CRM from their gut. And that is a bad habit. We need to move our decision-making from the gut to the data. Therefore, I have another and third and final announcement to make today. The Singularity Project. The Singularity Project is an initiative to build the most comprehensive intelligence hub that when it comes to player engagement and iGaming CRM. We have dedicated an entire data science team that will be working solely on this initiative. And they will be working closely together with you as our partners to analyze data, run experiments, make findings, and build AI models that can use together with the Singularity model. The team has been told to forget everything that they thought they knew about CRM and prove every assumption with data. All of the learnings will be shared on a dedicated portal available to all partners. The Singularity model. So coming back, I've made 3 announcements today. The Singularity model, an engine that for the very first time will make it possible to scale with automated one-to-one experiences. The Data Studio, the most powerful analytical platform in the market that can help us move the Singularity model forward. And the Singularity Project, a designated data science team that is set out to build the most comprehensive intelligence hub when it comes to iGaming CRM and player engagement. With what I've presented with you today, I'll leave you with 2 choices. Number 1, you continue to work just like you are today and be in a consistent battle against time. Or secondly, you take a leap of faith and you move into the future and achieve the next generation player experience. I thank you so much for joining me today, and thank you, Amanda. It's been an absolute pleasure. And do not hesitate to come and speak to me or my team in case you want to know more. Thank you very much.
Outstanding, outstanding. Thank you so much, Simon Lids. And wow, some exciting announcements there. Do you just do everything as you've always done it, or do you take that brave leap of faith? Well, you know what they say, fortune favors the brave. Fantastic stuff, Simon. Okay, a few announcements. We've got lunch being served until 3. We have our wonderful rooftop drinks upstairs. The view is stunning. That's starting from 5:30. We've got iGaming Idol, which is sold out. That's from 7. I hope to see you there. You're going to meet the superstars of the industry. And in about 4 minutes' time, we're going to have a fantastic presentation now, which is all about building profitable games and creating content for the player and the operator. And there's a gentleman who's a chief executive officer of TrueLab, Igor Samaritsky, is going to be joining us. So don't touch that dial. We'll be back in 3-4 minutes. Network, make some friends, share the hashtag NEXT’21. Thank you. I hope you're making great business, making some iGaming magic happen right here in beautiful Valletta. Okay, our next session is all about building profitable games and creating content for player and operator. Now, as I'm sure everyone here is aware, the Germany turnover tax decision shook many heads in our industry and had something of a grave impact on casino catalogue selection. Now, with the industry focus weighing heavily on RTP as a gauge on valued player experience, True Lab game studios go into the psychology of the player right here, right now, and the dynamic of the game, and question if the content built is built with the player in mind. Has it been built at the cost of revenue for the operator? How do you square that circle? And our next speaker is going to ask whether great content can satisfy the needs and experience of both. A fascinating and very timely topic. So ladies and gents, please welcome to the stage the CEO of True Lab, Igor Samardzicki. Thank you.
Hi. Well, you know my name now. I'm Igor Samardzicki. I am currently a CEO of a small game studio, up-and-coming game studio called True Lab. But my background is not actually in game development. So for many years, I've run and operated, owned and operated a number of brands, casino brands. And I specialized in building brands from startup to certain size. And during this process, a number of scenarios has happened which made us consider how we process the content that is given to us by various providers. So today, as I form part of True Lab, one of the first things we looked at is how do we deliver content for operators? And how does that content affect the bottom line and the revenue for the operator? Especially when we start considering things like bonusing and other costs to the industry. One of the notable ones is the new German taxation. So we're going to take a look at a couple of things today. I would like to draw a line between player profile and the way we build games. And I would like to start with an anecdote of what got me onto this line of thinking. So, looking at the beginnings, I'm going to tell you a story about Jane, the player, and Rory, the head of mathematics of one of our suppliers, a very big supplier of the industry. So, at the time, we were a small operation. We had just started out. So we had, I don't know, maybe revenues of 80, 100,000 a month, just enough to cover the salaries and grow organically as much as possible. Jane comes along. It was about 2013, 2014 at the time. UK GC wasn't active yet, so you could take UK players, and this UK player graced us with probably £10,000 in deposits in a span of a couple of days. So you can imagine for a small operation, that was a celebratory time. It's like amazing, 10% increase on our revenues. Jane decided to play a game called Jacks or Better Video Poker. Now, at that point in time, we didn't really understand, I didn't really understand the game portfolio and the ability for us to choose what games we were exposed to. So Jane starts playing Jacks or Better Video Poker. She starts playing that with £10 hands and £25 hands. And she loses 1,000, she loses 2, she loses 3, she loses 5. We're ecstatic. For us, that's a VIP. And then, Jane wins a Royal Flush. Now, Royal Flush plays 1,000 to 1. So with her £25 bet, she won £25,000. That's a quarter of what we would make in a month. So you can imagine the scramble of a small operation. It's like, all right, you know, Jane is still playing. Let her play. So Jane keeps playing, now with her own money. She's not attempting to withdraw, which is great. And a couple of days later, Jane wins a Royal Flush. Now, anyone that watched any movie related to poker or casino will have had a innate impression that royal flush is one of the rarest things a player can win. Yet we had a player win 2 in a span of 5 days, maybe 10,000 hands. So we ring up Rory, and we had a good relationship with Rory, good relationship with the supplier, and say, Rory, please help. And the response that we got from the mathematicians, as it would be a response we got extremely accustomed to after that, is, Igor, it is within variance. It's completely plausible for this to happen. Keep going. A few thousand hands later, you guessed it, Jane wins a royal flush. We are £75,000 down at this point in time. That is our entire revenue wiped for the month. It was quite a scary, at early stages in that time, early stages of gaming companies, it was quite a scary experience. And I was certain that this cannot be the norm. This could not possibly be the norm. So I did some research and some investigation, and I called a man called Michael Shackelford. Michael Shackelford at the time was famous. He was called the Wizard of Odds. He had written a book about slot games and RTP gravity, and he was quite a known entity within the industry that if you have a mathematical problem, this is the man you should probably turn to. Rory couldn't answer us. Even though he was the head of maths, Rory kept repeating the same statement. It is within variance. It is possible. After some research, we had actually found out what happened with Jane. Jane wasn't playing video poker like video poker should be played. Jane was chasing a royal flush strategy, which decreases the odds from 0.5% house edge to only 2.5% house edge, and increases the chance of winning such a high hand exponentially. So far I spoke to you about 2 things. One was variance, and the other one was RTP. So I'd like to introduce them onto the screen, if this works. I hope you can read that. Yeah, I can. Right. So in one case, Rory's answer was, it's a measurement of the spread between numbers in a data set. Basically, can it be the outcome? I'm sure most of us in this room know exactly what that is. And from the other hand, we're looking at the return to player, or in reverse, our house edge. And one of the most famous sentences, honestly, it floored me as I was investigating this issue. Like a bit of a, how do you call it, a giveaway. Everything worked out with Jane in the end. We didn't manage to get the money back. But during that process, Michael asked me one very, very simple thing. He said, Igor, I cannot help you. What you want to find out is whether you should keep letting this player play or not. And that decision is purely commercial and purely based on amount of investment and so on that you have. But I have advice for you. And that advice was in a form of one question. Igor, this game that you're trying to solve, it's currently giving you 50 cents in revenue on every 100 pounds wagered. Yes? But it exposes you to 1,000 times the bet. Yes? Why? Why? Why do you have this game in your portfolio? Until that moment, it did not dawn on me that we had, as an operator, a choice of what we put on our portfolio of games and what we do not. Today, the operators in this room, and watching this, are in a much favorable position than back in 2012. You are spoiled for choice. There are so many game providers at the moment that are creating incredible ideas. At that time, there were much fewer. And we never even considered not to put the game on if it doesn't suit us. So that was a lesson I learned and carried through for almost a decade. And it's a lesson that I decided to impart into my mathematics team the moment I took over running of TrueLab. And it is at the cornerstone of what we do right now. We want to take a look at the player behavior. We want to take a look at what the game does to the player, but we also want to take statistical analysis of what it does for the operator. It's within variance. Over time, I've consulted many businesses of varying sizes. And we have done many, many case studies. And generally it boils down to one simple game that we do with the audience. And that game can be translated into any casino assessing their player base through very simple means like bonuses and free spins. But we used to play a game, and that game is the 2 coin study. I'd like you to play it with me in your minds, if possible. I'm going to give you 2 coins, and 1 coin will allow you to go to a casino, on any casino on the island, place 1 bet on any game of your choice, and I will personally pay you 10 times whatever amount you win. There's a second option. There's a silver coin. Now, don't get misled by the gold and silver. You can call them black and red or any other color. It was just easier to desaturate the gold and make it silver. You can have 5 bets, but I will pay you 2 times whatever you win. So 1 bet, 10 times win, or 5 attempts, doubly win. Which coin do you choose? I will not lie to you if I tell you that I must have done this thousands of times by now. Definitely over 1,000 people. And it's very, very funny how the room gets split. And it actually gets split very, very evenly. Around 50% of people, depending room to room, 60-40, 40-60, you know. You do this enough time. Around 50% of the people will choose only 1 bet. And around 50% of people will choose 5 bets. Can you imagine what this tells us? 50% of people are risk takers. They are risk prone. 50% of people are risk adverse. That is a gambler. That is a time on device player. That is a high volatility slot enjoyer or game enjoyer. That is a low volatility game enjoyer. This person playing roulette will place 2, 3, 5 bets on a roulette table, come what may. This person will cover 2/3. They have 2 completely separate goals and hence 2 completely separate profiles. And that is generally focused on from the operator perspective. When we analyze our players, analyze their behavior, and analyze them quite frankly to see whether we're going to give them bonuses or not. At a cost-effective rate. So we started implementing this into some games. So what I'm about to show you, my legal didn't allow me to use our games. We've managed to do simulation of game portfolio that we had. These games exist on the market, and this data is actual. I'm going to show you something called, well, actually it's called the win rows. I want to call it the win rows. It's a graph. It's a graph which allows you to understand the distribution of RTP. That is a slot DNA. One slot is very volatile. The other one isn't. And I may have mispointed on purpose or not. Both of them have an extremely high exposure. But actually, this slot is not volatile at all. You see, when you look at the low bet section, you're looking at cents, 1-time bet, 2-time bet, 5-time bet, 10-time bet. Not even, 10-time bet already goes into medium. High, however, go extremely high. So although one slot DNA may appear to be completely sitting on two sides of the coin, if you will, either paying very low or paying relatively high, the fact that the other slot has a distribution which is going into very high bets makes the variance very wide. Now, why am I saying this? Why does this matter? Well, it actually matters because everything we do for the player is based in the RTP, the return to player, which is arguably a lot more important for us than it is on any one individual player, and the variance or the DNA of the slot, the way RTP is distributed and how. You see, one thing boggled my mind for a long time. The head of mathematics kept saying it's within variance. And yet, us as a whole industry decided to take this Route 96, upping the RTP from the land-based slots that were operating in low 90s, even high 80s, for such a long time, successfully, very successfully. And we keep pushing, even to players. I mean, if you go to player forums, if you ask players, players take a look at what is the RTP of a slot game, as if it matters. And the reason why I'm saying as if it matters is because it is within variance term means that we haven't had enough spins, enough rounds done to tell you whether this outcome is normal or not. And we are talking about thousands of rounds. An average player session will last hundreds. It is not debatable. The way the slot is built, the way the variance in a slot is built is much, much, much more relevant to the player and the player experience than what RTP the slot operates at. And I've proved it. This is a simulation of a few billion rounds. This is actually a slot. It doesn't belong to neither of these, I have to be honest. We chose a middle line, because this is a very low volatile slot, this is a very high volatile slot, so we chose one that's right down the middle, that is quite known in the industry, very popular, very much played. What you're looking at here are starting balances. So that would mean a starting balance of 50 bets or a starting balance of 100 bets. In human terms, if you had 100 euros and played €1 per bet, you would have a 100 bet balance. If you started with 100 euros and you're playing €2 per bet, you would have 50 cents a bet, you would have 200 bets. And what this does, over many, 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 many simulations, it takes a look at, to infinity, what happens when a player places 100 bets, game generates wins, they place another 100 bets, and so on and so forth, until they have no more bets to place. Now, what you're looking at is 3 columns. You're looking at low 25th percentile is the unluckiest 25% of players. The median is effectively your heartbeat of the slot. That's your median value. And your 75% are the 75% and more of the luckiest players. The max column is how much actually these would actually be the luckiest player ever on this slot, according to the simulation. You know what we're looking at here? Look at the median number. Take a look at an average session of 100 bets. 100 bets will stretch to 250, 260 bets on average, within the median spectrum of players. If you consider that to be 2 seconds a spin, just for the sake of the argument, you're looking at what, 520 seconds, almost 10 minutes of game time. That's on a 96% RTP. Can you take a look at the result at the 94? 14 is to 14, 30 is to 30, 96 is to 96, 260 is to 260. You start noticing the difference at very, very high bet values. 92%. That's a 4% drop. Every single casino between the first one and the second one just doubled their money. On the same amount of volume, 14, 30, 96, 260. The session not only changed a little bit. On a medium volatility slot, the session didn't change. A player literally didn't notice. Do you know who noticed? Take a look at the 75th percentile. Let's take a reasonable level 3, 100 bets. 690, 665, 645. The luckier ones did. The ones that are already well above the norm, already having amazing sessions and times. And by how much did they? Well, 690 times 2 seconds, if you're going to keep that indicator, that's what, 1,200 seconds? 1,380 seconds? 20 minutes? As opposed to 1,200 and 1,330 seconds? 20 minutes to 20 minutes to 20 minutes. Right? Even the luckiest ones didn't really notice the difference. Now, if you consider this from the RTP perspective, Germany's 5% tax actually isn't that painful. It is definitely painful and definitely should not be implemented. But we have a lot of leverage here. And I would argue that it's more cultural than factual, the decision to keep our games at high RTP. It actually serves no benefit to the player. If we were looking at a high volatility slot, you would still have fractional. The highest volatility slots would have fractional differences in player sessions on median level players and lower. Right? We have space. So if I were to send a message to an operator, drop the RTP, nobody will notice. I hope this doesn't get streamed to any players, though. I want to take a look at something else, though. I only have a few minutes left. I want you to take a look at what happens with the bonuses. And I used bonuses on purpose because I want you to take a look at what happens with wagering. I just forgot to click the button. Right? Now, what about the revenue? We're looking at the revenue experience ratio. What you're looking at here is a simulation of billions of rounds. Very similar to the simulation before, and you're looking at the same game. What you're looking at in the last column of these rounds is the average balance left after the player would meet a condition of something called neutral expected value. What that effectively means is, at 96% RTP, 4% house edge, if we give a player 100 euros, we have to ask them to wager 25 times, right? 4 times 25, 100%. So if we want to give a player 100 euros, we have to get them to wager 25 times or 2,500 euros. That should, by perfect RTP, eat the bonus. Now, this is where variance comes in. At the end of these sessions, a player that bets 50 cents on a 100 euro budget will, on average, end up with 72 euros left after the wager requirement. Now, when I say average, that doesn't mean that every player ended up with the average. In fact, only 13.63% of players will have survived the neutral expected value. Their average balance will have been 528 per player. Together, that will give you, on whatever bankroll you want to issue, 100,000 euros in bonuses, 100 million in bonuses, that is your return. That is, on average, what is going to be converted to real. Quite a scary number, actually, 72%. I bet there's a few casino managers that probably hoped that was going to be lower. remember, as we go lower, player session doesn't change. 54%, 42%. The impact on the bonusing of our industry, which is huge, and the impact on the turnover by lowering the RTP is incredible. It's huge. In fact, it gives you, what is that? Almost 80% more revenue based on natural, neutral expected value. Right. There's one last thing I would like to speak to you about, and then let you go have lunch, I guess. I want to talk about what happens about experience to revenue ratio. So if we lower the RTP, what actually happens with the players? How is that RTP distributed, and how is that RTP lowered? Well, realistically, we distribute the RTP through various features inside the game. Any game provider here will know this. Base game, feature, bigger feature, and so on. What generally tends to happen is that the games pay most of its, or not most, part of its RTP later in the game. That effectively means that when we design slots, depending on the provider, I guess, we design them with a specific purpose of tailoring customer experience. First thing we've done at True Labs, we looked at the maths, we looked at the player profiling, we played the 2 coins, and we started designing games that focus on the operator without the cost to player experience. And that is carried through aesthetics that carry the dynamics. Thank you.
Wonderful. Igor Samardzicki, thank you so much, CEO of TrueLab. Okay, I'm feeling some energy in the room. People have had their lunch, they've done some networking. We're getting ready for a fantastic afternoon of content, kicked off by our brilliant speaker. Thank you so much, Igor. Okay, so a few announcements, as is my habit. Don't forget to share the love. If any of our speakers today said something that is really memorable, something you want to share with the rest of the world, please share it. Please feel free to tweet, quote, send away, share on social media, update your LinkedIn profile, take a selfie with Todd on stage behind you in a short while. Use the hashtag NEXT’21. That is NEXT’21 to share all your thoughts and all your love for iGaming Next Valletta 2021. Okay, 5:30. One of the most important times you will have today is rooftop drinks. Time for some of that old liquid networking. Yes, please. It's thirsty work. So let's all go and grab a drink at 5:30. At 7 o'clock, if you've got a ticket already, iGaming Idol, meet the superstars of the industry. If you don't have a ticket, I'm very sorry. It is sold out, but I hope to see you there. And okay, we're going to be back in a few minutes. I'm going to moderate a panel with 3 fantastically insightful and entertaining gentlemen. And the panel is called Come On, Let Me Entertain You. And we want to get your questions in from Slido. So please do scan that QR code. Have it ready to submit your questions. We've got 3 absolute legends, and they are ready to answer your questions. I'll be back at 2:05. Hello and welcome back. Lovely to see you all. Okay, we've got a fantastic session lined up for you now. The name of it is appropriately enough. Come on, let me entertain you. And we are inviting entertaining questions into our magic Slido box here. You send your questions in via Slido, via the QR code. It will pop up here. We'll ask them to our VIP guests if we have a chance. Okay, the next panel is all about, in these crazy, crazy times, how can you keep players entertained? How do you keep their attention span? So gamification, streaming, innovation, they're all part of the mix to keep driving engagement amongst slot players. So we're going to welcome our VIP guests onto the stage. So give a huge, huge warm iGaming Next Valletta welcome to the Chief Commercial Officer at Swint, David Mann. Welcome, David. Awesome, great to see you, David. Fabulous. Next up, we've got the CEO of Casino Grounds, Tobias Svensson. Welcome, Tobias. Awesome. And completing our power trio, we have the CEO and co-founder of Calamba Games. Please welcome Steve Cutler. Excellent. Fantastic. Grab a seat, guys. Okay, loving the headwear as well, Steve. Very dapper.
I'm Andrew Bonnici, Chief Product Officer at ISOFBet. Join us tomorrow at 10 a.m. for an interactive session with a Formula One guest speaker, William Hill and Betson, to discuss the importance of customization within engagement solutions.
Fantastic. I love those spontaneous moments. That's how we roll. iGaming Next Valletta. Brilliant. Okay, so we're going to talk about engagement. That was a very engaging video. We got 3 very engaging speakers. You're going to ask some engaging, entertaining questions via Slido, I can tell. Quickly, let's just get the lowdown from yourselves. What exactly is it that you do? What part of the industry are you in? We're going to start with yourself, Steve.
Thanks very much, Oysen. Name's Steve Cutler, CEO of Calamba Games. We produce slots. We also produce our own distribution and engagement software managed by AI and some other funky stuff. My background is I was originally head of poker for Unibet for quite a few years. And then I moved into social casino for a few years and then came back into real money. So that's pretty well my existence as far as gaming is concerned.
Awesome CV. Thank you very much. Tobias.
Thank you. I'm Tobias Svensson, the CEO of CasinoGrounds.com. We're most known for being the biggest casino streaming community, but we're also having other products such as CasinoScores.com and more of a traditional affiliate as well.
Excellent. Thank you, Tobias. And David.
Yeah, I'm David Mann, Chief Commercial Officer at Swint. We're a game provider. We focus on delivering different types of content, so we have our own slots. We also have a live dealer solution and engagement tools, obviously very relevant to this panel.
Okay, nice, fantastic. So you see, we've got exactly the right people gathered here on stage to answer that big question. And the first big question, the million-dollar question is, what is engagement? And we're going to come over to yourself, Tobias, well volunteered there. Talk to us a bit about how you see engagement.
I mean, engagement is all about keeping the attention of the player or the customer, to keep their attention and keep them entertained. So it's about creating a product or a gamification, so to say, to keep people, coming in, but also keeping them there and entertain them at the end of the day.
Great answer. Same question to yourself, Steve. What say you from your viewpoint?
For me, everything is engagement, right from the thought of tackling a certain customer segment to, the end of their player lifetime journey. It's how you break up that engagement cycle. We, on this panel, are sort of primarily focused on the conversion retention sections of or aspects of engagement. And for us as a company, engagement starts with building the right technologies. Our product strategy has always been built on data points so that we knew we would always have the capabilities to build the kind of systems that we're seeing coming out into the marketplace now. So for me, output is engagement, but you need to start with the right technology.
Wise words, fantastic. And we're going to hop over to yourself, David. Talk to us about the relationship. What is engagement? What does it mean in terms of the player?
Yeah, I mean, our products themselves are engaging. Slots are designed to be that way. But at least we as a supplier, we want to enhance the products by looking at different ways to engage the player through different types of tools and mechanics that can make them more exciting for the players and also deliver better lifetime value for our operating partners.
Yeah, good point. And I'm going to stay with yourself, David. Talk to us a bit about how different sides of the industry optimize for engagement. What kind of techniques have you seen from your perspective?
I mean, there's a lot of tools out there that you can see. There's especially some really exciting stuff in the iGaming Next event today that we can see. There's different types of tournaments and achievements that we've seen for many years. There's new innovations in terms of how you play with classic features, such as the tournaments and achievements, as well as jackpots. And everybody's looking to try and get that edge in the market and create something new. So it's really exciting to see what other companies can bring up in the market.
Indeed. And Tobias, what are you seeing from your viewpoint? How's it going to get optimized?
So engagement is kind of happening on a lot of different levels. I mean, you have the operators that have various tools. You have the game providers kind of adding features such as the bonus buy, which is a very engaging, straight to the dessert kind of feature. But then you have affiliates like ourselves who is, live streaming this content, building a, social experience around it, engaging the audience there. And now we're seeing also kind of various add-ons to this. I think we have, the guys here with the live spins feature. You have the shared play by Carolina, and a lot of these other tools that are looking to engage and entertain at a new level, kind of. So a lot of interesting things happening.
Yeah, interesting point that you actually mentioned some of the, the product names, the feature names. We have the bonus buy, we have the shared play, the add-ons. Steve, what are you seeing from your perspective in terms of elements that can be added to increase engagement?
Well, again, it's you've got to sort of jump back slightly because, first of all, you've got to identify who your customer is, what they like, what they don't like. So once you start building the infrastructure, so you're able to identify your personas, your segments, your clusters, etc. Then you figure out how you're going to manage the data, and ultimately it's what's coming out of those systems that will provide the catalyst for driving a lot of your engagement tools. Because the most important thing with engagement is that you have to be relevant. There's no point trying to target people with a wrong message or the wrong offer, and that's been a big mistake in the industry for many, many years. Not that people have been unaware of it, but just hadn't had the capability to target the right people at the right time with the right message. So that's really the key starting point, and then assuming that you've got a lot of those facets to the strategy in place, then all the funky stuff with the promo tools, achievements, challenges, all of that then comes into play.
Right, absolutely, absolutely. So I like that the answer is sort of about data-driven design and data-driven engagement and relevance. And David, coming over to yourself now, talk to us a bit about the B2B game provider perspective and how they can plug into systems that give them more promotional tools that work with B2C. What are some examples of that?
Yeah, so like I say, there's tournament engines, there's achievements, missions. If you look at it from the perspective of us trying to be more competitive in the marketplace, we're trying to find these edges that we have in the competition and give extra things to the operators that they'll choose Swint or Kalamba or any other game provider over the others. So, we've seen in the recent years the likes of jackpots have been twisted into this new mechanic from Red Tiger. How can that then develop into other achievement systems? Can you then combine all these other elements of engagement tools that we have in the market and wrap them into one? There's going to be some really big advancements. We have stuff in the works. I'm sure Steve has some stuff in the works. So, yeah, there's a lot of stuff to come, and there's a lot of scope for what we can do. We just have to hope that it works for the players and it's very relevant.
Yeah, indeed. And you name-checked a few companies there. That's really, really good. Thank you. I'm going to ask a similar question to yourself, Tobias. Who do you think is doing a good job in this sector? What examples do you see?
I think there's a lot of people doing good. I think on the operator side, my personal taste is less is more. I don't like when I need to opt in or an advanced point system. So there, I really like the one from Press Enter Group, the Rapid Casino, where they only have this one daily promo where you chase to have the highest X win per day, and that's the only thing. You don't need to opt in. The winner gets 5,000 euros in cash. And I really like the simplicity of it. On the game provider side, I think, big time gaming kind of starting with the bonus buys, but now it's transforming into being more complex, more, opportunities. You don't need to buy necessarily the full bonus, but you can buy, a higher chance of achieving it. So there I would, point out maybe No Limit City as an innovator in the bonus buy space, so to say. And yeah, I think there's a lot of good alternatives how to do it. Red Tiger with their jackpots, I really like them as well.
Yeah, Red Tiger getting a lot of love on the stage, absolutely. And coming over to yourself, Steve, talk to us, are there any other examples, anything around like AI, dynamic CRM tools, that kind of thing? And also, I'd love to get your take on, this whole area. Are you a build person or a buy person? Do you think it's like, what would you recommend
I
to
like
people?
to build things.
Right,
definitely.
okay, very good, very good.
For sure. I mean, it's great to buy things as well, but at the end of the day, if you build it yourself, you have a lot more. There's a lot more well, you can draw a lot more from it.
Sure.
Out there in the industry, yeah, I mean, we've seen obviously fairly fast movement now, working towards the dynamic CRM tools.
Yeah.
I think Simon was on
Fast Track.
Mentioned something earlier. Fast Track is a good example of that. And you've got some B2C brands which are very focused on those. They mentioned a couple there. Wilds Roots is also a good example. They built their whole casino strategy around dynamic CRM. So I think that is actually one of the better proven product strategies that's worked very well in the industry. And then sort of supplier side, yeah, there's a lot who are bringing out their own different sort of, like I said, promo tools, engagement tools. But the challenge moving forward, though, will be trying to bolt those onto other systems. Because if they don't work, or you're running with certain kinds of promos and you're not factoring in the fact that there are other ones running along which are feeding into the ecosystem, then, yeah, you can end up with a whole heap of trouble. So we personally focus on building it within our own ecosystem so that it's far easier to manage in that respect. So moving forward, it will be a mixture, bolt-on, as well as those that actually build a full ecosystem around it all.
Okay, exciting times. Coming over to yourself, David, talk to us a bit about how these tools can help companies differentiate. And we've got the build perspective, the buy perspective, the ecosystem perspective. It's a complex world, as Steve was saying. The end user just wants it all to be joined up. They don't want to see the same promotion in different places and that kind of thing. What's your kind of recommendations or your take on this issue?
It's going to come down to the innovation and how you can then apply that to be able to differentiate in the market. We ourselves, we have an upcoming project that it's something quite passive, so the players will be participating in something in the background. But they'll also be able to be part of a bigger, more exciting project. I can't reveal too much. But even looking at tournaments, we have our own tournaments that we look at the data and what is the most engaging that we have and what's going to be the most appealing in the market. So we see a best win multiplier race tends to be the most engaging for the longest. A player can come in at the last minute and win that tournament with the final spin. So it's active until the very end, just like certain types of sports bets, both teams to score. Anybody who loves watching the football on a Saturday, it's a classic bet that you get engagement until the very last second. So it's the same with these kind of promotional tournaments that you're able to keep more players engaged, give the little guy a chance just alongside the VIP. And it works out better for the operator, for the players, and then for us as well.
Yeah. Well said, well said. Okay, thank you for that. And Slido was buzzing here. Thank you to everyone who's sending in their questions via Slido. We'll try and get to a few of them. There's one for Tobias here. Now, the question is from Anonymous. Thank you, Anonymous. Is there a future for gambling streaming on Twitch/YouTube, considering the recent controversy?
I definitely think so. I think the question is, which platform will it be, rather, about casino streaming itself. I think if you look at the behaviors, the way trends are moving, there's two very clear ones I see. The one is social. People, my generation grew up sharing experiences, playing games together, these kind of things. I think that is a key one. And then I think, having it fast. On the pre-call, we discussed a bit that if you look at the development of the attention span of the average human, in 20 years, we've gone from somewhere at around 12 seconds down to 8.25. And to compare, an actual goldfish has a 9-second attention span. So we're drastically going down. People want it fast, and they want to share the experience with others. So I think we're going to see, trends that support these kind of behaviors are going to increase. When it comes to YouTube and Twitch, I mean, the terms and conditions Twitch implemented this summer is essentially the same as YouTube. So the reason now is a lot of uncertainty is that people are kind of waiting to see how they will enforce this. And when it's said a recent controversy, I can assume it's referring to the crypto streamer situation going on YouTube. I definitely think it's a good thing because Casino Grounds always been promoting transparency, real money gambling. Yesterday, one of our biggest streamers won almost 200,000 euros on Crazy Time Live, which is the biggest win by far in Casino Grounds history. And this is his personal money, his private money. When he loses over several months, this is his personal money. And I think if you are to create, content and entertaining content, you need to actually have that real-life element. When it goes bad, you actually feel it. When it goes good, your celebration is honest. So I definitely think so. And I still think, Twitch and YouTube will find a way to work. At least I hope so. But if not, there will be other video streaming services that will be happy to kind of take that. And yeah.
Okay. Great question, fascinating answer. Thank you very much. We have a load of questions here from Slido, so thank you for those. Stephen from the audience asks, apart from the tech/tools utilized, how important to the player are the sensor, visual and sound aspects of slot games? Who's the right person to answer this?
Probably not me, ironically. I've actually got a couple of people in the crowd who could answer that a lot better.
Okay.
But
See you later.
It is actually fundamental. It's one of the key facets of game design, be it the sounds, the visuals. I mean, the maths is actually the backbone of the games themselves. But yeah, I mean, it is fundamentally important, and we've seen that different themes resonate far better with some players. We see that certain game types, which in my opinion are ugly as hell, but they perform extremely well across certain demographics. So it does matter. But it also is, again, it jumps back to what's relevant for that player or that player group. So as long as you, again, understand who your target market is, so if you're looking at, right, we're going to take on Germany, well, you need to have a pretty good understanding of the kind of games and the content that resonate with German players. So again, it's about identifying exactly the needs of a player in order to deliver them what they want.
Yeah. Good answer. And Stephen from the audience, do please catch up with Steve a bit later, and he will introduce you to his colleagues, and you can chat about this further, I believe. So I'd like to come over to yourself, David. Now, during our preparation call, quite a contentious issue was RTP. And we had our previous presentation from Igor there looking at analyzing RTP, etc. And of course, this is a kind of, circle to be squared in terms of engagement, what you put into these extra features, how you balance that with RTP. What's your take on to RTP or not RTP, if you like, and where do you stand on the issue?
A lot of RTP discussion right now stems from regulations and the necessity to change RTPs to meet because of taxes. Germany is a prime example, the lower RTP. It directly affects the player experience. And we as a game provider, we have to look at it as if we are the player, and we have to consider how can we still make this game engaging despite this lower RTP, this poor experience that the player goes through. So, there will be alterations in RTP levels depending on certain markets and depending on market needs that some of our operators need to meet. You can even see with jackpots that jackpot contributions can come away from the overall game RTP, and that then depends on the player's own tastes, if they enjoy playing games with jackpots and waiting for that big win, or if they want something a bit more stable.
Indeed, indeed. And Tobias, I mean, as a professional in the industry, but I know you're also a keen gamer yourself, you know what happens under the hood. You can kind of see the mechanics, and I imagine you're sort of representative of the next generation of folks who are in there, very much, more media aware, digital natives. They can kind of see what's happening under the hood in a way that maybe the older demographics can't. So, are you kind of aware of the RTP issue as a player yourself?
Yeah, definitely. I mean, as an avid player myself, to get the most out of my money or increase my, light version of advantage play is obviously something I consider. But I think in this discussion as well, many people forget to discuss variance and only focus on RTP. I think variance is also key to touch upon. But as a player, I was a bit surprised in the sense that I was expecting more kind of negative feedback in regards of certain operators and game providers kind of decreasing the RTP or offering several versions. Me personally hope that there will be some kind of regulatory requirement to clearly display the RTP on each game. I think that's key for transparency. And I think also, even without being it a requirement, I think the operators should actively communicate this. As a part of building trust towards the players. I hate having to, go through the help file and try to find this. So I think, being transparent and open about it is a good thing. But I think my generation, as time go, I think to understand these kind of things will be more common. And I think streamers, explaining it in real time really, speeds up that, education, so to say.
Yeah, absolutely. It's one of those things, ignore it at your peril. You can't really assume the players don't know about this stuff because we have streamers explaining it in great detail. And you mentioned regulation there. I'm going to steer this question over to your good self, Steve. Talk to us a bit, well volunteered again, talk to us a bit about the impact of regulation and technology on this field of engagement. We had some news from Germany. There's all kinds of stuff happening. It's an ever-moving feast, as they say. What do you think's happening now? What do you think is going to happen next?
Regulation has restricted be it providers as well as B2C operators in some of the more flamboyant, funky behavior that they would like to have done in the past. But for us, if we look moving forward, one of the big fears that we've seen coming from regulators are the kind of systems that we are building. So these are AI-driven systems. They identify, obviously, the personas, the behaviors, etc. And quite rightly, you do have regulators who fear the fact that operators or providers have the capability to do this, and quite rightly, they should fear it. But it's not our intention to use it or use the technology in the wrong way. And for us, assuming that we do build it in the right way and we are operating it such that it's working obviously for the players themselves, then we can actually build it so it protects the players rather than takes advantages of them. And that's our goal, is to prove to the regulators that these systems can actually protect the players, provide for an optimized user experience, and then end result always being that the player wants to come back and play again.
Yeah.
So for us, the regulators shouldn't fear it. They should actually embrace it, because it will actually make their lives a lot easier.
Yeah, indeed. Nobody wants to lose a player, ultimately. Repeat business is the best business you'll ever have. And, on a similar line, we have a very interesting question from Slido here. So an open question to all three of you, or whoever wants to jump in. How do you tackle the challenges brought by regulation, for example, auto spin delay, as our concentration spans get shorter and shorter? So coming back to that sub-goldfish concentration span. David, Tobias, have you got a comment there?
Again, it's about how you can play with the game design to keep that game engaging. If you look, for example, in Germany, again, where you have a 5-second spin time, there are certain ways that you can make the reels move and animate, and certain lengths of any kind of in-game sequence that can still keep it engaging for the player. If a player makes a spin and it only lasts for 1 second and they have 4 seconds of dead time, then that's not going to be any fun. And you want to make sure that the player can at least get excitement for that full 5 seconds until they can play again. So it's about how you can play with the game mechanics, the framework of it, to make sure that it's still enjoyable, because it should be enjoyable from the very first second.
Yeah, indeed, indeed. Well said. And Tobias, coming over to yourself, I mean, you kind of spoke about the changing expectations of the younger players. We had a panel earlier about kind of meeting the customer experience expectation of the Gen Zs. What do you think are going to be some of the differentiating factors that the industry should be really plugged into about how the next generation of gamers is going to react, how they're going to interact, how they're going to want to be engaged? Any tips in terms of other expectations they have from being digital natives?
I think some of the best places to look for inspiration is to look at social media. I mean, this generation has grown up with social media, and then look at how social media changed and adapt. So we started 2007, give or take, with Facebook. Long posts, people actually read them. And then you had YouTube as well, where there was, a 15-minute video wasn't really a long video, where today you need to really be interested to watch that clip. And then you had, Twitter, short, quick updates. You had Instagram, only pictures. Then you had Vine or TikTok, endless scroll, just feeding, a 10-second loop of entertainment. So I think looking and understanding kind of the trends and what works and not there, and translate it into, a concept. Such as bonus buys, for example. I think with the 5-second rule, I think now several of the game providers has these like boosted spins. The Starburst, the new one, it's 20x or something like that, but the spin will last more than 5 seconds. So I think there's many different ways to both figure out what the trends and where they're moving, and also innovation to meet those kind of expectations.
Fantastic. Now, folks, I'm afraid the clock is ticking, although I know that we could go on for quite a while. Final, very quick question to all three of you. Will you be at the networking drinks from 5:30 to answer any more questions that we couldn't get to? The correct answer is yes.
Hell yeah.
I hope to see you there.
Yeah,
excellent,
absolutely.
good man. Okay, ladies and gents, please join me in thanking David Mann, Chief Commercial Officer at Swint, Tobias Svensson, CEO of Casino Brands, and Steve Cutler, CEO and co-founder of Kalamba Games. I'll be back in a few minutes. We have a fantastic presentation. It's going to be absolutely brilliant. It is about liberalization, innovation, and accelerating delivery from none other than James King, the CEO of Flows. I'll see you back here at 2:35. Thank you. Awesome, guys. Thank you. Brilliant. Loved it. Great stuff. Great job. Hello and welcome back. Okay, we have a treat for you right now. I promise you, this is a gentleman who knows all about the industry. He's been well known, very well loved around the sector. A lot of you probably know him here, I hope. If you don't, make sure you get to know him later over some networking drinks at 5:30 on the rooftop. Okay, I'm not going to say too much about this presentation. He's going to deliver it himself. I just want you to give a huge, huge round of applause for our next speaker. He's going to talk about liberalizing innovation and accelerating delivery. Win-win. Ladies and gents, please welcome to the stage the CEO of Flows, James King. Yes.
Good afternoon. It is such a pleasure to be here with all of you today at a live event in another country, something which seemed so alien just months ago. So, today I'd like to talk about liberalizing innovation and accelerating delivery. Delivery of said innovation, but also delivery of the basics of features, applications, integrations, change. And that's because we need to get better at both. But before I start that, I would like to share with all of you here today an idea that I had 9 years ago. And it was an idea that I believed in enough to try and deliver, take time out of paid work to innovate. And on the very next slide, I will show you that idea. Here you have it. Just Join In. Just Join In was to be a site that connects users with physical activities. But those physical activities would be tailored to what the user was looking for out of fitness, whether to lose weight, build muscle by going to a gym, socialize through sports. Think Expedia, but for fitness. However, what you see here on screen today, that's as far as I ever got with it. I failed to bridge the gap between an idea and its realization. And I mainly failed because I couldn't build it myself. I can't code. And therefore, I couldn't build the features, the functionality required to bring Just Join In to life. I wasn't digitally empowered enough. And there were no tools or innovation to help me either. And I bring this up because this rings true today, 9 years later in gaming. We are really limited by who can actually innovate, who can actually deliver change, ultimately, who can build. And because of this, we're often quite slow at it, more often than not quite expensive. And yet, the world outside of ours, outside of gaming, it does all it can to empower more, to do more, to enable you and I to act on ideas at speed. Some examples to really highlight this. IKEA. IKEA delivers a universal toolkit that allows you and I to populate our offices, homes, with furniture that we can all build at speed and relatively low cost. Ultimately, it empowers us to build. And thanks to Amazon, if you wanted to be a global distributor of goods with a complete fulfillment service, they empower the everybody to do that overnight without having to invest in a single shop front, member of staff, even visit a country you're going to sell in. They enable you to react to change, to trends. Think of the number of mask sellers that appeared 18 months ago, having never sold a mask before in their lives. Amazon empowers you to think, react, and ultimately monetize. And yet, the ability to build at speed, quickly react to change or trends, tools for self-empowerment, a universal toolkit, is non-existent in our space. It's not ideas that we lack. It's just the ability to deliver them efficiently. We are held back by an over-reliance on legacy systems. Often, legacy processes, like these roadmaps, that you're forced to put any change, any idea, any innovation, falls to the top of one of these. And they're driven by legacy mentalities. It's these same mentalities that have built high walls around our companies, blocked the sharing of best practice. And this needs to change. And it needs to change soon. We are in the middle of a digital revolution. And other verticals within digital, they get this. They are sharing more. They're more open with each other. They open APIs to competition. They open source technology, share best practice, because they understand by doing this, they create a stronger digital ecosystem and one from which they can all benefit from being a part of. And if we want to thrive in the same way, we must start doing the same. But why now? Our industries always move quickly, from regulatory updates, new market entry requirements, new innovations, new integrations. It's what populates those overcrowded roadmaps. But we've just about managed. And I think we managed because ultimately we're all running at the same pace. No one's really delivering any better than the next person. But it's changing. 18 months ago, we got blindsided by the world's worst pandemic. It sent our workforce home, pushed offline players online. It's caused markets to regulate at a rate we've never seen before. And all this has done is acted to combine in putting more and more pressure on our tech and IT teams, put more onto those already overcrowded roadmaps. The pandemic has really acted to supercharge the need for improved digital delivery. And if that's not enough, there's the US. The US is now changing everything, regardless of the market you operate in. Whether you want to operate in America, do, or ever will, it doesn't really matter. The rate at which the states are regulating is acting to normalize gambling to the masses. It's putting us truly as an entertainment business in the eyes of those outside of gaming. We've got big media companies buying in, sports groups fighting for a slice, companies going public daily. We are going mainstream, but so therefore is our competition. And here lies the greatest push factor for change, to work better together, to improve our delivery, as we've got some serious challenges now setting their sights on our space. Cast your minds back 2 years, almost to the very day. It was at this event someone else stood up and said the following.
But who might disrupt us? This is kind of a fun question. What if we went to the future, came back, and we said, hey, we all lost the race. Guess who beat us? That should terrify you. Suppliers and operators alike. It's not happening, but it should terrify you.
Todd's prediction was 2 years ago, and I hope you listened. Yes, it's not Amazon, but there's others. This was 3 weeks ago. Disney have a market cap of over $300 billion. Put that in perspective to our market. The Aristocrat deal is announced to be, what, around $3 billion? $300 billion. That's a heck of a lot of firepower. And they're really, really good at using it. In under 2 years, Disney Plus grew to a subscriber base of over 120 million. If we're to compete, to defend our position, our market as we know it today, we must improve. So to support that change, to hopefully encourage it, I'd like today to introduce you to flows.
Imagine flowing. being in the groove constantly. Knowing that at all times your team has the power to turn ideas into actions, without business case distractions or coding factions. Just ease and speed and a genuine chance, no, need to reach your potential, to be your best. Innovate, accelerate, react to any test. Because without legacy tech and overcrowded roadmaps in the way, we can be free-flowing digital heroes every single day. So, heroes, how does it work for you? Well, imagine building features without having to join a queue or write a request. Imagine seamlessly connecting your systems and data while entering new markets. Imagine integrating a new third party, customizing real-time data ingestion, and building a dashboard to report it, and you don't even code. No need to imagine. That's flows. So, keep doing things the same old way, or just flow it. Flows, the innovation platform that sets your ideas free.
Flows can be our iGaming IKEA, a true self-service platform for innovation and digital empowerment. We can help you to supercharge and accelerate delivery, encourage sharing through our open and agnostic platform, and ultimately enable more to do more. We work quite simply by ingesting any API, any data stream you pointed us, Kafka, RabbitMQ, whatever you have, you pointed at us, Flows listens, and then it allows you to customize that information. It allows your teams to build applications, features, in minutes instead of months. We can, yeah?
Did you just say minutes instead of months? I'm sorry
I
to
did.
interrupt. I'm sorry.
You can build application with Flows in minutes.
I've known you for a long time, and if you said like, you know, days instead of months or weeks instead of months, it would have been like totally fine. But minutes instead of months is quite a claim. So I hope you don't mind. But we took the liberty of setting up this laptop over here, and I don't know if you want to volunteer to code or you got a colleague in here who's good at coding, because minutes instead of months. I mean, we have some minutes left of the presentation. Can you make something that's going to be? You know,
let me see if Mike will come up.
Yeah, you can
Mike,
phone a friend.
our CTO. Let me phone a friend.
Phone a friend. Mike.
With 5 minutes left, the
Mike,
fastest we have. Mike, can you step up?
Okay, no pressure, Mike, but we want you to build something. Yeah, round of applause for Mike.
Come on, Mike.
Yeah.
We have 5 minutes.
5 minutes, good man. Well volunteered, my goodness. So Mike is now going to build something that would normally take months in 5 minutes. Tell us a bit about what you're going to do. Talk us through it, Mike.
Sure thing. So what we're going to do today is we're going to actually write a flow, which is going to listen to the game spin event on a production site. And if you get 3 losses in a row on a game spin, it's going to pop up an offer. Give me some free spins. Wow. OK? So you're looking at the screen.
You dive in there.
Absolutely.
You do your thing. The clock is ticking. I don't want to distract you too much. But on the other hand, you know, it's a good demonstration of his skills as a coder. Or you're not coding, is it?
No, it's drag and drop. It's all drag and drop functionality. So this is listening to a stream. This is listening to a Kafka stream from Pragmatic Systems in this case. And all we're going to do is we're going to tell it to add some blocks in. So to begin with, we're going to have to filter out 3 game losses. So what we want to do is work out if we are actually a loss. To work out if you're a loss, well, it makes sense to have a look at the win amount. Oh, and before I do that, I actually need to tell it to listen to the game event. So this is transaction fund. This is your Kafka stream. Just listen to it, and it works out everything you have. So we come into the win event. We type in, what do you want to listen to? There is a field called win amount. It's prompting you on the screen. You have this amount. And we're going to say, is it greater than 0? Greater than 0, you've won something. If it equals 0, you haven't. It's nice and simple. If you haven't won anything, what we want to do is save some data. So all we're going to do here is just save a bit of data against this user. Now, in pragmatic speak, they use the term ECRID. That's the user ID. So you just have to type it in. There it is. I will use the ECRID. That's the name. And give this piece of data a name. Loss. And what do you want to do? I want to add 1 to it. That's simple. So now every time the player has a loss, we increment the data. Let's add another filter in here. Click Filter. What are we looking for? Well, the system's clever enough to learn that we've got loss. We've just defined it. Here it is, along with all your data. But we've just defined loss. And what we're going to say is, are you greater than or equal to 3? So now, are we bigger than 3? Yes, we are. What are we going to do? Well, go into custom. I'm not going to do anything with pragmatic. I'm going to send a message. We're integrated with Gist, which is a system to send back real-time to the user. What are we going to type in here? Well, we're going to send a message. This is, of course, bad luck. Bad luck is something that's been set up in the translation engine, so it's actually on the front end. We have to tell it who to send it to. It's going to go to the ECR ID. And a message, claim, it's going to put it onto the button. It translates it on the fly. One last thing before we send this live. What happens if you win? Well, you need to save data. What we need to do is reset the count again. So we come back in, tell it that for this user ID, I want you to reset the key loss, which is what we called it before. Oops, spell it correctly. And set it to 0. Time to live, just tell it to live for 30 minutes, so it resets everything after 30 minutes. That is a flow. That's a very simple one. I literally save it. I now action it by hitting the enable button. That is live on production right now. I know you don't believe me, so we're going to go and play it. This is Live Casino Friday. I'm just logging in. Up it pops. Let's go play 7 piggies. Let's hope the internet's good, and let's hope I don't win free spoons. This is going to be embarrassing.
If you win, it's drinks on you, Mike.
Here we go. So, win 1. Please be a loss. It is. Let's be another one. Okay. It's not often you want to lose, is it? So here we go. Third one. Let's hope and pray it works out. It did. OK, so now the system's sending the message in the background, and up pops. I'm hoping. There we go.
Whoa.
Your bad luck crowd. That's actually on production live now.
What? Round of applause, please. That was absolutely amazing. Thank you so much. Wow.
We can do more, can't it, Mike? Of course, I mean, this is one example of what flows can do.
Of course, you can do authentications, you can do risk and fraud analysis, you can actually check your payment providers are up and running. You can do all sorts of things.
Connect your systems, deliver true omni-channel.
Absolutely.
If you think it, ultimately you can flow it. But if you want to come and test us, we've got a stand here. We're there for the next 2 days. So think of something and ask us to demo it, and we'll get it live for you.
Amazing. Absolutely amazing. Great. Ladies and gentlemen,
thank you for your
round
time.
Of applause for James and Dave from Flows. Absolutely amazing.
Cheers,
thank you, dude. Thank you.
Well done, Mike.
That was fantastic. My God, absolutely brilliant. Mike on the keyboard there. Wonderful stuff. Yeah, do you have an idea for a flow? Go and visit James and Mike at the stand and get them to build the flow in front of your face. It doesn't get a better offer than that, my goodness. And a live demo has been the downfall of many a product. You have to have a lot of confidence in your product to demo it in a live situation where the internet is involved. So huge, huge kudos to Mike and James for that fantastic, fantastic demo. Okay. We are going to take a very, very short break, I think like 5 minutes, and we're going to be back with a fascinating discussion about one of the hottest areas in iGaming, the US of A, and we're going to dissect the dynamic US M&A activity with 4 of the leading experts. They're going to tell you what's what. I'll see you in 5 minutes. Thank you. everybody. Hello, hello. Welcome back to iGaming Next Valletta 2021. Loving the rock and roll music, fantastic. It's just the energy you need. We're in a post-lunch bit. You've hopefully had enough caffeine. You're having an exciting time, making some exciting business. Oh my goodness, we're back at a physical event. Isn't it awesome? It's great to be here. Great to see so many smiling faces in the audience. Okay, we are now going to do a deep dive into a very important topic. It's a place full of opportunity, but also potential for some mishaps as well if you don't know what you're doing. So we're going to put you right on this subject. Our next session is all about dissecting the dynamic US merger and acquisitions activity. So with companies constantly looking for aggressive expansion and consolidation and the rapid growth in demand across the United States in the past 5 years, mergers and acquisitions are coming in thick and fast. As we see brands taking over promising new players and big brands themselves getting involved with each other, what's next for the US? Our 4 expert speakers are going to help us explore this topic in some detail. I'd love for you to give a very, very warm welcome to them. First of all, I'm going to welcome to the stage the Director of Sales and Business Development at Gaming Innovation Group. Please welcome Martin Collins. Big round of applause, please, for Martin. Yes, fantastic. Good man. Good to see you, buddy. Hey, welcome, welcome. Fantastic. And sticking with the Celts, I'm happy to say, please welcome to the stage the Chief Commercial Officer of Push Gaming. A very warm welcome for Nicola Longmuir. Fantastic. Yay, fantastic. Welcome, Nicola. Lovely to see you. Fantastic. Okay, we've got all the Celts on the stage now, loving it. And we're going to welcome some extra special guest speakers by the magic of virtual technology and video streaming. Please welcome to the stage the SVP for American Regulatory Affairs and Responsible Gaming at NETAN, Martin Lika. Hey, Martin, how are you doing? Welcome. That's Martin. Give him a round of applause. Thank you so much. Excellent, and please give a very warm welcome to our final guest of our fantastic quartet, the CEO of Strive Gaming, Max Meltzer. Welcome, Max. How are you? Great to see you. Fantastic. People beaming in from all over the world. I absolutely love it. Okay, let's set the scene and get the elevator pitches from yourself. Just to share with the audience a little bit about what you do, who you do it with, that kind of thing, so they know where you fit in the ecosystem. Starting with your good self, Nikki.
Sure. Hi, nice to see everyone today. I'm CCO at Push Gaming. We produce amazing, innovative content for the industry and engagement tools, and very, very active in the industry. And I myself have been in the industry for well over 15 years, which I guess kind of makes me an industry veteran. Yeah, and I'm really happy to be here to be discussing the really hotly anticipated topic of M&A and the opportunities in the US.
Fantastic. Thanks, Nikki. Thank you for joining us. And coming over to your good self, Martin.
Yeah, good afternoon, Ocean. Good afternoon, guys. I work for GIG, and we are a market-leading provider of turnkey platform and services. I've been in the industry, in and around the industry for 15 years. Originally in recruitment, so many of you may know me from LinkedIn, perhaps. And now, obviously, I'm really excited about talking today about the situation in the States.
Fantastic. Welcome, Martin. Great to have you here. And coming over to Martin, number 2, Martin Lika. If you could share with the audience a little bit about what you do. Thank you.
I shall most happily do that. Good afternoon, everybody. Apologies that I can't be there with you in person. Me and the family have finally managed to relocate to the States. I've been in the industry for 12 years. I should have apologized for cramping the style of my fellow panelists that are there in person. Owing to my accent, that does not happen to be Scottish by any means. So really sorry about that. I've always been on the regulatory side of things, most recently tackling the US and other American markets, and I've added responsible gambling to my role as well. And I suppose, despite Entain being the talk of town lately, I hope everybody will understand that I will not be talking about that other operator whose name starts with D on this panel.
Okay, that's fair warning. Okay, no Slido questions about that one. Thank you very much. And congratulations on the move to the States. Brilliant news. And coming over to yourself, Max, just share, if you could share with the audience a little bit about what you do over there at Strive Gaming. Thank you.
Thanks so much, and I'm loving the energy from this panel already, and some great moderating and panels I've seen so far, actually, so great here, and good to be on this panel. Thanks for having me. I'm CEO of Strive Gaming. We're an iGaming platform totally focused on North America. We very much expect and have the ambitions to be the leading B2B platform in the space. You spent 5 years before co-founding and launching Strive, as I was 5 years as CCO of Canby, and was heavily involved in their commercial strategy on the executive management team of helping them succeed as the leading B2B sportsbook there. So yeah, I've just had 2 months now in the US and Canada. Feel very, very tired, but it's been a great journey, and long may that continue, and looking for great success. So very much looking forward to this panel today. Thanks for having me on.
Fantastic. Welcome all. Great to have you here. Okay, and we're actually going to stay with yourself, Max. Now, you know, you've been kind of working in the US market. You've got a great perspective on it. What do you see in terms of activity there? Do you think it's speeding up, it's slowing down? What's your take on the ground?
I think that everyone will clearly recognise that M&A activity in the US is it's just an incredible marketplace. If anyone had an understanding of EBITDA multipliers and their valuation assessments, there aren't so much of that kind of logic being placed at the moment. It's actually, I believe, more focused on how do you create barriers to entry, create specialisms and expertise within larger organisations within the marketplace, access to state-by-state markets that they otherwise might not be able to achieve, and technology that's hard to replicate, that would take multiple years to do so. I think this is, and databases. I think that's where M&A activity is drawing most of its activity at the moment. I think very interestingly, we saw the Aristocrat bid for Playtech. That's another consolidatory move into the digital space from one of the leading content providers on a land-based perspective, particularly to tribal nations in the US. And of course, there are much larger M&A activities going on at the moment. But I think that for the top 5 things I just mentioned previously, that's kind of what's driving a lot of the activities. And it's more about creating those blockers or enhancing your capabilities to succeed in the US and Canada, more so than just having very direct multipliers and valuations. So if people are worried about or feel concerned about the valuations that are going out there, it's because they're seeing a much longer-winded or long-winded tail on their M&A activity. So I think there is more to come. There's going to be more deals that are going to surprise us. It's going to be very interesting, but there's definitely consolidation that will happen globally as a result of this M&A activity. But what I can say is that probably means that there's a lot more opportunity for those small and medium businesses that perhaps elsewhere outside of the US have been worried about or been trying to compete. There's potential for Europe and South America and Africa and Australia-based businesses to be able to benefit in their local markets or local continents, whilst there's a lot of US activity going on as well. But that's just my thoughts on what's happening at the moment. I just think there's a lot more to come.
Very good. View from the ground, exciting times. And coming over to this, I'm going to call you Martin C and Martin L up there. So coming to you, Martin C. Okay. Now, Max mentioned the wonderful word of valuations. What's your take on the level of valuations? Does it seem sensible, a bit high? What's your take?
Okay, well, if we talk about the multiples, I think we can all accept they're a little bit crazy. But, you know, if we look at normal digital organisations that are involved in M&A, they're getting nowhere near the size of these multiples. And I think that the interesting thing is, Max mentioned the tail, and I think this is really, really important, because ultimately these multiples are being devised on the basis of the value of the entire market.
Yeah.
And there's factors that mean that we're unsure about that could actually affect the volume of revenue that these acquisitions and the overall conglomerates that come together in one unit can actually achieve. If we think about 2 things. Max also mentioned databases.
Yeah.
So FanDuel and DraftKings have got significantly bigger databases than their competition because they were in fantasy beforehand. But the question is that does a fantasy customer translate into a sports or a casino customer? This is something that is yet to be answered, in my opinion. And then the second thing, and Max again mentioned it because he covered all 5 points. Very well, Max.
Good man.
But the other thing is the tribes.
Oh,
So if we think about California, and there's a significant amount of tribes in California,
Sure.
and they're taking steps in order to block actual online being available in that particular state. So there's going to be a vote next November, I believe. And if that goes the way of the tribes, then it means it will make it incredibly difficult for any of these larger organizations to get access to a $10 billion market. So I think they're being very optimistic. Normally when you do an analysis, you have a low, a medium, and a high case. But I think this is high on steroids cases that they're working on. And they're not considering the ramifications of some of the elements that they don't have any control of.
Yeah, indeed. And it seems to be like a landscape that is, literally so many shifting planes, so many kind of unknown unknowns, and that kind of thing to affect what the valuation could actually mean. That's a great point. And coming over to yourself, Nikki, the name DraftKings has come up quite a bit, and of course there was that Hindenburg report, and shares were dropped off the back of it. From your perspective, do you think it's maybe more beneficial coming in the second wave, or what might be the benefits of being in the second wave?
Yeah, I mean, from a supplier point of view, there's a lot to be learned. There's so much unknown about the landscape in the US. The regulatory landscape changes from state to state. There seems to be little kind of economies of scale, I guess, if you like, between the regulatory bodies. So it's a very difficult place to navigate, and it's something that, there's definitely a benefit of looking at who has already entered the market and how they have been able to kind of launch content from a supplier point of view across multiple states, and how that can roll out so that you can learn from that, because I'm sure there's been a lot of mistakes made and things to learn from. So I do think it is beneficial to perhaps be in the second wave and get that real understanding of what is involved with entering that market. But of course, there's a huge opportunity there. Push aren't actually in the US at the moment, but it's a market that we're really looking at closely. The M&A activity, I think, provides lots of opportunity for kind of small to medium-sized businesses to enter. And I think that, with as Martin mentioned, the databases of players, potentially, the iGaming player being worth potentially 7 times a sportsbook player, is a really attractive opportunity for a game supplier such as Push. So we're really watching the market really closely, and looking at how, we're an online business first, a mobile first company. We don't have any kind of land-based heritage like a lot of the slot providers that are out there at the moment in the US. So it's about how we establish that brand there, and how we work with these big conglomerates to really make our mark in that industry, in that landscape, basically, in the US.
Absolutely. Thank you, Nikki. Yeah, very good points. And coming over to yourself, Martin L. on the big screen here, joining us virtually in Valletta. Talk to us a bit about the state of play with regulation. Is there much in the way of harmonization there? How might regulation and changes in regulation impact the M&A landscape? What's your take on regulation over there?
I believe it's fair to say that it's been relentless. If you think about it, the US sports betting market or markets opened only 3 years ago, and by now 30 plus states have regulated, and there are others in the pipeline. To address your point about harmonization, I suppose on the one hand, a lot of states would look at the likes of New Jersey, perhaps to a lesser extent Nevada, as a potential starting point, but then there's been a lot of creativity, if you will, or a lot of local idiosyncrasies have been introduced into all the relevant legislative and regulatory pieces. As my fellow panelists have very pertinently pointed out, there are a number of players that don't have, or either do not exist in Europe, or are not of the same magnitude if you look at the US landscape. And I suppose all of us on this panel, and I can imagine that most of the audience, we would be coming at it from the European perspective. So a steep learning curve. At the same time, it does feel like a rerun of the European regulatory developments, state by state, different rules trying to regulate the same product. Operators being, if not desperate, then at least keen to take advantage of any economies of scale, if any are to be had. So to give you a straight answer, there is some harmonization in the sense that the legislative rules in the individual states to some extent do resemble each other, but above and beyond that foundation, it's very, very different indeed. You need to go state by state. Access is absolutely critical, and it can be restricted, as we've seen on the examples of the likes of New York, Florida, of course. It might happen in California. I believe Martin C. mentioned the tribes. They have a critical role to play, and they seem to be getting in the stride of trying to get most of their existing rights to be able to expand their own offerings. So if I may paraphrase the point about valuations on steroids, I believe it's regulation on steroids as well, with all those states producing sports betting regulation. And let's not forget that as things stand at the moment, online casino regulation seems to be lagging far behind. But my view is that in 2022, 2023, all this will start picking up, and there are bound to be new issues to address while having to tackle the already existing issues.
Yes, yes, very good. Thank you. Very, very sharp analysis there. I like it. And we're going to come over to yourself, Martin C., as you are known, for the next few minutes. Talk to us a bit about, Martin L. mentioned that there was not so much harmonization there, but there's going to be harmonization on steroids and that kind of thing. Are there examples that are there opportunities that need to be taken advantage of now that may disappear in the future? What would your advice be about these kind of, the places where the regulation doesn't quite match up,
Well, actually, that question flows perfectly into the presentation that came beforehand by James King.
Yeah.
Because ultimately, it provides an opportunity for tech-led businesses to provide solutions that are very difficult to provide. I think we do have a base. Well, we will have a base in some states with GLI. Okay.
Yes.
But the states tend to be building on top of that and putting their own nuance on what they believe is important from a regulatory perspective. But from a tech perspective, from a building solutions perspective, it actually plays into the hands of organizations that are agile and can identify and analyze the regulations quickly and build a solution that matches those. So it's an opportunity for smaller businesses, again, to actually get a piece of the pie.
Very good. And Nikki, do you think there's any, a parallel to be drawn between what's happening in America now and anything that has happened in Europe, for example? Because we're all very familiar with the European market. How would you kind of transpose that?
I think that having that experience in Europe and, your company, my company, we've been operating in the European space for a long time, and navigating that, it's almost a minefield of regulation from country to country. I think we need to look at the US in the same way. It's 54 states, I think, 54 states in the US. Each of, when they all open up, will have slightly different nuances. But I think having that background in Europe and being able to navigate that across the various different regulated markets in Europe will stand, agile companies in good stead to be able to enter into that market a little bit more seamlessly and be able to navigate it. And having a really good compliance team, having a really kind of informative and a compliance team that can kind of keep up to date with the changes, which are so rapid, is really key to any business looking to enter into the US.
Yeah, absolutely. Wise words. Thank you. And coming over to yourself, Max, what's your reflection on what Nikki just said about having the right team members in place? Because obviously you're over there on the ground. You've kind of seen all this evolve and develop. Are there any things that you've had to do as a CEO that your company has had to do to kind of ride this wave, to prepare for where it's going to go, and to look out for this regulation on steroids and this kind of harmonization on steroids that is due to come, according to Martin L.
Well, Martin's right anyway, right from the beginning. The regulation is absolutely rapid in the US, and I think some people may not have expected that it would be so rapid. And now we've got this huge move in sports wagering, and let's see what happens next with iCasino. Maybe it's not as quick, but certainly it's happened, and you can see that Pennsylvania and Michigan and numbers are doing quite well for iCasino. Particularly for Entain with their work with BetMGM in Michigan, particularly it's been a great standout how companies can succeed. And then again, if we talk about waves, but when is the wave? Like, there isn't just one single wave domestically across the US. There are multiple ones depending on states that will regulate. And we talked about California, but there's also what's going to happen next with Texas. That's going to be huge. Obviously, we have the New York bid that's quite restricted in terms of numbers. Florida, what we're trying to do with what's happening with the Seminoles right now, to what extent will that roll out? And then there's still a multitude of other states. So it's kind of like wondering at what point do we say that what really is a first wave and a second wave or third wave? I think there's still opportunities for people to join in as suppliers or B2Cs, operators in these other states and do deals. I think from Strive Gaming's perspective, the critical thing is, as what I think everyone's talked about here, we know in particular that having the right technology is absolutely fundamental. It needs to be something that can be hugely scalable from our perspective. Considering that sports wagering is the driver at the moment of regulation, then it needs to be technology that can scale with the peaks and troughs of sports wagering traffic that's obviously different from casino. And that's something that we've particularly been focusing on. And then in terms of interacting in the US and Canada, there's a slightly different message in the way that we may otherwise be discussing it here in Malta today, is that whilst we know that the technology that we may be able to develop is very appealing from a regulatory landscape perspective, I think over in the US and Canada, they very much want to hear that how you're setting up to be American, in essence, or Canadian. So it's really important that there is an extensive amount of staff and support and understanding of US sports and casino patrons and interacting with the retail and online databases and how they engage with each other, and the multi-vertical engagements like Martin C. mentioned before about how does fantasy players transfer across, how does table games players transfer across from casino, poker players, and then how do you get them online? And there's this huge, there's so much growth. There's so much growth within what's happening over there in the US that there's definitely an opportunity for more suppliers to enter the market. There's certainly more opportunities for B2Cs still to make a play, but consolidation would be the big home front, which I guess, which is why this whole panel's put together. But for us, it's just really being a very scalable business in the US and having people on the ground that know about wagering, casino in that, and how to convert those players. And ultimately, the big battle also to add that I see is, with all this consolidation and money being spent, is the next battlefield is retaining them, and what and how you retain them. Because it's great having the databases and spending big bucks and bonuses. Caesars, for example, everyone would have discussed their $5,000 match your bet bonuses. And there'll be others making big plays, but technology is the core of how you retain your players and the expertise that you have in organisations, and that's a big battlefield as well, which I think is driving a lot of M&A now.
Indeed. So it sounds like we've kind of been through a period of land grab. The big players have gone over there, try to hoover up as many of the right people as possible to kind of prepare the ground. But it sounds like there's still opportunities there. But it's a place where, as Max has just said, there's phenomenal growth. We've also got brands looking, for many, many multiples of revenue in terms of their projections and valuations, etc. Open question for anybody who wants to jump in. Do we think that regulation is keeping up with the financial and commercial speed of the sector over there? Is it a race? Are they in harmony? Does something need to happen in one place or the next to even things out? What do we think is going to happen with that balance? So, open question.
I'm happy to take it if you want me to.
Oh, fantastic. Well volunteered. Thank you, Martin.
Well, I suppose what I've certainly experienced, and I believe it extends to the whole industry, has been sort of a cluster effect. in the sense that a state would regulate, and to your point, the neighboring states would all of a sudden realize that they may be missing out. And then they start thinking, oh, we need to catch up, because otherwise our people, there are literally no physical borders here in the States, between the states, they would drive down to the nearest town in the neighboring state, they will place their bets there and then they'll come home. So there might be a loss in potential tax revenue. So in this sense, the regulation has had to keep up with the commercial developments and the demand, put it simply. And I suppose Max made a couple of crucial points that I would like to echo. Completely agree that on the technology side, all these operators, regardless of their size, need to be as nimble as possible to be able to keep up. And I suppose the other critical factor, and I would not shy away from calling it a cultural revolution, is all the hype associated with sports betting. Now, people watching football in the States, football as in American football, not football as in football or soccer, if you will, 2, 3, 4 years ago, you wouldn't have gotten any betting adverts because they were simply illegal. These days, ESPN has programs that are dedicated to betting, and they are building on their tradition of fantasy sports. They are building on their tradition of fantasy leagues. I'm in a couple of them, pick them competitions, and all that. So I believe that the cultural revolution in the States is very much being channeled by the TV stations and the sports, and perhaps, and that will be my final point, that also explains, or is in my view, one of the reasons why online casino has not picked up that quickly. Because I would suggest it's very difficult to translate online casinos into TV programs, or into something that people who watch sports on TV could easily relate to.
Great points. Thank you. Thank you very much, Martin. And coming over to the other Martin here in Valletta, Malta. We've heard individual states being mentioned, Pennsylvania, New Jersey, Michigan. Do you think there's a tension between the states doing their own thing and the startups who are servicing the industry over there? Because obviously, the world of tech is kind of about a global audience and, super servicing people across boundaries. How is kind of tech fitting into this fragmented landscape in terms of US regulation?
I don't think it's a tension. I think that as Europeans, we tend to look at the US as one market, but as rightly been pointed out already, it's actually 50 different countries.
Yeah, right.
And that's how we have to look at it.
Yeah.
So, yes, like in New Jersey, with the DGE, there's lots of hoops that you have to jump through. The regulation is complex, but that's the name of the game. And from our perspective at GIG, that's a positive thing, in all honesty, because it means that 25 different platform providers can't provide what is required in that market. We know we can do that. We've done it since 2018. So I don't see it as a tension. I see it as an opportunity.
I like it. Excellent. Does anyone else want to jump in on that? Or, another question I'm curious about is just, if you have any key predictions for the future or key recommendations, if there are folks here that kind of curious about getting into the space, maybe in the second wave or the third wave, there's going to be multiple waves. Are there any mistakes that you've seen other people make that you would like to avoid, or any particular kind of fast track tips that you've seen that you think, this is a good idea for, in the space of M&A, in the space of tech innovation, etc., or kind of addressing the market in the specific way that the US needs to be addressed?
I don't think. Sorry
No, please,
but
please.
I don't think there's any kind of fast track available for the US. I think it has to be navigated very, very carefully.
Sure.
And as I said, you can learn from the first entrance into the markets, into the US market, and kind of learn from that as you go forward. But you need to, as Martin said, need to be agile. You need to be able to respond to the regulation from a tech point of view. I think there's a lot of for suppliers with their own platforms, such as ourselves, there's a lot of auditing that needs to happen, and we need to make sure that we're nimble enough to make the required changes to be able to kind of enter the market, but also, I guess, from a consolidation point of view, from the operators that are consolidating within the US, can they do it quickly enough? As Martin mentioned, the platform reliability will be massively key to retaining players, and there's nothing new there. There's nothing new to acquiring and retaining players. We've seen it. We need to learn from the European market and what we've learned there, how that's regulated over time, and apply the same logic again, I think, to the US, but across multi-state. So I think that needs to be kept in mind as well. Our platform's going to be reliable enough to retain players, as well as the big offers and the acquisition plans to bring the players in the first place. And a big challenge, obviously, as mentioned, is really the cross-sell into the iGaming space, into casino. It's not inherent as part of the culture, as Martin mentioned. It's fairly new, and it's about how innovative gaming suppliers and companies, supplying into that market can really take advantage of those opportunities and a new type of customer.
Yeah, indeed.
As well as the old school sports bettor, fantasy sports player. How do we appeal to them as well as perhaps a new generation?
Yeah, well said, absolutely. So don't, ignore the operational side of things at your peril. If you can't scale, you'll lose customers, and it's a key opportunity. You don't want to be doing that. We've got about a minute left. I'm just going to open it up. Does anybody else want to jump in? Yes, okay, Max, good man. Thank you.
So yeah, thanks so much. Yeah, I think really crucially and this is a bit more Martin L's perspective, but from a regulatory perspective, whether you're an operator or B2B supplier, I think really understanding state by state the political dynamics are really important when you enter a market, whether you're trying to sell directly to customers or you're doing a B2B pitch to operators. It's understanding from one state to the next who are the real powerhouses to influence the regulation in that landscape, because I've seen people be, the way that we message, if we're talking about messaging, communicating to the US, it's not really the US, it really is state by state. And if you are going to go to a certain state and try and operate in that state, it might be one that's heavily, for example, influenced by tribal nation. And then to say anything negative about customer databases or saying that land-based is not really the focus is going to negatively impact how you're perceived when you're entering that marketplace. So any state you go into, it's really important that we find that you understand who's in there and how they make their decisions and what they want to hear and how you reinforce that message. And that also relates to your own technical setup, because from one state to the next, you're going to need to be different. So if you are coming to a state that heavily influenced by their own, by land-based customer databases, then they're going to want to see that you have an ability to serve them on the land-based and have technology that can scale across, online and retail and cross-serving those kind of customers. And I think that's really, really important. And also, as the US scales, exactly what Martin said, there's no borders, physical borders, but there is the legal Wire Act requirements, which may or may not further be dismantled at some other later stage. But if you're going to drive between one state and the next, there needs to be some sort of technology that enables you to track, hold your same account from one state to the next in a smooth manner, both as a customer and as an operator to see that, but in a way that adheres to Wire Act. And then also that, so there's so much technological and regulatory, political and messaging perspectives that I think you have to take when you go to the US, which is really critical. And I think if you're not really focused on it and you won't get really deeply put resources behind it, I don't think it's worth anyone's time, whether it's an operator or a B2B supplier. I think it really needs absolute dedication. It's really completely very, very difficult, but so much opportunity still there, of course.
Amazing. Well, it sounds very much like a land of opportunity, but you need to really just go for it and, have the right partners, the right approach, the right people, and very much the right technology, and look out for that regulation. Always be on the right side of it. So that's all we have time for. Ladies and gents, please join me in welcoming our wonderful two pair of Scots on the stage, Nicola Longmuir and Martin Collins, and joining us virtually, Martin Lika and Max Meltzer. Thank you so much. Fantastic. A brilliant chat. I learned so much from that. Thank you so much. Okay, folks, just a few reminders about awesome things that we have lined up for you today. We have some, the most picturesque networking drinks you're ever going to have in your life. They are on the roof of this beautiful building. They overlook the harbour of Valletta. You can take all your Instagram selfies, use the hashtag NEXT’21. It's absolutely made for it. That's at 5:30, which is getting closer and closer. I am noticing it is thirsty work up here. And at 7 o'clock, we've got the phenomenal iGaming Idol event. I hope to see some of you there. You're going to meet the superstars of the industry, where they get the industry recognition from their peers. And coming very shortly to this stage right now, it's such an honor that we are going to be welcoming the CPO of Evolution Gaming, no less than Todd Haushalter. Now, he gave one of the totemic, industry-defining speeches at iGaming Next a few years ago, and then COVID happened. And at the end of that speech, he said, "The future belongs to you." I cannot wait. I cannot wait to see what Todd is going to say now. It is going to be stunning, I promise you. Don't move anywhere. Make yourself comfortable. Get ready for Todd Haushalter. I'll see you in a few minutes. Man. Hello, hello, you beautiful people. Welcome back to iGaming Next Valletta 2021. If we haven't met before, my name's Oisin Lunny. I am so happy to be here. Isn't it great to have an in-person event? You know, you can get an energy from all sitting here in this beautiful venue, from seeing these amazing speakers that I promise you, you will not find on any Zoom call, no matter how high definition it is. So speaking of which, we've got a fantastic, fantastic keynote presentation for you right now. Our next speaker gave his first keynote presentation, believe it or not, 2 years ago at iGaming Next here in Malta. And it really was one of the defining speeches of the sector. It laid out the future. It brought some incredible analysis, some insights, some innovative, different thinking. And it was, I know, incredibly inspiring for everybody who watched it. He got a standing ovation. So listen, don't be shy at the end of this one, because I promise you it'll be worth it. So I'm going to hand over to the very, very brilliant Todd Haushalter, who was the CPO of Evolution Gaming. Now, believe it or not, the last keynote presentation he gave at iGaming Next was his first keynote. Right here is his second. You are in for a treat. You are in a privileged position to get the download from the most successful company in the sector. I want you to give your biggest, warmest, most raucous, loudest welcome to our very, very special keynote speaker. Please welcome Todd Haushalter. Thank you. Yes.
Good afternoon, great minds of the gaming industry. I'm pumped. Let's say, for example, you're the prime minister of a country, and we'll call this country your country. And that country has a border, and that border has an angry neighbor on it. And ordinarily, that wouldn't be that big of a deal, but in this particular case, that angry neighbor has nukes. Okay? Where are you going with this, Todd? So, your generals and admirals come to you, and they say, we have a big idea to share with you, and you really need to listen. Okay, what's the big idea? We need to preemptively attack our neighbors, all million of them, because if we don't, they're going to attack us, and it's going to be 10 million of us. This is a big idea. Prime ministers have to grapple with this stuff all the time. By the way, isn't it incredibly scary to think of some of the prime ministers out there and to think that they might be dealing with actually this kind of stuff? But okay, fine. So that's a little heavy. I get it. But let's take a different kind of big decision that we deal with in business. Maybe you want to, maybe some of you are lucky enough to have one of these on your wrist. And they have a challenge, a big challenge facing them. And they need to have all the right ideas. That challenge is what? The digital watch. It's coming. And maybe they'll be lucky enough that as youngsters make money, they'll trade in their Apple Watches for Rolexes, but maybe not. But what do they do? Do they do some hybrid watch? Do they partner with Apple? Do they partner with Samsung? Do they go digital while they're holding on to their base? Do they try to go into new product lines? They need to have all the right ideas. And they're going to be good at getting those ideas and fleshing those ideas out. And that's hard. And that's what I want to talk about today. The simple notion of ideas. And I think this is the lifeblood of all business. And that's what we all do. We're all in business. A little bit about me. This is young Todd. And I've been thinking about casinos and games since I was about that age. And I had ideas that were bigger than my suit. And I've been lucky enough at Evolution to be involved in some of the biggest games in the industry. Myself and the amazing team at Evolution have brought some of the best games out there to life. And we've basically launched this whole new genre of games called game shows. We're very proud of that. And so what I want to do is I basically want to share our playbook with you. How do we generate ideas? What do we do with them? This comes up a lot in conversation. And so I want to basically open it up and do the very best I can to contribute something to the industry. And hopefully you can take it away and turn your company into an idea factory. And you can have the best ideas, and you can leverage those ideas, and we can all do great things together. Because I really believe that when one of us does well, we all do well. You do not want to be the only casino on Las Vegas Boulevard. You don't want to be one of 4 on Las Vegas Boulevard. You want to have 30, 40 casinos, a robust, thriving industry. That is how we will all thrive. I really believe that. But Todd, why help competitors have bad ideas? Or have better ideas, excuse me. Well, Mr. Skeptical, first of all, there's not just competitors in the room. We've got partners here. We've got all kinds of people. Small companies, big companies. And I just said it. We want a thriving industry. What is good for one is good for all, even though it stings for a minute when you see a competitor do something good. But let's talk about ideas. Everything good in this world started as an idea. The iPhone began as an idea. Flight, obsessed man until we achieved it as an idea. Even your very existence started as an idea that your father should probably ask out your mother, and she thought, sounds like a good idea. But ideas are fragile. When they are young, they're very, very fragile. We think we know all the good ideas, and yes, in hindsight, it's easy. It's really easy to spot the zingers when you're looking backwards. Everything seems obvious. To have an idea is effectively to try to predict the future. That's basically what you're trying to do. And that's hard. It's really hard to predict the future. We think we're better at it than we are because we're good at predicting the past. But who could have possibly predicted an airborne virus would keep us indoors for basically a year and a half and still going? That was almost impossible to foresee, that there'd be no cruising, no hotels, no anything. Impossible to foresee that. There was a time when Nokia was thought to be unstoppable, literally unstoppable. Forbes magazine on their cover, can anyone stop the cell phone king? And how could have any of us guessed that the way we would take a taxi in the year 2021 is to ride in a car with a stranger? Almost impossible to foresee that. And all of the things you would have worried about if I told you that was the future, that the service would be terrible and that you can't trust people and they're going to take you on long routes, those are actually all better. Or that the biggest threat to Marriott could be staying in other people's homes. This stuff is really hard to foresee. But not everything is about progress. Sometimes you expect progress and there's not. In 1969, we put a man on the moon. We went back a couple of times in subsequent years, and then we basically had 50 years of nothing in space. Elon Musk comes along, he's making it interesting again, but it's been a pretty flat 50 years. For sure, in 1970, you would have predicted moon bases and all sorts of fun stuff like this. And also in the almost impossible to predict category, who would have thought that in 1981, you could go from London to Los Angeles faster than you can in 2021? How can this happen? It's hard to predict the future. And just for fun, here's a whole batch of things that didn't even exist 20 years ago that almost dominate your life today. Facebook, WhatsApp, digital music, Tesla, Google Maps, Bitcoin, Amazon Alexa, the iPhone, and the Xbox. Now, I gotta say, life was pretty good 20 years ago. So let's jump in to how to have the good ideas. And more specifically, how to avoid the bad ones to start. And as I said, ideas are just predictions. So here's a collection of 7 doozies, all of which I've committed. And I hope you can use these in your own companies to avoid these traps of having bad ideas. Number 1 is arrogance. We just think we're better than we are. Excite passed on the opportunity to buy Google for practically nothing. Personal bias. Professional mathematicians and political prognosticators said there was a 99% chance that Hillary Clinton would beat Donald Trump. They just couldn't get past their own biases. And these are supposed to be the data-driven people. Simple bad data. You base an idea on bad data. We lost an actual mission to Mars because we missed a metric to standard conversion. Another way you miss on predictions is the facts are just too painful to face. You can see the digital camera revolution happening in slow motion right in front of you, but you just can't bring yourself to thinking that people will ever separate themselves from film, that they must always want to print out their pictures. It's just too painful to face. And good old-fashioned trying to please the boss. We see this one sometimes in acquisitions. You come back with the numbers, they don't quite add up. You say, boss, I don't think we can justify this acquisition. You say, well, what kind of growth assumptions do you have there? Jiggle them up a little bit. Okay, yeah, there we go. Now we're talking. Or you just preemptively say what your boss wants to hear. But the boss could be wrong. Of course, the hammer-nail problem. This is where every problem looks like a nail when you're the hammer. And if you were BlackBerry, you saw the world through a keyboard. There was no world that you could imagine where people would be separated from their physical keyboards. You told yourself business users will never go to a fully flat screen phone. And sitting around in meetings, particularly ideation meetings, and saying, I think it's lovely. That's a great idea. That's interesting. That's not where the magic is. The magic is in beating the heck out of ideas, getting rough with each other, being highly critical. That's how you're going to get to the real answers. That's how you're going to beat up ideas and leave most of them on the floor, hopefully. Because the only way you're going to leave a lot of them on the floor is if you have a lot of them. But you don't have to take my word for it. Here's what the master had to say.
People willing to tell you you're wrong?
Yeah.
I mean, other than snarky journalists. I mean, people that work for you.
Oh, yeah. No, we have wonderful arguments.
And do you win them all? Or?
Oh, no, I wish I did. No, see, you can't. If you want to hire great people and have them stay working for you, you have to let them make a lot of decisions, and you have to be run by ideas, not hierarchy. The best ideas have to win. So, otherwise, good people don't stay.
But you must be more than a facilitator who runs meetings. You obviously contribute your own ideas.
I contribute ideas, sure. Well, why would I be there if I didn't?
Why would he be there if he didn't? Of course. And so now I want to share with you some of the tricks that we've learned about how to turn your company into an actual idea factory. Number one, you've got to get the right people at the table. Too often, we invite this person or that person because, well, that's a department head. I want to do that out of respect. It's disrespectful to invite people to a meeting where they can't sufficiently contribute. Get the right people around the table. Let every idea be good for 30 seconds. Maybe if it's really stupid, only 10 seconds. But give it a chance. Give every idea a chance. You only have people in the room that are worthy to be there, and so let it be a good idea for 30 seconds. If you shoot them down quickly, you're going to get a lot less of them. This one you can use in your personal life. Try your best to eliminate the word but from your vocabulary. Yeah, it's an interesting idea, but yeah, that's an interesting idea. And something else I'd like you to think about. It's small, but in these meetings, if you become the but person, people get defensive. They want to come back at you and explain to you what you're missing. One that we do a lot is we'll have a standoff, and each side has its own position. And I'll say, I'll tell you what, you take my side, I'll take your side. And I'll go first. I'll argue why you're right. And then I will go. An amazing thing happens when you start saying out loud the other person's side. You just start seeing it better. Then they do the same for you. Then you can go back to your sides. But it really ends up bringing you closer together. This one's really, really useful when you're stuck. Celebrate and make a big to-do out of reversing yourself. You want to have a culture where the best idea wins. That means you have to let go of things. And if you show your organization that you change your mind, then others will start changing their mind, and all that will rule in the end is the best idea. People are nervous about this. They fear that they're going to look inconsistent. It's okay. All that matters is the product that ships that the public sees. That's it. No one sees the meetings. And then I'm sad to say, there are some people we just have to ban from our meetings. Number one is this guy. He can suck the energy out of any room. He's got a lot of tricks that he uses to do it. Sometimes he just scowls at you like every idea you ever said is stupid. Sometimes it's Mr. Too Hard. Sometimes it's Mr. Impossible. Sometimes it's Mr. Don't have the resources. The energy vampires, they need to go. By the way, energy vampires can be great at other things. They might be great at execution. They might be great at detailing things. But they're not allowed to be in the idea sessions. This guy. We all know this guy. The idea repeater, I think it speaks for itself. Of course, there's bad idea guy. No one likes to really talk about this, but some people just specialize in having bad ideas. They just do. It's okay. They're allowed to have bad ideas. It's not a crime. It doesn't make them a bad person, but it does make the meetings pretty unproductive. Because if we're going to have this rule about letting every idea be good for 30 seconds or more, and then we're going to try to be respectful, and then everybody's going to kind of react to everybody else's idea, it's just not productive. There are people in your organization that are good at having ideas. Get them at the table. I like to use these. It's a sure thing that creativity doesn't come to you from 9 a.m. to 5 p.m. Monday through Friday. And so me and the team, we're always shooting each other ideas in WhatsApp. Hey, what about this? What if we tried this? Hey, that problem that we're stuck on, check this out. Oh, look at this interesting thing I found from the 1920s, this weird amusement game that they used to have in San Francisco. And it's just a constant idea factory flowing back and forth. And if your gang says, I don't want to use WhatsApp, I don't want to interact after 5 p.m. or the weekends, that's fine. That's perfectly fine. But it'd be highly unlikely that they're going to be great idea people. The great idea people want to be constantly going back and forth. You don't have to be responsive on nights and weekends, but use them. Make predictions. This is uncomfortable. You will see your team squirm. Before you launch a new product, predict what the day one revenue is going to be, the week one, the month one. If it's a game, how many players are you going to get? Force people, write it down, and then copy it, paste it into an email for when you're going to actually have the results, and see how you did. It will help refine your thinking. You'll realize your blind spots. I certainly realized a whole bunch of blind spots that I have. Good ideas are specific. They're executable, they're cheap, they're fast, and they come early in the product development. That doesn't mean that building a space shuttle isn't a good idea. But those are the ones we talk about. Most of the ideas that we have in our companies are to, change the shape of a button, or to, change a font, or to try a new marketing program or something like this. That's where most of the ideas live. They don't have to be big, grand ideas. And it's great if they're specific, executable, cheap, fast, and don't come late. And just for total clarity, the bad ideas, not that they're all bad, but generally it's vague, they're hard to implement, they cost a ton of money, they take a long time, and they're late. Now, it's not a sin to have an idea very late in the game development and have it be an expensive one. If it's good, we'll do it. But boy, oh boy, it's sure better when they're easy. Give praise when people have good ideas. You might not be able to give them stock or more money, but it is free to give them praise. Hopefully it's genuine praise. Usually you can find some reason to give genuine praise, particularly when people contribute to having good ideas. If you do this, I assure you, you will get more good ideas. Take the blame. When something goes wrong, take the heat. Protect the team. You don't lose the chance to go to your team later and say, hey, I think we missed that one pretty good. What do you think we missed there? You can talk to them privately. But again, if you're trying to build an idea factory, you don't want to have an environment where it's hostile when you're wrong. And this one's huge. And it's so easy to put on a slide, and it's so hard to do. But really and truly listen when someone else is talking. And it's so often people just wait to talk, or you're getting your next line ready or whatever. But really listen, because ideas, when they're young, They are fragile. They're really fragile. You think, again, we have this impression that we're going to see a great idea and it's going to immediately pop and we're going to know what it looks like. But take an image like this. Simple image, some black and white lines going down, some diagonal blue lines, right? Pretty straightforward. Except they're not diagonal blue lines. They're straight lines. And you miss it. Your brain plays tricks on you. Which circle is bigger, the green one or the red one? Or are they the same size? You've got your opinions? You were expecting me to do something else, weren't you? This is what that riddle actually looks like. It's hard when you have a big object next to small ones and it's anchored to see the difference. But I knew you'd be smart enough to pick that off, so I had to. And those are visual, and they're interesting, but they're not all visual. Sometimes you really just miss stuff. Coffee and a donut cost $1.10. The coffee costs $1 more than the donut. How much does the coffee cost? Even if you got the answer right, on your way to getting there, you probably thought the coffee's $1. It's not easy to see these things immediately. And ideas are the same way. So you've got to listen, really and truly listen, and it's hard. But if you get the right people in the room and everybody's respectful, you have a much better chance. This is how we're going to get the best ideas flowing. And right now, our industry has pressure. Germany is pressure. The Netherlands is pressure. The UK is pressure. Satisfying the regulators in Pennsylvania and New Jersey and Michigan and elsewhere, and doing all these things at once, and allocating your tech resources and deciding which markets do you want to be in, and do you want to spend money on innovation or going live and meeting compliance requirements so you can be in some new market on day one. These are hard decisions. They're really hard. On top of that, you've got new competitors entering in every day. They have big wallets, and it's tough. It's a tough space. Trivia question. What online gambling company has the highest market capitalization? You got your answers? Coinbase. What did you think I was going to say? They have a $75 billion, $80 billion market cap. And I'm having a little bit of fun calling them an online gambling company, but not too much. Not too much. This is how people gamble now. It's a new way that people gamble. And it doesn't seem to be going anywhere. But even more gambling than that is these guys, Robinhood. This is your competition. It's one of your competitors. And they have weaponry at their disposal that online gaming companies don't have. They can sign you up when you're 18 years old under the guise of investing. They can give you credit. Pretty powerful. And they don't have to satisfy gaming regulations. This is gambling. This is online gambling, masquerading as investing. And luckily, there's plenty of wonderful people to help us get rich online. I scoured YouTube to see what kind of activity I could find, and I saw guys like this. Robinhood can make you rich. Quit your job. Secret pancake. Swap strategy. And this nice young man is offering to help us make 1,000x returns on our money. How cool is that? What are we doing working for a living? Seems like a nice guy. If you don't believe this is gambling because I say it, I'm a gambling professional. I know what gambling looks like. Let's see what the world's greatest investor has to say about it.
Casino participants were dealing in puts and calls. I looked up on Apple, the number of 7-day calls and 14-day calls outstanding, and I'm sure A lot of that is coming through Robinhood. That's a bunch of people writing. They're gambling on the price of Apple over the next 7 days or 14. There's nothing, there's nothing illegal about it. There's nothing immoral.
He's saying he called them casino participants on Robinhood. It's fine. The water's warm. We got a new gambling company in the world. It's great. But they don't treat it like a gambling company. That's interesting. And they're something of a competitor. Disney builds new Magic Kingdom in sports betting. It was mentioned earlier. Tim Heath said he thinks in 20 years it's Disney's game. CEO of Disney the other day said Disney plans to get aggressive about expanding its presence in sports wagering. That was unthinkable practically yesterday. And Disney doesn't enter into the gaming world by putting a bunch of craps tables in the Magic Kingdom. That's not how you kick it off. You start by taking the ESPN brand, putting it over here, seeing how it goes. That's how you get into online gaming. And they have unlimited money and resources. You know how much energy I've spent trying to license Disney IP? It's impossible. Sounds like I'm not alone. We've got some wonderful new entrants into the space. And what's cool about these guys is they didn't grow up in online gaming. They grew up in fantasy. And they've been a wonderful contributor to our industry. They're helping normalize the conversation around our industry. And that's very useful to everybody. And they didn't even start out in this industry. You don't know where the next competitors are going to come from. It's hard to see around the corner. The only way we are going to stay competitive, the only way we are going to lead the future, the only way the people in this room are going to determine what people are playing in 2030 and 2035 is if we have better ideas and then ultimately execution, which is a whole different subject, but it starts with the ideas. You need to become an idea factory. 2, maybe 3 ideas a year, 4 ideas, 5 ideas. That's all you need. Could be one good one. This is what it takes. This is how you're going to win the future. And I hope some of the tricks I've shared today are useful to you in your own companies. And if you ever find yourself as the CEO of Rolex or the prime minister of your country, and you can use these tricks, then super. Otherwise, you can use them in your own business. Because when one of us does something great, I'm telling you, it's good for all of us. This is our industry. This is our time. Thank you very much.
Fantastic. Absolutely sensational. My goodness, another inspiring download from the main man, standing room only at the back. That's what I like to see. You've heard of TED Talks. That was a Todd Talk. I can't believe that is the second talk he's ever given of this scale. You lucky, lucky people, my goodness. I wonder if it's, I suspect that's going to be caned on YouTube as the previous one was. So much good information there. Disney. I was not expecting that. Absolutely brilliant. Some key insights there. Okay, now, earlier on, during one of my panels, you may have noticed that myself and some colleagues sat down and a video played behind us. That was because we are very keen to tell you about something really exciting happening tomorrow morning. Now, tomorrow morning, iSoftBet are bringing a gentleman called Mark Priestley to the event, and he is formerly of McLaren F1 Racing. It's going to be an incredibly exciting session. He's going to be joined by some iGaming VIPs, and I'd love for you now to watch this video that's going to explain exactly what's going to happen tomorrow. It is unmissable. Okay, roll VT. Thank you.
I'm Andrew Bonnici, Chief Product Officer at iSoftBet. Join us tomorrow at 10 a.m. for an interactive session with a Formula One guest speaker, William Hill and Betson, to discuss the importance of customization within engagement solutions.
Awesome, there it is. iSoft Bet tomorrow morning. Do not miss it. It's going to be sensational. You're going to get some great insights there. I swear to God, the program that's been put together by Pierre, by Rory, by the entire team at iGaming Next is just wall-to-wall brilliance. I'm so impressed with the speakers. It's been an honor to be a part of it. Now, speaking of which, we are going to welcome some phenomenal CEOs to the stage. We actually have a session coming up in a few minutes, which is called Getting Up Close and Personal with the New Style of CEO. So that's not going to happen for a few minutes. You may have noticed a few changes to our schedule. If you want to get the latest schedule, just scan this QR code on your badge and you can see the very latest schedule beamed down to your phone. Just a reminder, we're having drinks on the rooftop at 5:30. Don't miss it. It's the perfect, yes, absolutely. Hallelujah. Thank you. Drinks on the roof at 5:30. We're all there. And iGaming Idle at 7 o'clock. Don't miss it. We'll be back in a few minutes here. Don't touch that dial. Such a beautiful place. It's great to be here. Okay, we're going to move on to our next panel, and it's a super, super interesting one. You are going to get up close and personal with a new style of CEO. We have a great lineup of CEOs for you, but first, let's welcome to the stage, give a very warm iGaming Next Valletta welcome to our moderator, who is the CEO himself of Press Enter Group. Please welcome to the stage, Lasse Mertzog.
Hi everyone, and welcome to the last panel of the day, and perhaps the most anticipated panel of the day. Who knows? And if so, it wouldn't be for nothing, considering the guests that I have with me today. My name is Lasse Mertzog, CEO of Press Enter Group, and today's panel is called Up Close and Personal with a New Style of CEO. Normally when I moderate panels, I try to stay away from the standard questions, at least as much as I can. It's in the hope of getting to know the panelists a bit better, trying to get some personal questions in there, and actually hear something that we haven't heard before. And this time around, I reached out for help. You might have seen the campaigns we've been running on social media, where we asked all of you to submit questions before that you wanted me to ask the panelists. I've received a lot of questions, so thanks all. And the next 45 minutes, I'm going to combine your questions with a few of my own, with the goal to try to get to know them as much as possibly possible. So without further ado, I would like to welcome in our first CEO, Maja Pärt, CEO, YOLO Group. I would also like to welcome in Jesper Svensson, CEO, Betsson Group. David Flynn, CEO, Glitnor Group. Michael Daly, CEO, Catena Media. Welcome. I think most of you already know them, but let's give them a few seconds at least to introduce themselves. Maria, you want to go first?
Hi, I'm Maja Pärt, and I'm the CEO of YOLO Group. Previously, we were actually known as the Coin Gaming Group. We've just recently rebranded. And currently in our product portfolio, we hold a number of B2C and B2B vertical products. And yes, to the moon.
Thank you very much, Maja.
Good.
Jesper.
So I'm Jesper, I'm the operational CEO for Betsson Group. And well, I've been in gaming as long as I can remember. It's the only industry I ever been in. So I've been for quite some time, and here in Malta the last 8 years with Betsson.
Thank you, Jesper. David.
Thank you. Hi, everybody. My name's Dave Flynn. I'm the CEO for Glitnor Group. Just thinking about yourself, actually, there. I've been in gaming since 2003. Glitnor are both an operator, and also we have a subsidiary called Swint, which is a games provider as well in the marketplace.
Thank you, David. Michael?
I'm Michael Daly. I'm the CEO of Catena Media, which is headquartered here in Malta. I actually live in Las Vegas, became the CEO in the midst of COVID. Yeah, I'm probably the most junior CEO on the panel, I think, but that's me.
Thank you, guys. So we have so many questions to go through too, so I'm going to jump straight into them. As you all know, in June this year, Malta got grey-listed on the FATF's grey list. But how much has this really affected the companies that you represent? So could you provide us with a 1 to 5 scale, name a number, and then with a short motivation on why that is? Maja, you want to start?
I would say that for us, the impact has been around 2. And the reason why I'm saying this is that we obviously hold B2B Maltese licenses. However, I would say that within our own industry, everyone still respects Malta as one of the main gaming hubs. The impact, I would say, is more from the general perspective. So I'm facing more questions from my bankers, from my auditors, and the overall public perception classifying Malta as an offshore hasn't obviously been positive.
Thank you very much. So number 2 from you, Jesper.
Yeah, I'll put it somewhere there as well, maybe 1.5 to 2, because it hasn't had a big impact yet, but I think the key thing is depending on how long it will be grey-listed or not, and if it will be for a long period of time, it will have a big impact. But right now, everything has just become a little bit more difficult when it comes to the banking side of things, and investors are asking questions and so forth. But it's still a little bit early days, so not a big impact yet.
Noted. David?
I'd say it is also for us more like a 2. However, if we hadn't prepared, it would be more like a 3. Simply because, since Moneyval, you're expecting the changes that were going to come in place in terms of additional due diligence from financial institutions, etc., further questions from investors, as you say. But we prepared well in advance for that, so we anticipated all of this. So we had an easier ride, if you will. But again, time will tell. If this continues for more than 12 months, then it's going to be very, very challenging, I think, for the industry in Malta.
Yeah, thank you. Michael?
I'd say it's probably a 2.5 to a 3 for us, in the sense that we're making a hard push into the US, and so the understanding of what that means, even what Malta is, to the investors there and the like, it's a risk that they just don't understand. I think it, though, definitely escalates to a 4 or 5 if it doesn't get resolved soon, because the banks and the auditors and everyone else will make it impossible to do business here, so that's a challenge.
Yeah, very interesting. I would like to do an exercise, a very quick one, so I would like to ask the audience the same questions. If you have any operations in Malta, how much has it affected your company? And the panelists can help me see how many hands come up. So if you would identify it as a level 1, could you please put up your hands now? Thank you. If you identify as a level 2, could you please put up your hands now? Thank you. As a level 3? Thank you. Level 4? And the level 5? So what do you say? Where did we see the most hands?
Seems like 2.
2, 3?
Yeah,
2-ish, yeah.
1.5. I would say.
Another one, if you have to guess how many months it would take from now until we're out of it, you can just reply with the amount of months. What would you say?
I don't even know.
Anybody care to
I'm
guess?
there with 9.
9 months from now?
Yeah,
It better have been.
maybe.
12.
Yeah,
I'm more on the 12 line, yeah, but sooner would be really good.
Have faith. Have
Yeah,
faith.
my guess would be a year as well, I think. Perfect. Some short questions in between. If you ever have a bad day, how would you revert it, Maya?
Bad days.
Do you have any?
Obviously, not all days are similar, and I guess all of us have our bad days as well. I try in this moment to focus on small wins and celebrate small achievements. And when there's been a mistake or something has gone really badly, then I try and take a step back and focus on the bigger picture to find solutions and really to overcome it.
Yeah, that makes sense. Same question to you, David. How do you revert a bad day?
Well, number one, I think I know I've had a bad day when everybody tells me I've had a bad day. I tend to wear my heart on my sleeve, actually, in the office. So I think for me, it's more about trying to just get a break, 5 minutes, go for a walk, refresh my mind, and make sure then that okay, this happened, let's put it back behind me, let's move on now and make more progress as we go forward. Bigger scale-wise, I do a lot of exercise, and that really helps set up my day. So I tend to enter the office with a lot of energy, and that tends to keep those bad days away. So.
David actually swam from Malta to Gozo the other day, so I mean, you can just do one of those.
Go on.
Fantastic. So Jesper, what do you expect from your employees in general?
Well, in general, I think it's incredibly important with the accountability and ownership. It goes hand in hand. Yeah. That's really what I expect from anyone in the company. We're all here to perform a specific task, and if you really own that task and take accountability for it, that's when I believe you will feel engaged with what you're doing, and that's what drives you to do a good job, really. So I would say that is my number one expectation.
How do you normally communicate so you stay away from the finger pointing and it's actually accountability afterwards, etc.? Is it hard to?
Yeah, no, I mean, accountability has very little to do with finger pointing, right? I mean, you don't see it, you just see when someone is engaged. And when you know, we all know what we're supposed to do, basically, right? And when people do that and take pride in what they do and so forth, there's no finger pointing. No. And also a culture doing that, it's that if you do your mistakes, you own your mistakes, and it's okay. I mean, finger pointing is kind of more on the opposite side of it, I would say.
Agreed. It's for high learnings. Michael, what do you expect from your employees?
I definitely expect passion. Passion is energy. It leads to forward momentum. And then similar there is transparency. We have to be open and honest, and it's not a matter of what level you're at or what you do. You have to just again, plays into accountability. You have to own what you do and own what happened, good or bad, and be able to communicate that. And then we all deal with it, and that's just how business should work.
Agreed. Entrepreneurial mindset with passion as well. This question has first of all, Maria written all over it, I think. When do you think the crypto gold rush for online operators will subside, if ever? And if it subsides, what would cause it to subside?
Very good question. It won't subside, and I'm very confident in it. I would say that it will actually normalize and evolve as the general adoption in the market broadens. It's still a fairly new technology, and I think everything takes time to settle in.
Yeah.
Todd actually, in his presentation, he gave some really good examples of groundbreaking technology that nowadays we wouldn't imagine our lives without it. So taxis and Uber, hotels and Airbnb. It's the same with blockchain and cryptocurrencies. Or, for example, we were afraid of the internet 30 years ago, cars 100 years ago, and today it's something we wouldn't imagine our lives without. So cryptocurrencies will certainly gain more traction and normalize.
It's here to stay.
Absolutely.
If we ask the same question to Jesper, and how is Betsson looking at cryptocurrencies?
I don't believe in it. No, I'm just kidding. I believe in it too, but in a different shape. For us, it hasn't boomed yet. We can't do it in the way we are structured, basically. But there is so much money in it now. I mean, if you look at it, if you would look at the whole crypto space as the same way you look at, you know, euros or USD or whatever, you see it's massive.
Yes.
So of course it's already here, it's happening, and it will keep normalizing. Then there will be some fallouts and some winners, and that goes for any new industry, I believe, though. So, but it's going to be part of everyday life for all of us going forward, I believe.
But agreeing that it's here to stay.
Yeah. I think so. It will shape itself in a different way, but in 10 years' time, I think, of course, it will be much more normalized, or whatever we should call it.
Yeah, I tend to agree. David, what need or wish from the operators have you been the most surprised with in the recent years, if anything?
Specifically through our B2B part of the business, I'd say a few surprises in terms of prices that perhaps they'd want to pay, requesting things like 75% discounts on game content, things like that for game positioning. You know, things like that are something that can really hurt the industry if providers actually agree to those kinds of terms. Because, you know, as we've heard already today, that, you know, it takes a lot of investment in order to be innovative in the marketplace. Our B2B business is certainly trying to be innovative with some of the new content that we've been bringing to market, and that costs money. You certainly can't continue to do that if some of the negotiation strategies of certain companies are to win through. And that, for me, is a surprise. I think that most operators agree that there's a certain level that needs to be kept at. I know we do. We don't push too hard, maybe a little bit. Yeah.
Would you ever pay an operator to have your games highest up in the carousel, for example, on a website, or?
We would promote together with an operator, absolutely, because we see that there's an advantage in doing that. Yeah. But it needs to be a collaboration between our partners, you know, and continuation of the relationship that we've built together with them. It certainly shouldn't be something that one sees as only a price. If so, you've got a bad product, and they don't see you as a good supplier. It needs to be built on the relationship, and that needs to be long-term.
Thank you. Michael, you come from an industry where we pay for positions and everything. Have you heard anything strange coming from the operators, any wishes or requests.
So I guess I might actually reverse your question. The thing they haven't asked, which I was expecting someone would ask by now, which is, an affiliate holds lots of information about the start of a customer journey and lots of information about the personalization of why they're coming in and why they're going on to set operators and what's happening to those that aren't going on in that journey and how many times do they come through. And nobody's asked us about partnering up about that information to further personalize their actual users' journey or retention, et cetera. So that's just surprising to me. So that's.
But are you trying to package that now and sell it as information, or?
You might think so.
Now you know how you can go to Catena Media and buy some information. Thank you. Jesper, what advice would you give somebody going into a leadership position for the first time?
Well, for the first time, you have to know that you don't know yet how to do this, you know, so be a bit humble about it. And I think in most companies, when you're in your first leadership position, no one expects miracle from you. I usually say I expect people to have more questions than answers. And where it goes wrong is many times if you too early think you have too many of those answers. So and that goes throughout the career and for anyone in any position, I would say, though. But it's important to think about that because sometimes expectations become so high and people put so high expectations on themselves and go, I'm supposed to know everything now, and that's not what the rest of the people think either, though. So relax a little bit.
Yeah. Do we educate our leaders within our iGaming industry, the new leaders? How do you do at Betsson? Do you have courses for up-and-coming leaders, or? Yeah,
we do. We do a lot of leadership trainings and so forth, and a lot of forums for that, trying to give support. We have a lot of first-time leaders in the company and people being promoted internally and so forth. So we focus a lot on that because it's also much better for us to keep people long in the company, to you climb up and so forth. And the only way you can do that in a good way is if you have a good support system around that. Yeah. So we focus a lot on it.
Thank you. Maja, you had an exciting journey within YOLO. You've been there for, was it 10 or 11 years?
It's actually going to be 12 now.
Wow, that's fantastic. And you started as a customer support agent.
I did. So basically, I've gone through the journey of being the first-time manager and building up my own team, and finally joining the C-suite in a number of roles. And it's been a true roller coaster journey, as I like to call it. Everything that you mentioned in your response obviously has been so important. I've always had a great support from my mentors and other leaders by my side. But what I would maybe add on top of what you suggested is you need to stay curious and have interest in the domain, and actually you need to make sure that you are being backed up from your fellow peers and managers around you.
But how do you stay updated? I mean, if you're interested in leadership, do you go courses? Do you read books, or how do you stay up to date, do you think?
So internally, we similarly have a number of different training programs. I've completed one myself as well. We call it MDP, Management Development Program. And this was by far one of the most useful trainings I've ever done. It combined a toolkit from these soft areas as well as a real business project. So we really had to get our hands dirty and build up a casino brand from scratch within 6 months. But there are so many ways nowadays you can join different trainings anyway, but what has probably been most useful for me is the networking part and sharing experience with others, both internally and externally within the industry.
Yeah. I think being a good leader, you have to update yourself all the time. I have a lot of discussions, even if I meet you on conferences, etc. I think we always have to rethink and re-educate ourselves, and we can't be the way we were 10 years ago or 20 years ago. So very good answers. Michael, what was your first ever job, and did you draw any learnings from that job?
My first ever, well, besides doing a little crewing on some sailboats for some spare cash from guys in a harbor, my first real job was in a restaurant. It was a mom and pop owned restaurant. I worked there from the time I was 14 to the time I was 19. And it was good because in America you can work 40 hours legally, but I could work there through the summer months from essentially up to 100 hours a week, as many hours as I could put in. So I was able to bring in a lot of money. Worked with a bunch of illegal immigrants who were also running in the restaurant. What I learned is I really needed to go to college because I didn't want to work in the restaurant industry the rest of my life, because it was it was a brutal work, and yeah, it was a great experience though, in terms of I became a manager at 14 and a half of a bunch of people who were a lot older than me and knew a lot more about the world, and so that taught me that you know, back to your question about leadership, there's a difference between leading and managing, and that making people autonomous and letting them do what they're good at is a really important skill, rather than trying to micromanage them or direct them. Most people are smart enough that they don't need that. So what they just need is a little strategic direction.
And also, I mean, if I see that somebody worked in a restaurant for many years, a busy restaurant, I know they can handle stress for sure. So it's, if you handle that, you handle anything. David, what did you do, the first paying job?
Several first paying jobs. I mean, if we're talking before the first real job, I probably had about 6 or 7 different jobs. Paid my way through university, made sure I exited university with no debt whatsoever, so I could go traveling and skiing. I love to do that. But the first real job, I was actually it's a bit of a mouthful actually, forecast for specific science system implementation project scientist. So what that means is I used to be a meteorologist. So I used to build statistical weather forecasts for the Met Office in the UK. So my background is physics and fluid dynamics, which is slightly different than what we're doing today.
You turned out okay anyway. I mean, fantastic.
Debatable.
Thank you. Maria, you and I met at the dinner yesterday, and we spoke briefly about this, but you didn't give away the answer. If you look at your time spent on a workday, how much is spent looking at future challenges and strategy, and how much is focused on current operations?
Like I told you last night as well, it's hard to determine it, and it all depends on a day. So if I'm faced with a live incident, then obviously I will jump on there and focus on the operations 100% for this moment. However, I do knowingly take quite a bit of time just to reflect and think, where are we going to go next?
Some sort of average over the year? How many percent?
It's again, there's you can't determine it, and I'm not sure how you guys are going to respond to this, but like all of the days are so different, and I think this is what being a CEO is all about. You need to be almost like a jack of all trades.
For sure. So she's looking at you, Jesper. How
no,
do you...
listen, it's based on the period, right? Because things are happening so quickly in our industry, and I think we were all affected by the Netherlands a few weeks ago, and it doesn't matter if you think about the future at that point, you just had to get into it, and it takes a lot of the operational side. I love the operational side, and it takes a lot of time, of course, but I think most companies, you work off some sort of plan 2-3 years ahead at least, so you know a little bit where you're going with that, and you refine those plans a few times per year when you take some extra time off in order to do that. But otherwise, I would say the decisions you make in the operations day to day, they are not affecting you the day after so much, unless it's a regulatory change, but it's probably 50-50. Everything we do today is for for tomorrow to some degree.
How do you shield your management team so they get some time to be creative, etc. as well? Do you have strategy days? Or
Yeah, we do that. We do that. So we take the time, ample time off in order to be able to do both.
Yeah, I think that's crucial as well. David, the iGaming business spends a lot of money on events, personal gift and perks to individuals, especially looking at providers and maybe other areas. Is there hard to draw the line somewhere?
I'd say it's become less so recently. The way we look at it is, or certainly the way I look at it, is more along the lines of if I think that this is actually going to be useful for me, and I would like to receive it, then okay, it's something good that we can actually brand and use for either our affiliates or our B2B customers, for example. But the important thing is, and this comes first actually, is that it's a sustainable product. You know, there's a lot in the marketplace, and this goes out to everybody. Please use sustainable products going forward in all of your merchandise, because there's a lot out there that really isn't, and it isn't reused in any way whatsoever. You know, after this particular conference, there'll be quite a few lanyards that'll probably be thrown away in the bin, and you know, there could be a lot of things that we could really reuse. So we always try and instill that the way that we go with whatever we create should be reusable in that way and sustainable. I've tried to keep our budget quite capped in that respect, simply because I'm from the north of England and I'm quite tight with money. And so I just think, you know, would I buy it for myself? If yes, okay, we can spend the budget. If not, then it's not worth it.
But as an operator, if you were gifted a laptop one day from a provider, would you accept it?
It would go straight back to the provider.
Yeah.
Yeah. I don't believe in those kinds of gifts. It's too much. And whether one says that there's nothing implied by it or not, one would still feel guilty because of human nature. So, you know, you need to cap it at a certain level. And that's common sense, I think.
We draw the line with the laptop. Yeah. Michael, what do you say as an affiliate?
Sorry, everybody.
I'm about on the same page that there are lots of things that aren't necessary there. So there's definitely a line drawn. Is it reasonable? And reasonable is not really that hard to define. You know, go to dinner with them and have a work discussion? Yes. Have some sort of gift involved? No. That sounds like a bribe, and that's the word we wouldn't want to use, but that's the word I will use. And then, yeah, events and things. Events have gotten often way out of control in the gaming industry. I came from the land-based, been in since 2003 as well, and you know, the show that happened 2 weeks ago, G2E, it's still amazing to me how much money is poured into that, and the return just isn't there in my view. So there are other ways to approach that. So I think we have to be smarter, especially in this new world, about how to do these things and not just continue to do what's been going on. And yeah.
I'm glad to hear. And the industry has obviously changed a lot the last 10 years. I mean, we all probably have horror stories, but we'll take them at the after drinks instead. So to really fit in as many questions as I can, let's do one each. Quick questions. David, what fashion trend do you regret? I love this question.
Why did you pick me for that one? I guess it's just got to be the flary jeans. You know, when I wore those many years ago, yeah, they just look ridiculous now when I think about it. And these days, I probably wear the tightest jeans in the office, which seems a little bit silly for someone my age, but hey, that's me. Something I picked up by living in Sweden for so many years. I think.
Okay, good.
Thank you. Jesper, what song do you always sing when you're alone?
Always sing.
Or often.
That's a stretch. I think the one song I always sing along with. I'm a Liverpool fan, right? So that's "You Never Walk Alone." When that goes for the matches, then I'm there. But I have to say, the last week I have been in my head the whole time. Elton John, you know, Cold, Cold Heart. it's just there. It's just there. But hopefully that disappears in a week or two as well.
I think we all have those. Thank you. Michael, what was your best subject in school?
strangely enough, I would say in college it was fluid dynamics.
Hey.
So, but in high school and before that was math. Calculus in particular was very appealing to me.
Thank you. Maria, do you have a secret talent that nobody knows about?
It's a secret talent because nobody knows about it.
You can share it. You don't want to say any secret? Nothing you want to reveal?
Not that up close.
Well, it's a secret.
I'm not going to push you. Anybody else have a secret talent they want to reveal?
I can juggle.
You can do what?
I can juggle.
Ah, nice. You can swim really far.
Only now.
David, then continuing with you. Have you ever experienced what they call imposter syndrome? In other words, self-doubt or feeling that you don't live up to the expectations of your role, despite it being, you being highly qualified?
Yeah, it happened around about 30 minutes ago, just round the corner before we came on stage. I think it's fair to say that it happens all the time. Especially, taking on my first managerial role as well. But yeah, I mean, it's human nature. I think everybody has concerns about how they come across, has concerns about whether we're doing the right thing or not. We're 200 people at Glitnor. If we go in the wrong direction, that's 200 families affected possibly, right? So, I mean, yeah, of course one thinks about things like that all the time. But then you've just got to compartmentalize it and put it in the back of your mind and then crack on because there's a job to do. So.
Yeah. Showing weakness out to the organization, is it a no-no if you're having a day when you're feeling...
No, as I say, I wear my heart on my sleeve. I had a very tough week last week, actually. Just a lot to do, not necessarily a bad week at all. A couple of knocks on the door. You okay, Dave? Everything all right? It's like, yeah, just a lot going on, guys. Don't worry. Okay, I'll turn that frown upside down. Sorry.
I like that. Maria, how about you?
I would really echo the same. Because I am a very emotional person myself as well, and I can't really hide my feelings when I've had a difficult day. I would say that this is so natural to question yourself, and in fact I think this is what takes us forward as well. You need to be your biggest critique because otherwise you won't get anywhere.
No. And for me, this is really the new style of CEO. CEOs being able to say that they're also scared, they're also nervous, and also vulnerable. I really like. Can we give them a round of applause just for that, I think? Thank you. This is an interesting one. Michael, if you had to rank the following in order of importance to you, how would that look? Salary, bonus, option, title.
Okay. I'd go with options first, because I think that's really, you grow, it grows with the company's development, and it has an unlimited upside, potentially. And then I'd probably go salary next. Bonus is a nice thing, but it's a fixed moment in time sort of thing.
Yeah.
And titles are a little antiquated in some ways in the world today, so I don't know that title is really that significant, and sometimes it can be actually distracting or separating when you want to have a full conversation and, but this guy is and this woman is or this title or that title, and I don't know that I should speak up or not. So those can be actually distracting to an organization.
Yeah. Thank you. Jesper, if you got the same question, how would you rank it? Salary, bonus, option, title?
I will also start with option. Everything else comes with that to some degree if you have that, right? Title is the least important, I think, but it's easy to say if you are depending if you are CEO, then you can say it's very easy. Who cares about the title, but the one who feels good about it, it's the bonus. I mean, if you hit your targets and you get the bonus and you celebrate with your team and so forth, I like that salary it's also good. But
isn't it also so that it changes over the years? I mean, when I started out, I probably put title much higher up than it is today, and salary all the way up. But after a while, you save some money, and then you want the shot of the big money, and I mean, it changes.
You started to stop caring about it when you became the CEO, I think.
And when you start out, I don't know that I even know what options were exactly. So
no, true.
Can I throw one in there? Sorry to be controversial, but I'd say before any of that, and I don't know if this was the right way the question is meant or not, but I'd just say what you're doing is actually more important than all of that.
Yeah, I completely agree.
You know?
So I think self-fulfillment was missing from this list.
Yeah, and also, I mean, the title gives you freedom to do something. So if you're a person that's driven, you want to change things, doesn't have to be the title, but if you have that kind of role, at least, where you can change and make an impact, I think. Michael, what's your biggest insecurity?
So it is probably, do I know enough in any conversation I'm having to be actually able to be, I guess it goes back to that fear of, should I be here in this conversation? Do I know enough to be relevant to this? And yeah, it's always, do I know enough about anything? And that's an insecurity. And so, I'm a voracious reader, and I follow and pay attention to lots of things, but there's just so much information out there, and it's, do I know enough, and am I smart enough about whatever topic we're talking about to come to a good decision with the team? And so,
how do you mitigate that? Do you spend a lot of time studying up on topics, or do you?
The global plane rides help because there's lots of time for reading all sorts of things. There are lots of technologies out there now. So, there's like apps like 12 Minutes where you can digest a lot of business books in 12-minute increments because they've boiled it down to just the executive summary, essentially. So it's absorption of information at a faster rate, I'm not that person. I've been trying it, but I had someone who worked for me who used to listen to podcasts at 2x or 3x speed because they could absorb it faster. I haven't quite got there on that one. It's more distracting than useful. But yeah, it's just trying to learn and continue doing that at all times.
Agreed. Thank you. David, what's the craziest, most impulsive decision you ever made as a CEO?
Whoa. I hope I haven't made it yet. Yeah, that's a tough one, eh? I don't think I've actually got an answer for that. Gosh, that's boring, isn't it? I think craziest thing. No, I really don't have an answer for that. I'm obviously very square and really into my physics. So, oh, sorry.
Good, no worries. I'll trust you on that one. Jesper, if you have those off days that we spoke about before, where you can't get anything done, what do? Do you ever go home even? Is it that bad?
If I can't get anything done, what do? Not a lot, apparently. But, well, I was going to say I have a drink, but that sounds wrong. But,
you can share.
I don't. The thing is, if you have a bad day, you feel you have a bad day, you try to find yourself some sort of break of some sort. I think, but it's really about keeping going.
Yeah.
That's what I try to do. Keep going. Don't give up. Just keep going.
Exactly. Sometimes even take a break, go out for a walk, 30 minutes, come back.
No, I don't really do that.
Okay.
Maybe I should, but I just keep going.
Okay.
I see you on Tash Beach Promenade, okay, a few times a week. We'll meet up.
Yeah, that's good. Let's do that.
Jesper the Machine, I love it.
No.
Maja, what's your biggest professional failure?
So my biggest professional failure, it's probably around change management, because I'm not the patient person. I want results and I want them now. And when we were implementing some really significant changes throughout our organization, I think the failure was that I didn't have enough patience to take the time and to manage the change properly, communicate it 10 or 15 or 100 times before everyone is aligned.
Thank you. We're running out of time, but we're going to finish off with one quick question each, starting on the other end. Michael, what's the weirdest thing you ever eaten? And this question actually came in.
Oh, so that would either be stir-fried cockroaches
No.
or cat. So somewhere between those two. And I don't recommend either.
Thank you. David, what's the weirdest fact you know?
Oh, good grief. It's probably not that weird, but it's just the distance between here and the moon or here and the sun or something stupid like that. And I don't know the answer.
Jesper, what's the worst thing about being a CEO?
The worst thing about being, well, there is nowhere to hide. It's both the worst and to some degree the best thing. But you know that if something comes to you, you have to act on it. Otherwise it will not be acted upon in that sense. And I think sometimes that can, of course, both be a positive thing, but also a negative thing.
Agreed. And Maja, the last question of the day. What's the best thing about being a CEO?
Actually, very similarly to you, I would say that the best and at the same time the worst part of being the CEO is the fact that the buck stops with you. There are so many people and their families that are relying on you, and you really need to make the right decision.
Thank you.
Thank you.
It's been a fantastic panel, I must say, and I really love that they share this openly. Please give them a warm round of applause. Thank you.
Thank you.
Wonderful, thank you. And thank you so much to Lasse Mersog, our brilliant moderator there. That's a stage full of CEO goodness, next generation, next level CEOs. Fantastic. Okay, before we go on with our next session, we are getting towards those evening drinks on the rooftop, but we have some amazing speakers, an amazing speaker lined up for you first. But before we welcome him on stage, I want you to watch this quick video and set your diaries for 2022. This is unmissable. Please roll VT. Fantastic. We've been hearing today all day about how important the US is as a market for the iGaming sector. There's so much opportunity, there's so much regulatory complexity, and iGaming Next New York 2022 is going to be your gateway to sublime success. I invite you all to take a bite out of the big apple with iGaming Next. Okay, so folks, we have reached our grand finale, and as such, I would like you to give him a grand welcome onto the stage. Please rouse your lungs, give him a very loud, warm welcome. He's going to speak about mid-game action, the live experience to next level entertainment. We're very honored to have him. He's a great friend of iGaming Next. Please give a huge warm welcome to the Managing Director of Live Casino at the mighty Playtech. Please welcome Ido Heighton. Dude.
Hello everyone. Nice to be here at iGaming Next. Finally. My first time speaking in Malta, and I'm super excited to be here. Probably you will see it along the speech when the excitement will be a bit overwhelming. But I appreciate everyone that stayed to the last speech of the day. You are literally going the extra mile, and I appreciate the attention that you are giving me. Mid-game action is what I'm here to talk to you about. But what is mid-game action? Mid-game action is sort of the phase that I believe that we are at, the live, not live casino, not live dealers, not live gaming, the live industry. And throughout the next 15 minutes or so, I will try to explain what do I think will be the next phase, what will be the right actions from game creators, providers in general, and operators to take advantage of what live has to offer for you. But before I dive into that, while we are here finally enjoying some conventions and meeting each other, you know, live is first and foremost about the people that operate it. Without them, we are pretty big furniture companies. And because of that, I want first of all to recognize all the operation teams around the world, whether they work at Playtech, at Evolution, or at any other the providers that all of you know. Let's give them a big round of applause for the dealers that are working with masks, that are taking tests in order to come to work. They haven't been working from home in the last 2 years. So I would appreciate, and I know a lot of them are watching right now, so I would appreciate to show them that the industry appreciates them and that the industry recognizes the effort that they are giving. So please join me to a round of applause to our dealers, shufflers, pit bosses, and everyone that operates live casino around the world. Thank you again. And, you know, these guys have been working in live for a few years now. In the beginning, they were operating sort of a shady-looking live casino product, right? A bit weird accents. And then it's moved on. We started doing variants of the core games. We started doing dedicated studios. We started doing game shows. And here we are now. What's next? More games? Bigger dedicated studios? What should we do next to support not only the live tab that we have on the site? What we should do next to support our own strategies. And again, whether you are a game creator, a provider of any sort, or an operator. And let me start with an example. Earlier during the day, I heard a very interesting speech about how slots will adopt a live host. So will it be weird in a few years to play slots on your own at home? Without a chat? Without a live host? Maybe even earlier than a few years. Live is giving us the community experience, and we all already know that, right? We all here have been witnessing live growing, booming. But what is the essence of it? Why is it so successful? The games look good, the technology, the video runs smooth. All of that is the basics. What's next? I believe that live is the best positioned vertical to allow the next level entertainment strategy. Because just like our players are coming to our games to have fun, yeah, to gamble, but I look at it differently. They pay us for value. They pay us to have fun, maybe to win back, to spend time. And like several colleagues of mine from the industry of live said, you know, we are competing with time spent providers, like other video platforms and so on. But what are we able to give them back? We're able to give them back, as I said, fun, entertainment, like you guys here now. Why you guys waited and are not going to get the free beer that, you know, waiting for you on the roof? Because maybe this will give you better value, right? So this value is all around us. This is now here, a live event. I'm being streamed all over the world now. through a certain platform, and people at home are getting value. They spend time in front of the screen listening. You guys are sitting here listening. Sort of the land-based experience almost. And I think that, like here now, I am a live presenter. And exactly like me, there are presenters now in Riga or in other places around the world, not touching even the equipment. They are just there to entertain, to give you value, to speak to you, to show you stuff, to explain. And we all want to have a good time. And those people that are operating, that we just applauded to, have been maturing. As I said, core games, then variants, then game shows. Suddenly we have people next to these wheels, sort of, straight out of acting school, right? And these people are ready for the next step. And while these people, the operational teams, the game creators, are ready, I believe that the players are ready as well. Eventually, the players are the ones to dictate if we succeed or not, to dictate if the product is good or not. And they have been having fun at the game shows, right? That's not a secret. I'm not telling anything new. But what's next? How should we treat it now? How should we continue giving value to those players, not only on the live casino tab, but using the live product? A few examples, maybe. First of all, if I'm a provider, is it all going live? Do we anticipate getting live poker soon? Live slots exist already? Live bingo? What next? The customer support? That was in the past, right? Is it coming back? Earlier we heard that there is some kind of a trend like that, right? Things coming back. And that human touch, that human interaction, that not alone anymore, and again, touching COVID, I think, affected a lot by this pandemic that changed the world. People are eager to not be alone. And that's why live has been booming in the last few years, and it's becoming more and more popular. And we cannot ignore it. First of all, we have a responsibility. Second of all, we are all businesses that want to succeed, and we see this flow of people. What do we do with them? Now, not all of them want to play. Some of them just want to have a good time, right? To watch. We used to kick them out. Now we embrace them. But by embracing them, we sort of, again, having an opportunity also to engage them. What do we do to engage? What is our mid-game strategy to get a watcher to play in the middle of the game while he's watching? In live, we do simple stuff. We can put another option to jump into the game in the middle, a side bet maybe, or any other element. But what do we do, let's say, in sports? You just place the bet. What next? Watch the game? If you don't have the streaming rights, you will go watch it on TV or on some competitor. What are you giving him to keep him on your website, besides going to the live tab and spending his money on casino games? Can live basically give you a service for sports? We all know ESPN Sports Center. Is that the next phase of sport bookmakers? I think it is. I think that live is the tool that all of us will be using more and more and more in other verticals. And while the live casino games will remain in their respectful tab, the rest might have other live variants accompanying them. And as I said, this one is a great example. This show is a great example of a live event. And another live event that I personally like very much, NBA games, basketball games. What do they do to keep the players engaged? They have this kiss camera, right? Shooting two people in the crowd, live. They have music. They have a lot of things that they do. During halftime, there is no action, right? Hot dog stand, toilets, maybe buying a beer. Still, they do some action. What do? They give you the opportunity to shoot from half court, right? I put a basket over there. Let's say one of you will pick up the ball now and will try to shoot it. Will it be an exciting moment here? Whether he misses, whether not, it's embarrassing, right? Who wants to do that? But it will create an event of interest. It will create engagement of all of you. All of you will be watching that shot. All of you will be putting down the phones and concentrated because we gave you the value in that moment where you had nothing. Anybody wants to try? We're all afraid. But afraid of what? You want to try? Go ahead. The prize is a beer on the free beers upstairs. Go ahead, let's see. Wait, before you go, what's your name? Where from? Go ahead. It's nerve-wracking, I know. I know. That was pretty impressive. And all of you clapped, I didn't even ask. We all got engaged by this simple children basketball on the side. Thank you for that, by the way. And I think that just like this simple element made a moment here, made us all unite, made us look. That was a great shot, by the way. I don't know if you're in the Malta basketball team. A talent is born. I really believe that live has the ability to give you those moments. But let's dive one level below. Let's say operators. You're saying to yourself, we understood about the sports thing, sports center. That's all good. But what do you want from me? What else can I do? Well, Sponsor Center is one example. What about a host on your slot lobby? What about live customer support? What about the other verticals? Live eventually is the best tool to represent your brand. And you are all here talking about differentiation. We are all here talking about differentiation. Operator A, operator B, we are different. Look at us. Let's bring players. And we are using live already to differentiate, right? The dedicated studios. But that's the middle now. Obviously, we have a lot of operators coming to us. Hey, we want a dedicated game show. That will differentiate us. No, it won't. No, it won't. A game has a lifespan. A game can be a flop. I see providers, new providers coming up, going, you know what? We'll skip the core games. We'll go directly to the game show. We'll do a game show. We'll put everything we got on it, and we'll take the live market. We'll take a bite out of it. Maybe. But it's one game. It's two games. Where is the strategy? Where is that on-demand, allowing differentiation to these operators that we spoke about, from the providers, and all the way to the players that are there to get it? The great game shows are live already. Yes, there will be more, a different bonus game, that bonus game. But players will start looking for the next experience, for the entertainment. I'm coming back from the US just 2 days ago. And while I visited a lot in the past, I never came there, in the form of actually establishing a business. And I started noticing things about the culture. And obviously, they are focused about entertainment wherever they go. In planes, in cars, in taxis. You sit in the back of a taxi, you have a screen. Everywhere. They don't want a dull moment. And those players are coming. Whoever has a US strategy or doesn't have, he will have. Whoever doesn't have a US strategy will have, of course. Whether you have it or not, those players are coming. And while now we are actually the mature side of things, we are the advanced part of the industry, we are going to the US to sort of establish the online gaming there, sort of, yeah? The demand of the players and the taste of the players and what's around us will bring a change here as well. And that change, I believe, again, from spending a lot of time now over there, is going to be the focus on entertainment. Fun. Those elements must be represented not only in the games, but in everything that we offer on our platform, and our sites, on our games, and on our services. I believe that we are seeing this trend already for a couple of years, yeah? But this will get very much emphasized going forward. The services of live is something that, you know, we're giving for quite some time, right? So we have those dealers, shufflers, dedicated teams, people that are working for a specific brand. They know the brand. But every time that I have a new dedicated area, I feel that I really need to encourage the operators, come work with the dealers. Work with those people that represent your brand. They are the face of the company. Not my company, the operator company. Take advantage of that. They are eager. And I'm calling all of you to pick up that opportunity and work with your live providers, regardless if it's me, regardless if it's my competitors. That is the opportunity that you, the operators, have to encourage us to develop our services, to develop that on-demand live. And that, I think, is the next step of the action. I think that we will see much more engagement of the brands in live. I think that we will see much more of the representation, this differentiation between brands. And God bless, you know, I'm happy to say that some operators are already thinking about that. But I think that we, the providers, have that obligation to put it forward. Eventually, live, we are always saying, is like a TV, right? We have a lot of channels, different languages, different themes. But do we think like that on the actual TV channel, let's say, side, which is the operator? Do we enable and equip our clients with the right tools to be that center of entertainment? And I think this is coming in the next 5 years, big time. I think that we are seeing already now the players are looking for it. And definitely, to my taste, that's the fun thing to do. It's going to allow us to develop the business big time and allow the players to extend the time that they spend on our products. I thought a lot about, you know, the mid-game phase. And is there really a middle now? Is it really only the middle, or are we at the end? Are we only in the beginning? And while I do think that we went a long way, I'm a true believer in that mid-game action as a strategy. For you, for us, the providers, you, the operators, of course, I'm sorry if there are providers in the audience, to embrace live as part of the strategy. Not to think of that as another tab. To go away from the conceptions that we have today about what life can produce to us, and to go into that next level entertainment, into that next phase of allowing our players to have fun. And by the way, also our employees, game creators, and eventually, if all of these having fun, the operator is having fun as well, as you can imagine. Signaling me that my time is almost up. I want to thank you all for the attention here. I really appreciate the opportunity to come and speak here exactly in the middle, funnily enough, exactly in the middle of this show. And my topic is mid-show and mid-game action, so I appreciate the time. I appreciate the attention. I appreciate that talented shot over there. And enjoy the rest of the show. Thank you very much for having me, everyone.
Awesome, awesome. Okay, not so fast, not so fast. We have some questions for you, sir.
We're not going to let you off this stage, you know. Before we ask you a question about the recent news that Playtech has announced, and Aristocrat, of course. Aristocrat acquiring Playtech. Edo, spill the beans here in front of the audience. What's happening?
I will, first of all, I'm super excited to be asked this question. You know, it's not every day that we are at this stage, especially in a company like Playtech, you know, 20 years in the business. It's a big moment. I can only say that I think everyone here and everyone at home or in the office understands it's a huge opportunity for both sides, for both companies. Where we will take it, time will tell. I can only say that I really, really look forward to this and to work with the Aristocrat team and see where it takes us. You know, they're coming from land-based. We recently just had a big studio launch in one of the biggest land-based in Holland. So I think there is a lot of interesting things that could happen and will happen, and time will tell. But I'm very excited, to be honest, very, very excited. And I hope that I didn't say anything wrong. They will tell me later, probably.
If there's ever a time to put someone on the spot, it's right now.
Yeah. Thank you for that. Yeah. Thank you.
Brilliant. Well, thank you so much, Edo, for your fantastic presentation as well. Great to hear. And good luck with the acquisition of between Playtech and Aristocrat here.
Thank you. And again, thank you, both of you, for having me. And thank you all for again, staying, going the extra mile. Enjoy the beers after the show. Thanks a lot. Rock and roll.
Thank you. Applause for Edo.
Thank you. Edo Heighton, fantastic, from Playtech. Wonderful, and congratulations on the news. Wow. Oh, is that the sound of beer o'clock? Is it wine o'clock somewhere? Oh my goodness.
Oh my God.
So, quickly, what's been your highlights, Pierre? This has been an amazing event.
It's been fantastic here today. I mean, it's been everything from the spontaneous demo here that happened.
Oh, that was awesome.
And,
yeah,
lots of interesting presentations today. Todd, obviously, with his idea factory. And
Todd Talks.
And really interesting discussion on diversity and inclusion by Sandra of Quickspin.
Oh, yeah.
A lot. And some fiery panels as well in the beginning here.
Absolutely, absolutely. Well, I made a few notes, as I sometimes do, you know, unaccustomed as I am to taking notes. Today, I learned that iGaming is all about people, product, profit, place, and purpose, with diversity and ESG. Also prizes, power players, and parties. And at that point, I ran out of P's. But I also learned that I should eliminate the word no, but from my diary, which is going to cause me some problems when I do my favorite Sir Mix-a-Lot karaoke song, and also to regret nothing aside from fashion choices. But we have another phenomenal day lined up tomorrow, right? We're going to kick off at 10 a.m. with iSoftBet and Formula One. Exactly. Doors are open at 9. You're very welcome to come and join us for a coffee in the morning. But now, this evening, we're going to have iGaming Idol at 7, right, downstairs. It's going to be very glamorous and fantastic. It is sold out, apologies, so please join us if you have a ticket. But, right, is there anything else to mention before we direct people upstairs?
I mean, I've been sitting in the audience most of the day today, and for the 15th or 16th time, of course, we're going to meet each other on the after drinks upstairs now in the terrace. I hope to see you there now. After
oh, hells to the absolutely. I think today it's going to be, it's sponsored by Pragmatic, is that right?
Yes, sponsored by Pragmatic.
Thank you, Pragmatic. And they are sponsoring the drinks until 10 p.m. Oh my goodness. Don't drink too much. Wink, wink. But listen, have a great time. And I just wanted to say thank you so much to Pierre and all of the team at iGaming Next. Can we have a round of applause, please?
Right, and for
Phenomenal
you as well,
job.
Tim. Thank you for hosting today.
I'm
It's been a
very happy
fantastic
to be
day.
here.
Thank you,
so
everyone.
folks, enjoy, share the love using the hashtag NEXTValletta21. We'll see you upstairs. We'll see you at iGaming Idle. We'll see the photographs tomorrow morning, and we'll see you here for coffees. And don't get too hungover, but have fun, fun, fun. We'll see you upstairs. Thank you.
Thank you, everyone.
Awesome, man.